What's up, guys? Good morning. How you guys doing? We got video back. What a rough couple days it's been for me, right? It's all good. You gotta just adapt, overcome, do the best you can do. If you're struggling right now, just know there's light at the end of the tunnel. You just gotta keep pushing. You just gotta keep pushing. I got a little bit of sleep last night, right? I think I went to bed at like 12:30. Was able to get up at 5, so I got about I got about 5 hours of sleep. Plenty, right? Plenty. Better than two, right? 2.5. So I figure I will start doing that. So the little girl doesn't keep me up. Let me get some stuff up and running, and we're going to cover the charts. We're going to see where everything's at. See what we're going to do. It's obviously going to depend on Powell. If you're new here, hit the like button. Subscribe if you haven't already done so. We appreciate you guys being here. If you guys have any questions, if you guys have tickers, plays, what are you guys watching this morning? There was some news on Zillow. We'll go through all that. We're going to run through all that fun stuff and see what it is that we have. I'm sure there is still something that I am forgetting. I'm sure there is something. So if you don't know, Liz from CNBC, Liz Young, she wrote a really good article on just a couple different things, and I liked the theme that she went with, the beach surfing theme. Liz Young. So do you guys remember? And she points this out, which was really funny that everybody was talking about. And she didn't really. I don't think she mentioned it too much here, but everybody was talking about. Oh, we see opportunity in Europe, we see opportunity here, and yet with this chart right here, here's the U.S. It's been leading, right? So everyone leaves, right? Does what they shouldn't do and says they want to go to places like Europe, the Eurozone. Look at the turquoise blue. You'd have been out of luck, So, and it's funny because she's right. I remember everyone talking about that. Like, oh, yeah, we're going to go look at opportunities here, opportunities there. Well, it's hard to say who. And you don't know if a lot of them mean privately held. There could be a lot that goes on that isn't institutional or publicly traded companies. Sorry, this shirt's like twisted up on me. So, yeah. So there's that. We're going to start with running through some charts. We'll run through the news. We'll see what type of news, if any at all, that we have meaningful. We will also cover some earnings from this morning. And if you guys have anything, you guys can throw it in the chat. I see Alibaba here. Alibaba launches AI model that can understand images and have more complex conversations. Oh, okay. All right, that's cool. What's that do for China investment? And I've said this for a while now. I think China's issue with everything that's going on is they don't have investments like they used to have there anymore. So there's no safety net to run to, I feel like. Right? There's no area that where they can just go to grab cash. Like the cash is tightening up because investments in China, due to change in laws overnight. I mean, would you feel comfortable putting someone else's money, or even your money, and a decent amount of money at that, and I'm talking a lot of money, right? And putting it over there and not knowing what the hell is going to happen with it? Would you feel comfortable with that? You they don't let U.S. audit for the most part. I guess they don't let U.S. There's issues with auditing, right? Let's just bring up Luckin Coffee, right? Luckin Coffee was one that investors and people got hurt on. So there's just risk, and more importantly, you don't know who's going to go missing. You don't know what laws are going to change. You don't know if they're going to try to start a war and take over Taiwan, right? Like it's the risk is greater than the reward, and I think that's some of their issues that they have. So let me do that. I got the charts up. Let me get situated real quick. Give me 2 minutes, and then we will start going over the charts and earnings and stuff like that. All right, sorry, team. I had to go and I just went. Are you kidding me? Are we gonna have this today? Look, I knew it couldn't go right. I knew it could not go right. Look, already, this piece of shit. Oh my god. So I gotta go. I'm just gonna go ahead and close this camera off because I'm not doing this today. There is no reason for this. There's seriously no reason for this. I'm gonna call him up and see if I can get another one or something. There's no reason why I should, have to continuously deal with this every other day. It didn't do it for the longest time. Alright, guys. So, we ain't even worried about this. It looks like it's trying to turn itself up just a little bit, but I doubt it. That's just going to be people get into Baba, and then it just end up breaking itself down and not being able to break through this level. I feel like we come up and we hold 89.75 and maybe try to make a run, and then it just pulls itself back. So I would be careful. I don't know if it's time yet to get into Baba. I don't think so. I mean, that's a chart. You can make some money and trade it. Don't get me wrong, but I wouldn't be a buyer just yet. Maybe I'm wrong, right? Maybe I'm wrong. I obviously haven't looked over the chart or anything just yet. And let me move this. Wow, how small do I have to make it? All right, there we go. And just so we are all clear, let me go to settings. Let's devices, cameras, disable. Yes. Disable. Cameras. No, I didn't want to do that. Cameras. What? Oh my gosh. Well, I probably just did something real stupid right there. Oh, I should have probably did that. That's probably what I did before. Kidding me. Alright, I might need some tech help here. This has been my week, so I'm not even going to be mad. I'm not even going to be mad. Are you kidding me? You gotta be kidding me. Wow. Are you fucking kidding me? You gotta be kidding me. Alright, well, if there's anybody on here that can help me undisable this camera, that would be great. Because I'm an idiot, and that's... Front one, see if that'll help. You gotta be fucking kidding me. Now I gotta go on my phone. do apologize. It is always something, isn't it? Come on, man. Oh my God. We might not have a camera again today, guys, so I do apologize. Well, you got my face right there. Actually, it looks like you do have a little bit of a picture, so I guess we can just continue on. Um, if anybody knows how to undisable, because I'm a jackass and I just disabled the fucking camera, I'm getting so sick of this just little stupid shit every single day. I should have never moved the stream. I should have never came over here, but it is what it is. I did it, and get help. Undisable. Oh my god, this is just gonna make me fucking sick. I swear to God. And I'm sorry to cuss, but I'm getting real fucking sick of this shit, man. Every fucking day, it's something stupid with this shit. Like, they're starting to make stuff too. I have an AMD Ryzen 7. I mean, it was my fault. I can't say it, But for it to continuously go out, why? It should not go out. It's wired, so there's no reason for it to go away. It's not like it's Bluetooth and it's having trouble with the signal. You know, something that them dumbasses shouldn't have did in that submarine. It's had everything wired instead of wireless in case something went wrong. But no, let's use a PlayStation controller. So, let me see. Alright, so Windows 11, select start. I think I might have it. Hold on. I do apologize. I do apologize for cursing. I do apologize for all that. I'm just like, had it like up to there. I really have. And it's like not, like I don't get paid for this. I don't get nothing for this, guys. I don't get nothing for it. And I'm not asking for anything for it. Type manage cameras into search bar. Manage cameras. The search bar in the start menu, and then select manage cameras from the results. Under disable camera, select the camera you want to enable. Okay. Wait. Nah, hold up. Why? This ain't what I want. I'll do it again. Under select start. What? Select start. I don't know what that means. And that's all it's giving me. Oh, hold on. Escape. Let me back out of here. Alright, so I got that. Manage. Manage cameras. Okay. In the search bar on the start menu. Manage cameras under connected cameras, you'll see a list of cameras connected to your device. Connected cameras. And I've been searching for it, and it will not let me. I'm just kind of wondering if it's because it's in OBS. Oh my god, this is so unfucking believable. Well, guess what, guys? I'm not even fucking with it anymore, so this is already my morning. This is Alright, it is what it is. Let's just go over the stuff. I've already lost everybody. It's already been a fucking failure. Just like every fucking thing else. So, this is the type of day it's going to be. Let's go over the S&Ps. I tell you what, man. This is so crazy. It's like, am I crazy that like this type of stuff just it's just one thing after another? Like, am I wrong to say that? Right? For anybody that's been here, right? Can't sleep, can't do one of the basic fucking things that people do. And then with this camera, and I mean, it's my fault. I shouldn't have disabled it, but I didn't think it would be that difficult to go ahead and enable it. Like, really? You know what I mean? Like, why would it be so crazy hard to be able to whatchamacallit? I just want to see if I can. Oh no. Oh no. That's so crazy. That's so fucking crazy. And it's right there. Are you kidding me? Oh my god. Oh my god. Why? Why? Why was that so difficult and it couldn't just take me right to it? Nope. Couldn't be here. Couldn't be here. Are you kidding me? Are you kidding me? What the... See, that's the thing. I don't stop until I get something, right? Listen. My truck, years ago, right? I know. I need a shave. So, years ago, right? Starter on my truck went. I said, oh, hell no. The only time it got me once was my fuel pump. But anyway. So what happened was there was it was hanging, like the starter, I guess maybe have gotten messed up through like multiple different reasons. And let's see if we can get this back up and running. There we go. Oh, there it goes. Okay, good. We're back. Hello. Hi. So, yeah. I did not. I was getting in that truck and driving. So I got it to the point where I just started it with the screwdriver. And the thing is I wasn't stopping until I got it, until I was driving. So we're good. We're back to normal for just a little bit. So we've been putting in this little bear flag up to the 50 day, right? So this little red box is your 50 day. I'm looking to see if we get another bounce. I'd like to see if we could test this level up here at 439.06. More so even because right now, so look, right now in the S&Ps, I want to see if we start to try and hold that would be Thursday, Wednesday, Tuesday's close, maybe find support there, and then we climb to possibly last Friday's close or last Thursday's to right here, right there, and which also is roughly, oh no, so that's where we closed right there. Okay, I'm sorry. Let me do this. Let's do this. How about this? And look, the camera's already out. You gotta be kidding me. You gotta be kidding me. Already? This piece of shit. Wow. So what I did the other day was I turned it off and then turned it back on. Like I literally turned it off and then back on. I restarted it, and that's what I was trying to do. Let's see here. So let's see if we can get back up to. I think we're going to run up and test 439, right? I think 439 is a good area, and we see what we do. We see what happens when we get there. See what happens when we get there to 439. 439. All right, so what we're going to want to do, though, at least what I'm going to do, is see what the Dow is doing. Because I feel like the Dow is about to bounce. And I'm really wondering if we're getting ready to have buying completely stop. And that worries me. Right? I think that we've just pulled back from these highs. And the market doesn't necessarily want to make a new high or go to the highs in any of the sectors. Right? So I'm worried that, like, we could start to get, you know, not buying happen, right? People not buying. And that's really worrisome. It really is. Sorry, I'm just trying to get my phone working. So, what are you guys watching today? Let me just log in real quick. I'm going to go look at small caps, mid caps, large caps. All that fun stuff. We'll cover the news. And then we'll go to here. Go to pre-market movers. So if you guys don't follow me, and you could follow me at Ivy League Trades Twitter.com. Ivy League Trading Twitter.com. All right. Let's see here. So all right. I mean, there's no real reason to look. I mean, you can look at futures if you want. It'll paint the picture for you. But for me, like, the S&Ps on here actually will show, like, a majority of that time. I just want to see if there is. So, let's see here. So, YS is a small cap. Not sure if there's news. So this is the research that's got to be done. Honestly, you got to wake up pretty early for this stuff because there's a lot. If you want to go through large cap, mid caps, and stuff, I want to talk to you guys about Tesla also, because Tesla did have some clear divergence. August 25th. All right, and then Powell comes on at 10, obviously. We know that. So that's a really nice support there. I wonder if there was any news to this thing. YS Biopharma shares nearly 57% a day after the company disclosed stock purchases by its chairman and chief executive officer. So to me, it takes a little bit more than just, stock buybacks, for something to really be there. And a lot of people, like, and I meant to touch on that yesterday, was a lot of people think that, like, oh, insider buying, like, oh, the owner's putting his own money at work. Okay, that's fine. But in order to move this thing and things to really happen, you still need, like, institutional ownership to step behind. Right? Like, does that person have enough to buy, like, 30% of the company? So YS is on the chart. We have YS and then BETR. We'll see what these setups bring. Better. It's actually falling down right now. CMA. Because what could happen? CMRA. What could happen? Yeah, no. I don't like anything but this YS. Domo. I haven't seen that thing in a while. I ended up buying Domo. That's so funny. I bought Domo when Kramer brought it up. That's so funny. I don't even know what they do. Oh, they reported earnings. That's so crazy. You guys wouldn't believe the amount of companies there are out there. All right, guys, let's get into it. Let's do it. ES. Let's go to the daily chart. We'll actually go to the weekly chart just to see if anything has changed, because it's important that you do so. Weekly 20-day moving average coming into play here. I feel like we have, so this is my personal opinion. I feel like we got some room to come down on the S&Ps, right? I feel like we're having a date with this 100-day moving average because, you know, the Dow is already there. The Dow's already made its way there. And I want to look for a bounce back to 440. And I know the camera went out. I don't know why it's doing it. I have no idea why it's disconnecting like it is. I don't get it. I really don't get it. So 440 on, this is futures now, right? 440 on the money. 440 on the money is what I'd be looking for on the bounce back on the SPY. All right, so we said 440 is what we want to look for on the bounce back. What we also need to do is, let me go back to the daily. You guys need to understand the amount of selling pressure that's here. All right, just so you guys know, the amount of selling pressure is real. So the greatest opportunity for you is to be a seller on the bounces until you, well, you know what? We did have some, so here's how I would picture this. Now, it's a little different on futures than it would be in the S&Ps in equity markets. We'll see what happens. If we end up breaking this 432 level, 437 level after we catch a bounce, all right, we catch a bounce back to this, I don't know, call it 440 to like, it's, you might get to 443, right? You might get to 443. I still got to be short bounces for now, right? Until something changes to bring this type of volume in, we got to be shorting bounces. Yesterday, I couldn't understand why people were so long. But the other thing we need to look at is too, just because we're a bit oversold doesn't mean it can't come down either, right? So let's go to the 15-minute chart. And so 440 is where we're going to get a bounce back to get resistance. We shouldn't have anything until 10 o'clock when Powell comes up with the Jackson Hole speech. If you want to go back to the last Jackson Hole, you can go back to the last Jackson Hole. It wasn't pretty. I don't think we're going to get that type of Powell today. I don't. People think he's going to be really hawkish. This would be actually a really good area here on the S&Ps. Futures 440, 444.20. 44.20. So what I'm going to do is, and the reason you want to go over these is because you have a clear area right here of resistance. We broke it yesterday. You made it resistance yesterday. We're just going to step, at least for me, right? I step it up. I'm going to step my levels up. We clear a level right here. Bang. This is what I'm going to look for right there. Right? We get to that level, right? It takes a minute. It rejects it. It rejects it. You start getting volume to come in on the sell side right there. You already know, right? You already know the bounce back rejection has taken place. I'm going to be looking for a longer dated 100-day moving average. You could be scalping areas like that right now. You have some decent volume this morning, right? This is a 15-minute chart. I mean, it's not anything crazy, but comparable. There's more buying than there is selling, right? And stocks can still go up with more selling pressure than, weighted to the sell side than the upside, and same for the down, right? You could see some nice buying coming in, but it still go down. I mean, it's something you rarely see, but, for now, buyers are in control. Right now, buyers are in control. So let's go to, see, if I go to the S&Ps, you guys will really see it. So 440 was the area that we said, which is where we're at now, and we'll just step it up. We'll keep bringing it up, right? Level by level. 441. Right? 440, no, not 441. There's more price action up here. Let me do this. And we're getting a bit oversold, so you may try to break it, pull it back, and put in a lower high. All right? You might find support right here at 439.5. All right? 439.4 area. See if we pull it back and put in a lower high. Right? Put in a lower high. But ultimately, I would like to see us get up to this level here. Right? There's a lot going on up here. I mean, it's not very clear. All right, let me go to the S&Ps, because like for me, futures doesn't really do anything unless you guys trade futures. And if you guys could comment down below what it is that you're looking at, what are your plays for the day. And we have clear divergence in Tesla that I want to go over. Clear divergence that I've noticed in the in Amazon compared to Google. So you guys want to have a look at them. And again, the Dow is leading to the downside. So, that may change. So we may see a bit of divergence and a bit of rotation coming up here very soon, if not starting today into next week. All right, I think, see, the Qs look a lot different, right? The Qs look a lot different. They're not bouncing back as strong. The volume's starting to die on that bounce back, but 150, right? You still don't have any type of real structure until you get up to that 150 area. Really, yeah, 150.50. 150.50, right? 150.50. And you know what? You've also, I was going to say, even if we pull it back again, back down, this would be the range I would play right here, and I'm going to make them big. All right. Right there. Right there. That would be the range I'm looking for until Powell. And you'll look to, and I want to look to see if we break out of that range. Right? I want to see if we break out of that range in the NASDAQ 100. So it's clear. It's clear as day. It honestly is. You do have a bit of resistance here. You can pick the little levels apart if you'd like to. It's completely up to you. But as far as a clear range, that would be the areas I'm looking for. Now, you could actually probably, yes, I would bring it up a little bit. I'm sorry. 150.66. All right, let's get into the Qs and SPY. So we can just go ahead and mark everything down ourselves. We know where the 100-day is. So again, my plan, everybody sees this little head and shoulders that's forming. That's good. Everyone has a plan until they get smacked in the mouth, right? That's what Mike Tyson's old sayings was. All right, so I'm going to put a line here for my 100-day moving average. going to make it the same color so I don't have to think twice about what it is that's there. Boop. Because ultimately, I think we bounce it back and then we find ourselves trying to retest that area. Why did I bring up the Dows and say that it was a leader? Let me go back. Because if the Dow continues to break down, which I don't think it will, I think it will also get a bounce today because it's really oversold. It could still come down, right? Just because something's oversold doesn't mean it can't sell off further. I want to see it. This thing's still a little weak. Damn. The Dow is still weak. Look, the Dow is trying to put that whole area into resistance. Monday, Tuesday, Wednesday, Thursday, Friday. Look at that clear range. Unbelievable. Unbelievable. That's insane. Wow. So 342.68 is the area that we could possibly look for some rejection. Right? Man, that's crazy. That's crazy. All right. And you see how the S&Ps and the Qs, that whole range there is is to the upside. It's putting in higher lows. The Dow wasn't doing that. It's just laying flat. Like, I don't know why it got beat down so bad. I really don't. So, resistance, I'm going to be looking for the SPY 439. 439 will be the first level if we get there. See, it clearly does not look like the ES, does it? Right? It doesn't look like the ES. Oh, okay. Maybe it does, but a little bit different. So, you want to take notice, like yesterday was important, right? Yesterday was important. Why was it important yesterday? Because I tried to tell you guys, we rallied Wednesday, and we took it all back Thursday. And we always know to look for Thursdays. We look for our big runs, right? If we're patient, I always try to tell you guys what I've been doing this whole year. Thursdays, I set aside a little bit of capital. I am buying a few options, and I'm letting them go till 3 o'clock, both ways, right? I mean, I will wait and sense the direction, but like yesterday, I said chances are we have a clear double top here on the S&Ps. I got short on the bounce back to that double top as it worked its way up, because if we were going to hold and try to go higher, the Dow wouldn't be down the way it was. IWM wouldn't be down, right? The SPY would not just curl itself up and try to make a run for a new high at highs, at a high RSI. Like, everything about it was not screaming gap and go like we did Tuesday. So therefore, on the bounce back to predetermine a possible double top, I let the double top come in, and it pulled back, and I said, okay, there's our double top. And as soon as we got that bounce to make that area of rejection, I got short. And again, it's Thursday, so I know what I want to do. I want to let this thing just sit all day. I don't care if it goes to zero. If I'm right, I'm going to get a decent movement day. Even if I buy on both ways and I don't have a clear sense of direction, I will wait, let the market put its foot in the ground and pick a direction, and I will just get in and I will hold it to the end of the day. Right? It's important to understand those type of like when you notice something, you gotta expect it to continue, right? You gotta put risk on. So again, Thursday it's our little secret. Thursday, it has happened ever since I've come on here and shown you guys this. We get a really clear big movement day going into the weekend. Positioning takes place. they're going. It's the summertime. They go to the Hamptons. They, you know, things like that. So you get a big positioning on Thursdays. But we've had it all year. We've had it in the wintertime, right? So that's my little secret. All right, and I'm putting a patent on that because I've been doing this all year, right? I've been doing this all year. I took notice to when the big days started to happen, and it's happened every single Thursday. Every time we had a big day, it was on a Thursday, and I already expected it. And for it to continue and continue and continue, then I come to the reasoning, okay, what this is possible positioning, like getting whatever it is that they want to do done before the weekend. And it makes total sense, right? Tuesday and Wednesday are also some days, but really Thursdays are the days that I look forward to. All right, guys. So it's all going to determine on what Powell has to say, right? Right now, it's risk off. I'm kind of curious, what is it that people are fearing, and what are you guys looking at for today? All right, what are you guys looking at? So I want to see for the bear side of this. I want to see if we can get a rejection up here at like 439. I'm going to say 439 flat, right? 439 flat. And again, we're looking at YS. YS was a stock that was going. SPY. If you guys have any questions, you can throw them in the chat. Hit the like button if you're just joining us. Subscribe if you haven't subscribed. You can follow me on Twitter. All right, 439. So what we're going to do is we're going to gauge if we think we can get a bounce, and it's obviously going to be determined on Powell and what he says and what the Dow does, because the Dow has been the leader to the downside. Look at this clear rejection. We got to see if it breaks. Did the Dow just break the 100-day moving average only to turn it back around to reject it? Where is the 100-day moving average? It's at like 341.12, 341.12, and 342. So 341.12. So it's in this area to come. So it's back up above it. We'll see what happens. All right, we'll see what happens with the Dow. But the Dow is the leader to the downside. Got to watch it. All right, let's get into some stocks. All right, so I'm going to just wait for a bounce back and a clear resistance. Right, we should start to notice it with other stocks. Like the IWM right now came into an area of resistance. Well, no, it'll actually be up here. The IWM is already trying to give back all that selling from yesterday. It's already taken it back about half of it. Wow. So 184.50. 184.50. Yeah, right here would be the area. 184.55. All right. So let's go look at the Qs real quick. And we looked at the NQs. I know I have a lot of lines on these charts. Let's go to a daily. Oh, laggard. All right. So I'm kind of wondering what it is that everyone is scared of. Like, what is it exactly? Like, is it massive employment, like massive layoffs, right? We haven't started seeing companies massively lay off just yet. Just yet. We had T-Mobile. I came on Tuesday night and mentioned it. All right. 364. What was that? 364. 69, 364.50. Call it 364.50. 364.60. 364.60. 364.60. That's a really nice reverse head and shoulders, guys. Right? But did it break it? It didn't break it, did it? We could have a really nice long on our hands because Powell comes out. Powell could come out pretty jelly. Whatever that means. There's a neckline, so yes, it did break the neckline. Maybe that's the neckline. Alright. Clear. So we've broken that yesterday. Let's see. Right there, guys. 362. is going to be an area I want to look for resistance. 362. 362. 362. All right, it's trying to break up above it. All right, so, and we'll be able to get back into these as we get further into when the market opens. And again, if you guys have any questions, throw them in the chat. All right, throw them in the chat. We're getting a bit oversold. You okay, baby? You okay? Get it up. I think her got a hairball. You alright, love? You're okay. Get it up, baby. Get it up. You're okay. Alright. So, alright, let's get into it. Alright, get out your pens, get out your papers, let's do it. Let's do it, let's do it, let's do it. So, there goes the Qs. They just cracked above that support area. And we will have a minor support up here. We still have minor resistance, up here. You're going to have some minor resistance. Really, that resistance will not come in until you get up around that whole area up there at like 363, 364.50. Double bottom right there. And that is where I think it's coming in at. Like right there in that area. I could probably turn it red. And there went the camera. Alright, let's do this. Alright, let's do this, guys. And again, we gotta wait for Powell. You're gonna want to wait for Powell. 362, where are we at? 362, 362, 362. Alright, because, alright, right there. So, what I need you guys to understand is that you have a clear resistance level up here at 362.75, 363. Right up here. You're going to have a tough time up here at 362.75. I'm trying to bring it down as far as I can to, like, you know, there's clear support and resistance right here. I'm going to keep my level right there. That's my level. All right, 362.75. All right. I just got to write down the SPY real quick resistance. Sorry. So I'm writing that down. 363, 362.75 area is going to be resistance for the Qs. I already wrote it down. So let's go into Tesla, because this is the one. Tesla, Amazon, Google. I'm really watching them, guys, because there's been relative divergence with Tesla that people aren't talking about. People aren't talking about it. All right. So 439, we got that. We break up above it. What else could we have? I think that's it. 439. Yeah, 439. 439 holds, guys. Watch out for 442. We're going. So what I feel like you get a lot of times is people don't fully understand looking at everything, right? To know, well, like everybody wanted to be long yesterday, now they're going to be bearish. They're not looking for upside just because yesterday was a down day. Okay? Whatever you say, my friend. I'm not talking to anybody in particular. But what I'm trying to get at is like you really need to know what the hell's going on. Look at all this weekly buying on Tesla, right? Let's go to a daily chart. What do we see? All right, price action's been fairly weak. All right, price action itself has been fairly weak. But what do we have? You had a lot of buying back here in this area on that run up, right? A lot of buying, more buying lately, stepping it. Not really. All right, the days that they come in buying, they take over, right? You got more selling that's going on, obviously. But what I'm getting at is we're a bit oversold, just a bit, 41. You know, not crazy oversold. You're getting MACD crossover. And I also feel like, you want to watch, because if it bounces, then watch out. It's going to revert back the opposite direction. And it can. All right? See how it's coming up, and it feels like it felt like it was trying to cross back up and over. But it could just meet it and then split away, then they could go their separate ways, or it could just extend itself away from it. All right. So RSI is pretty low. It's oversold. I feel like we need to get a little bit of a bounce in here. You have your 100-day moving average below you, 50-day above you. And I feel like we have this huge base that still hasn't been made some resistance and a gap fill. Um, we have an area here. It's not too big. Let's see. It held up. Let's see here. Because I've been really watching the price action for this week. And that price action takes me up to high 234s into 235. All right. Right. 234.95. 235. 235 is a small area. If we keep stepping it up, if we keep stepping this whole area up, I'm going to want to look for a push back to 235, 234. Push up to, and this is if the SPY and the Dow and the Qs are bouncing, then we can look for Tesla to get back up to 234, 235. All right. So what else do we have? And if not, if we have the opposite, because you're going to get a reaction with Powell, you have the 100-day right below you, 221, right? 221 is where that 100-day moving average is. So if you guys notice, we do have a gap fill here on Amazon. There's a gap fill here, and I'm going to put a little clear box so that we know this is the gap fill on the daily. You want to notice these things so that you're aware, right? I'm going to put it here because what that's going to mean, and you know what? That 50-day lines right up with that gap fill. If we break it, you're going to want to look to fill this gap, right? We break the 50-day. We're going to look to fill this gap at 130, right? It's only a little bit, but I really feel like after the day we had yesterday, it's going to be hard to get a ton of movement in that type in one direction. But we do have Powell, so anything is possible. Amazon just doesn't look good, guys. It's just like we have a gap here, but I feel like I feel like it's we got this. We're sitting in a range, right? You're sitting in a range. You have that double top up here. This area here. We're just sitting in ranges, right? We're just sitting in some ranges. All right, guys. So we got a beautiful setup happening right here on Google. Let's make sure we cover our grounds here. Google looks like it might be coming into some trouble, guys. All right, looks like it might be coming into some trouble. There's our 50-day, 100. All right, so Guys, this area right here on Google, you gotta watch for this area 126. 126. Let me see here. 126. Yes, 126. Let me move this down because it may start turning this into support. Let me see here. Alright, bada bing, bada boom. Alright, and what's going to happen if we continue to pull it down to 126, right here? What's going to happen? 126, there's your previous pivot high. 126, your 50-day. Guys, the 50-day is going to meet it, and that's going to give us a nice buying opportunity possibly. But it's got to get down there first. My thoughts on Google is that it's benefiting. It's not down here at these pivot lows rally. It's still up at highs. The rest of the market, the SPY, the Dow, the Qs, all of them are down. Google is still up. Why? Because they are not prone to the consumer and purchasing, right? People go on YouTube. People, it's much easier it's just a good environment for Google, I feel like. So there's a couple areas I could look for. It's kind of tough. I'm just going to make it 126 because that's this previous pivot high right there. Give me 1 second. But yes, this bounce back, if we get it and the markets want to be weak, if we get weakness, we actually might want to think about Google. Yes, it's strong. It's hanging out at the tops, but it may give us the biggest downside because you have this red box right there, which is the 50-day moving average, right? That 50-day moving average will start running itself up. Let me do this because the 4-hour, it looks different than the daily. All right, so there's the box. It's already almost there. So if we pull it up, we can get that 50-day to meet Google right here in this area, right? We'll see if that happens. That's what I would look for. Because it's important to understand what the moving averages are to give you your reasonings to say, all right, we're going to pull back into this. That's going to be a buying opportunity for some. Things like that. So that's what I would look for. But that's going to be in time when I think it's time to put that trade on. And I'll get more into that. So let's continue to look around and kind of understand what it is that we're going to do today, because so the S&Ps, right? We're in a little bit of an area here where I feel like, so we turned that into resistance. That 445 got turned into resistance yesterday. What's next? Do we start planning a new area, a new range, right? Are we going to go say, all right, we're going to start thinking about making 440 resistance and bring it back down to 432 area and then bring it back up to 435, 436, or no, not 436, but like 437, right? So we'll go down to the low, go up to 440, reject, pull it back to the low 430s, come back up and make that 437 area resistance. So it's like we're bringing price action down by going down further than when we go up. All right. So yes, right here, and you have a previous base right here, this 50 days meeting Google at, right? So like Liz Young said yesterday, how I explained to you guys, the yield curve has, the short end of the bond has just been lifted, and then the back end's been lifted with the, everything that's going on. You have a really, she said, you have a bearish yield curve right now. The front end of the yield curve needs to come down, right? It needs to come down. It needs the Fed to cut rates, whatever. So we don't have, it's just like this. She said it's a bear steepener is what she said. So understanding what's going on, guys, you want to look at the dollar. You want to look at the Fed's balance sheet. They are taking their balance sheet down. They've been unwinding their balance sheet. Nobody's really talked about that. I've been bringing it up. And all these things are going to make for less liquidity. There's still a lot of liquidity in the system. Don't get me wrong. Of course. Of course. Of course you do. All right, guys. So let's continue to go through these charts. I want to go through AMD. I want to go through a couple others. I'm going to grab something to drink. I'm going to grab some water and a Red Bull. Let's go to, so Google is popping. Popping. Doesn't get any more white than that. So here we go. Clear resistance up at 132. You know, Google to me hasn't really been the place to be. Right? It's putting in a nice range. Good, great, grand. I'm getting a Red Bull early. I'll be right back. 1 second, guys. All right, team. And again, we're going to have Powell live today as well. I want to be able to teach you guys how to read these markets, like, so bad. I would like for some people to, someone that doesn't know anything about markets. There was no reason to be bullish yesterday. No reason at all. I've seen quite a few people talking about break and retest that, this, break and retest that. You have to look at the chart. There's a reason why there is a thing called a title for individuals called a CMT. Or yeah, CMT, I guess, Certified Market Technician. Right? There's a reason for that. Do you think they just say, hey, break and retest, we're good? Right? No. Volume, levels, RSI, MACD, stochastics. Use all of it. Fibonacci's. Right? Price and time. Measuring these moves. This could be a big bear flag up here, but you have a nice double top up there. I am going to be curious to see what happens when we get down here. Let me go to a 2. Ain't no reason for a 3. Alright, guys. So, yesterday on AMD, really nice, right? Broke the 100-day moving average. Beautiful trade. Beautiful trade if you were with us. Oh, and there was news on Baba. See, and that's the other thing is, like, these stocks here, we've already made a pretty decent move. I'm not sure what you would expect out of these again. Semis ran, and they ran big. I mean, this was a $10 move, guys. That was my target yesterday. Alright, let's look at Baba because it looks like people are going to be talking about it with that news. It's 8:54 right now. Let's do a rundown real quick. If you guys have tickers that you guys want to go over, throw them in the chat. Dollar's pulling back a little bit here. It broke out of that range. It broke out of it. So I'm really curious to see. That was our target, that box. For quite a few reasons, right? I want to see if we start bringing her on down. Bring her on down, right? I'm going to see if it comes back down and can get back inside of that range. It may not. It doesn't have to do anything. Let's go over the 2 years. The 2 years. The 2 years. All-time high, just about, right? Closing. Just about. It's trying, guys. It's trying. All right, so the 10-year pretty much pulled back to that median level that I had there, that middle level, and it found support, unfortunately. Right, and look, that came right in line with the previous high. All right, what's Powell do with this yield curve? Does he try to talk this yield curve down? People are talking about talking the markets down, talking the long end of the bond down. Like, I don't know what, or the 2 year at least, like bringing the 2 year down, something, right? They want stability. They don't want craziness. That's not what they want. So it's going to be really intriguing to see what he does today. I think I'm a little bit different than other people as far as what I think's going to happen. And I'm sure some people feel the same way. But we got an insight from yesterday's from Philly Fed Harkin. He brought up all the same points that everyone else is bringing up, that student loan payments are picking back up. There's not going to be this extra money. You have a lot of things that are taking place. They've done a decent amount already. Come on. Kate Show, heard you this AM saying. Oh, what? This was early in the morning? What? My boy went hit up he's at a concert and then gonna go to work. I don't know who it is. Who is it? Cade Show? Alright, so not. Alright, let's do this. Sorry to go on here, guys. Oh, shoot. What is going on here? He's a good fighter, guys. He's actually pretty good. Right? He's actually pretty good. I don't think he's, like, the greatest or anything, but he's definitely a respectable fighter. Alright. Let me... CMT. Certified... Come on. Right here, guys. I'm sorry. I was looking for CNBC. I don't know what happened. I do know what happened. My ADHD took over. 5 things to know this morning. Just 5, not 6. That's right. Subway. World Capital, which already has more than a dozen restaurants chains in its portfolio. Brands. I think Subway is not going to be. I mean, I don't know. At least around here, they're not. There's not Subways around here. American restaurants such as Dunkin', Buffalo Wild Wings, Jimmy John's, Under Focus Brands owns Annie Ann, Cinnabon, Moe's. Oh, wow. All right. So nothing about this is ridiculous. What does that have to do with the markets? Right? Come on. What we want to know about earnings, right? We want to know about this is crazy. All right, let's see here, guys. And again, if you guys have any comments, if you guys want to hit the like button, anything. Anything? Hello, anybody there? It's all good. I'm gonna keep pushing. Keep doing what it is that I gotta do. New capital upgrades. Netflix says streaming giant can pump more than 20%. So Netflix has a price upgrade. Feels like there's not much going on. I want to be ready for the day, guys, while I got the chance. So to me, Baba looks like, so that's a weekly resistance of the 50 weekly moving average. Hey, Cole Quintanilla was just at a concert. Now he's on TV. That's cool. All right, guys. So we're gonna see what happens with Baba here. Remember that 50 weekly moving average there. It's coming into play. It hasn't been putting in higher highs. That's what I would warn you. All right. Let's look at the year. Let's look at the first of the year. What has it done this year? What's it done this year? There's 2020. All right. There's 2020. You know what? Actually, look at this. Actually, I was actually looking at that, I thought. Alright, no. No, now I'm just being goofy. 6 month, no, I don't like that. There was the trend line, right? You see that clear trend line? We'll see. Alright. So it's making lower highs. That's the thing with Baba. It's making lower highs. We have 50-day moving average up here. We can mark that. And it's actually with the two. Oh, gosh. Guess what, guys? Looks like you're just getting... You got a golden cross with volume. Look at the volume there. Man, I don't know what to do. This has got me mixed. Look at that. Golden cross. That's when your 50-day crosses up above the 200-day moving average. And then it's actually trying to break itself back down. Come on. Volume is just not happening. Right? And it's at lows. Alright, let's do this. Oh yeah, affirm. That's right. I should leave it the way it is, the color, because we have the 250 day there, but I think we're getting a breakdown in it. So the 50-day starting to cross. We'll see if we get some volume in it. There's some big resistance up here at the 50-day. 91.50. BABA 91.50. Let me go to a 15-minute chart. All right, so we're making this support right now. We're making that support. Equities. Boop. Boop. All right, so how? Okay, so there we go. There's a nice level right here that I see. So we have, it's a little bit oversold here on the 15-minute chart, but I feel like, oh, that was, let me do this. I'm trying to make sense of this chart real quick, because this chart's goofy as all hell. Right? It's so ridiculous. Clear resistance right there. 89. 89.70 is clear resistance on BABA. We have clear resistance up here at the 50-day, 91.50. Matter of fact, that's my area I'm going to look at to be short. 91.50. All right, so there you go. All right, that's my plan for BABA. And I'm going to tell you, I didn't say it yet. The mic's been on. Oh, that was close. So let me just make sure that I'm seeing what I'm seeing is correct. And it's a little oversold. So what we have here, I want to see if we bounce up to the 50-day. Let's see if we can pull it back first, right? See if we pull it back and we find support. This is going to be tough, right? It's like, where do we find support now? I still think right there. So I want to see if we can pull this thing back. And it might even be 88. So 89, just under 89, like 88.90 to 88.59, right? So it's going to be a range. I want to see if we can curl Baba back down to that area. You know what? I'm gonna call it 88, right? Baba, see if we pull back off the bell, right? 88. And if we don't break this 88 level, I want to be a buyer. I want to be a buyer in front of it. So we have 89 is going to be the first one. I'm sorry. 89, and then our second level there is going to be 88. Come on. Right, and then it's going to be 88. What am I looking at? Holy shiz. This is a tough chart here. I don't know what's wrong with me. Like, what do you guys think? What are you guys saying? What's up, Aben? Sorry. Let me fix... Dude, I don't understand why it's doing this. I have no idea why it's doing this. Alright, what you got? Well, Bitcoin dump? Let's go look at it, actually. That's a good point. Let's go look at that. Let's go look at Bitcoin. That's actually a good... That's actually a good question. That's a very good question. And it will, listen, if this dollar continues, if the dollar pulls back and these rates continue, absolutely. Absolutely. Right? So look at that, right? So the dollar's been put in a nice range. This was our target. We were looking for and what's actually so funny about this, if you go back to my videos, this box has not moved. We actually got the timing right on it. Like, I don't think people really understand what it is that we do over here. I really don't. Look at that. The very first red candle. So, if the dollar continues higher, like, look at that. To a T, guys. I could go back to videos from a month ago. 3-4 weeks ago. Drawing this range. Back in July. Right? We were drawing it here. That's so funny. We fucking timed the... Oh my god. That's just hilarious. It's hilarious. That very first red candle got right into our box. I just noticed that. Alright, so... Gotta look for the pullback on the dollar here, right? Why is that? Because if the dollar pulls back and it turns this area 103 back into support... I'm sorry. Yeah, 103.03. You're going to look for the long end of the bond to continue further. And then we look for Bitcoin to come down a little bit more. I don't know though. Let me it's pretty oversold. The thing is, here's the thing with Bitcoin. We have so much. I said this a while ago. We're not going to get through this level, especially this level up here. Call it 30, 31. We're not going to get to it and threw it the first try. There's so many people sitting in here. There's so many people sitting up there waiting to just break even. And what happens is the people that sold, right? So you have to understand the psychology of buying and selling. I don't know if there's even anybody here, if Abin's still here or not, but I'm just going to say it anyway, right? The psychology of buying and selling. So people will see that Bitcoin, the reason it goes to an area, pulls back, goes to it, pulls back, goes to it, pulls back, and then it breaks, right? What happens is you get those sellers that have been sitting up there, or buyers that have been sitting up there down on money. The stock price comes back to break even, and they say, I'm only going to get out if at break even. They sell it. They're break even, and what happens is it comes back down. It comes back, goes back, comes back down, goes up, they sell, comes down, comes up, they sell. Well, what happens is the third, fourth time, really the fourth time, when you go up to test that level and you do not break down and you come up to get through, you're going to go through that level. And when you go through that level, what you do is now you've broken the level, and people that were sellers are going to turn into buyers now, because when it pulls back, they're going to say, I'm only going to buy the stock if it gets back to $30 or $30,000, because that's where I bought it. Right? So you were down money. You bought it at $30,000. It went up with you. You didn't sell it. You didn't take profit. It pulled back, and it went to $20,000, whatever. Right? $18,000, $16,000, whatever. And then it comes back up to $30,000. So those sellers are selling that when they bought because they were down money. And it's understanding the psychology of buyers and sellers. So once that $30,000 breaks, now everybody that's there at $30,000 in that area is going to say, I'm only going to buy it if it pulls back and gets back into 30,000, because they have just seen it go higher. They've seen it break. They've seen it go higher. So when it pulls back, they become buyers, and then it goes up and pulls back, right? There's this whole psychological buyers and sellers that go on here. There's a lot of people that are stuck up here, and they're stuck up there because they're not selling. They're waiting for the time when it comes back to break even, right? You get up to 39,000. Watch, we're going to go up there. It sells off. That's the reasoning behind resistance and support that people don't talk about. There's a reason for that, because there's either buyers or sellers. There's a buyer that bought and is down money. It gets back to their break even price, maybe $1 or $2 over, and they've been sitting on dead money forever, for however long, and they're just like, okay, cool, it's break even. And then when it breaks, they see it break, and they're like, man, I sold. I could be up money, so I'm only going to buy it when it pulls back into the area that I sold it at, right? That's when resistance comes in, makes it, turns into support, because the people that were selling turn back into buyers because they just seen it go higher, right? That's the whole psychological thing that goes on here that people don't talk about. So if you see Bitcoin break 30,000, I guarantee you when it breaks, not only are you going to have a nice little run, but when it pulls back, it's going to hold 30,000, because everybody that was selling at 30,000 is now going to turn into buyers, because they've seen that 30,000 go to 34, right? And they're saying, I'm only going to buy it if it pulls back down to 30,000. I'm not going to buy it up here. I'm going to wait for it, it to get back to my price where I sold it at, and that would be at 30,000. But you have a lot of area here, so it's hit it twice. I'm going to say we got 2 more times. On that 4th try, see if it hits on the 4th try and breaks through on that 4th run back up. If we get a 4th hit at this 30,000 area, I want to see if it breaks. I think we could get a decent bounce. I'm going to be quite honest with you. I don't think, like a decent bounce as in like a crazy rip and run, but I want to see if we're going to hold this area of support. Right? I want to see if we hold this area of support. You're going to get the same thing that's going to happen, right? It's going to pull in this 25,000. People are going to sell, like they've bought it. It went to 30. They didn't sell it. Whatever. It's pulled back. You're going to get people to buy it at 25. Right? You're going to get people to buy it at 25. It was resistance. You had a double top there. Now it should act as support. It should. You're oversold. It's so oversold. It's so oversold. And I don't know why this looked bigger than what it really was. All right, I don't know why it looked a lot bigger than what it was. Let's see here. Unless we're going to start putting in a lower high here, right? To just make like a, it might give us, we might need some more time, but we're oversold. I would expect a bounce. I would expect a bounce. That's my but then again, like I say, it's holding up right here. If even if this level breaks, I don't see it going much further than where we left that rally back in June. Right here. I don't see us getting much lower than that. I really don't. These are my levels here. 25, 23. So I think you should get another run back up to 29. We should start to get another run back up. Might start happening today. Might happen today. Keep an eye on yields and the dollar. If the dollar continues, then it may be a little tough. All right, so what time is it? It's 9:20. We got 10 minutes. I'm going to set these charts up. Get ready for the day. All right, so BABA. If we play BABA, if it has decent volume, I'm going to be looking to be a buyer at it's like 88, 85. Really, it's going to be right around this 88 level. I don't know if it I don't think BABA, I think BABA pulls back into, like, at worst, this area here, right? 88.55. And then we have a nice buyable lower high that we could take and ride it up to that 50-day moving average. All right, we'll ride it up to that 50-day moving average. Of course, this mouse, I've beat it up a little bit, but so there's your bounce. Actually, you should get a bounce right there. Let's see if we get that bounce. Come on. All right, so we're watching a few things here. Let's see if we get that bounce, right? See if we start to get that bounce. Bounce it. Let me see here. Man, that could be serious resistance on BABA. I might be a seller here, guys. I might actually be a seller here. Shit. Come on. Alright, there we go. There's our levels. There's our levels for BABA. If we break above, you get up above this 87 here, 89, 85 area, you look for that to become support. We're going to look for that to become support. Alright, let's put in the S&Ps. Let's get going, guys. Let's do this. Let's do it. Let's get ready for the day. I'm ready. I don't know about y'all, but I'm ready. I'm ready to make something happen. I'm going to be patient off the bell. What is it? What are we looking for? 439. We are looking for a push up to 439. We got it. We already did it pre-market. All right. Be careful out there. I'm going to get Powell up live. All right. I'm going to have Powell live for us. So, where's our next level to the downside? We got to be looking. See, we already hit 436. Man, I would like to get to this level here. This getting up here would help us get to, like, turn this thing back into resistance. I just don't know, everyone. I just don't know what's going to happen. Like, do people just stop buying up here because of the potential of what could be coming? But if we don't get anything, what's the market going to do? It's not going to sell off. We've already had earnings. The majority, 89%, 85, I think it was up there. 80% of the S&P 500 beat earnings expectations. I mean, we have that, right? We have talks of possible recessions, talks of possible China this, talks of this and that. All it is talks. Until something shows up, the market doesn't know what to price in because it doesn't know what it is, right? It doesn't know what it is until it happens. I try to tell people that it happens more times than not that, you can't just price in the possibility of something or some things happening, right? We can use technical analysts, have our own mindset. Yes, we know data's coming in and contracting, but we have a tight labor market still. We have China issues going on, right? But until that's an actual problem, how do you price that in? And what is it that you're pricing in, right? What is it? Well, we don't know yet because it hasn't happened. We know there's real estate issues, but have these companies defaulted on their payments yet? Have they missed bond payments? Right? Watch TLT. Watch 10, 20s, and or 2s, 10s, and 30s. Okay. You're gonna want to watch your yields because you can make a play on TLT. If the dollar starts pulling back, we might be able to get a decent play on gold. Right? But I would be careful because if the dollar is going to continue to be strong, you don't want to be long the dollar. You want to be short, or not the dollar, but gold. You want to be short gold, not long. All right. All right. So there's our pullback on the S&Ps. Let's get it, guys. Good luck today. I will call out whatever it is that I get in. I will put it in the chat. All I need from you guys is to hit that like button, subscribe if you haven't already done so. It's greatly appreciated. Thanks, guys. And if you guys have any more questions, any tickers you want to go over, anything you're looking at, just throw them in the chat. There was one small cap that I put in here, YS. Yeah, I think it's Yes Brands, or it's Yes Pharmaceuticals. So if this thing was going up, it was, and now it's starting to sell off a little bit. So let me get my charts ready, and let's do this, guys. Good luck today. And all right, I have a few minutes. I don't need to be nervous and rushing. If you guys didn't see that Tesla, that was the other one I was looking at. If you guys have not seen that lesson on Tesla I put out a couple nights ago, it was Wednesday night. You should go look at it. I'll start trying to put timestamps on them because it's important. It's important so you guys know that if you use pre-market and after hours, how it affects your decision making if you use things like RSI, MACD, like not volume, but it can really affect you. It can really affect you. It could give you the wrong impression of something. All right, come on. Boom, Safari, appearance, background black, MACD. I feel like I'm under pressure. 27. No. 28. Come on, studies. All right. MACD. What is it that you guys are watching? I'm just curious. What do you guys got your eyes on? And I do apologize for the past couple of days, guys. I really do. I do apologize. I've been sorry if I've been a little upset and just frustrated with everything. I just wanted to apologize because, it gets a little... It just gets really hard when, when I was only getting a few hours of sleep. Come on, man. No, come on. Edit studies, MACD. All right, so what do we want to watch for? We want to look for the sectors that are going to be strong and weak. All right, watch and see what the Dow does. The Dow's been pretty weak, guys. Good luck today. Markets getting ready to open. Be careful out there. All right. Shit. Come on. So, RSI on pre-market and after hours is pretty low. I wonder if it's oversold when I pull up the other chart. All right, guys. Again, Powell in just a couple minutes. So just be careful and wait. Be patient. Especially if you play options, you still have a little bit of time. You still have a little bit of time. There goes Tesla. Did we put the 50-day? Is the 50-day really below the 100-day on Tesla? I'm not sure if there's any small caps that are on watch or not today. Yes, the 50-day is up above it. Sorry, let me use some of my whatchamacallits. All right. All right, so look at the clear, well, I wouldn't say clear divergence, but it's setting up different than the SPY. So Tesla just is kind of breaking up above. It broke above pre-market high. See how it's different how the SPY just put in the high? Tesla put it in earlier. So there's been some weird things going on with Tesla that I've noticed the past couple days. Right? It's a little weird. I would love to know why this is happening. Man, Tesla, you freaking monster. I knew it. Damn you, Tesla. What did I write down? Tesla, push up to 234, 235. Yes, that's our level. 234, 235. Right here and right there. Alright. This has been clear resistance. And we're going to watch the SPY with Tesla. I was going to say, I felt like the SPY didn't want to sell off there. There goes the SPY, guys. I knew it. Let's look for that bounce back today. All right, Netflix price upgrade today. 416. You could take it up to 418. Let me see here. Well, it's got a ways to go if it breaks. Well, I told you guys, don't be like the other. It's just funny how people are, because people are like, oh, we had such a down day yesterday, got to be short today. You know, one day they'll learn the markets, right? One day they'll learn. All right, so there's our level 233, 235. I want to wait for Powell. I want to be patient. I want to watch for Powell. Maybe I'll look at the S&Ps. All right, so what I'm going to look for on the S&Ps is 439.92, 440. I'm going to look for that area. It might be there now because it's just under it. 439.85, 430, like 440. So about $1 away. Of a firm. Let's go check out a firm. Nice relative strength there on a firm. All right, so it just broke above the 50-day, it looks like. I hate that they're saying that. They're saying like, oh, that we said this, blah, 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 and now it's... They're talking about price movements on CNBC. If anybody has CNBC on, you just heard what they said, and I'm like, no, that's not the case. All right, so there's our pullback into that. Bang, bang. I gotta hurry up. I completely forgot about a firm. I can't believe I didn't already have it in. There's a nice double top up there. Where would we look to take profits? Because people were taking profits and there's been negative divergence. That's why. Come on. Look at the chart. What are you guys watching? What's everybody watching? Hope you guys are doing great this morning. I did want to apologize for the past couple days. It's been rough. Alright, so this is AMD. And of course, I seen a video where they were wanting to short AMD again today. Really? Again, I'm looking for that 440. It was high 439 area on the S&Ps. Looks like we are getting ready to turn it back around. All right. And Baba puts. Nice. That's right, Baba. Let's do it. Nice job, man. Nice job. That's what I was thinking, right? I was thinking pull back down in here to 88, low 88s. Right? Very nice. Very nice. I actually like this area better. 88. So, if you guys haven't seen, too, there is a golden cross happening. You got the 100-day moving average up here. And it's putting in lower highs for this year. I don't know. I don't know. I'm going to be patient. I'm going to wait. But I would agree. I don't think that this AI can solve their real estate problems and all the other issues that they have going on. And that's a decent amount of volume there on that bounce back on Baba. Some nice volume there to start the morning out. All right, so that area right there, I've been watching it for the past couple of days here on Tesla. It was actually weaker than the SPY and everything else, and then it had some relative strength yesterday. Like, so look at yesterday. It didn't make a new low, right? Nobody said that. Nobody mentioned anything of the sorts. Look, Tesla never put in like a new low. It didn't just sell off like everything else did. So it was weird. It was weird to watch Tesla not because it had clear weakness and then it like rotated into like strength. It was so weird. It was so weird. Which was this day on Tuesday when or Thursday, Wednesday. Wednesday is when the clear weakness stepped in, and I was like, I want to be short Tesla. Like when it happens, I want to be there because I know it's coming. I feel like it's setting up for it. But you're starting to see a lot of things with the Cybertruck, and I think that's what's helped propel this thing. But if consumers are going to be hurting to buy stuff, it's like it may not help them. I mean, it's hard to say. But my personal take is, it's only a matter of time before this retail stuff starts really kicking in and the banks really do their part in not lending as much as they were the past couple years, really the past 20 years or 15 years, whatever it is, from 2008. Let's see here. Got to hold. It's got to hold. I don't think it is. So SPY in the resistance, Tesla in the resistance. I like Baba. I usually have been green on Baba a lot. Nice job, bro. Nice job. Nice volume there, too. To the downside. Very nice job, bro. Great job, Bingo. Get her done, bro. Nice. Happy to see that. Happy to see that. I gotta check out TLT. So we're gonna have Powell here in a couple minutes. Can't believe they're just sitting on it. You have no idea. All right. What was I looking at? Tesla. Baba. Come on. I forget. Yeah, we'll probably end up just sitting here in a range until Powell. I'm going to go look for that real quick and put that up for us. Alright, so there's the rejection. Boop. Sell it down. There was something that was... Man, I can't remember what it was. Let me see if I have it written down. I'm so upset I didn't get to take place in that TLT trade, man. That was a sick trade. That was sick. I won't forget about it again, I promise. I will. I'm just gonna put it on. Man. Alright. Let's see here. So Tesla. Alright, so Tesla broke up to that 233 level, guys. I'm gonna start looking to see if I can get a pullback and possibly we have Powell just in a couple minutes. I'm gonna wait to take a trade. Like I said, I felt like Tesla had some divergence to the upside, some clear strength, and it appears so. Oh, come on. Come on. Let me do this real quick. Boop. Boop. I want that pullback so badly. Give me the pullback. Jesus Christ. My goodness, my goodness, my goodness. Alright. So I'm gonna be watching the volume. I'm gonna look for a trade on Tesla. I'm not thinking the long rate to second because I need it to pull back, and there's got to be some relative strength for me if I'm going to be long or short something, and I don't think we have it with Tesla. You have some strength to the upside, don't get me wrong, but you're already starting to get that RSI to start, tilting its head down a little bit as it screams higher, and this could be a possible lower high being put in. Lower high being put in on the RSI and things of that nature. We're going to look for... So there was a nice rally, pulled back to the 38.2. Let me see. Yeah, look at the S&Ps. The S&Ps are just sitting there. So, I wonder if this has to do with the Cybertruck. As long as that's a low volume pullback, sorry, I don't know if you guys heard me or not, but as long as that's a low volume pullback, we'll have Powell coming on in a little bit. We're still right about where we opened, guys. I'm gonna get everything ready for Powell. And yeah, let me fix this camera. All right, I haven't taken anything yet. I have not taken anything yet. I'm gonna wait a minute. Really? Already? It's really trying to test me, isn't it? Why? Why? Great job, man. That's awesome. Already 100%, and the day ain't even started. Well, it just started a little bit ago. All right, so we broke above this level, guys. If Tesla is going to give us another little rally, depending on what the markets do, I am not going to fight the trend. If the S&Ps are going to pull itself back, right? If the S&Ps pull themselves back, I'm going to watch for... See, Tesla's already made this run up. We might as well. I just know how important this level has been the past few days at 233 or 234. So it's putting in lower highs. And it did. It put in a lower high. I was getting ready to say, this is about where I would like to see it. Put in a lower high. Lower low down here at 227.45 would be a good area. Let's see what happens. Maybe Papa Powell help us out a little bit. We're right in between the 50-day, the 100-day. All right, I'll be right back. I'm going to get this live up, at least put it in a little box for us. All right, there we go. 38.2, roughly in that area with that. And look, did you guys see the time? You guys can't see the time of sales. Nasty green. The whole time of sales, literally, when you got to that VWAP 90 in May, a ton of buying there. A ton of buying going on. A ton of buying. A ton. That's why it's good to put your orders right there at that spot. Look at that. Still green, still green, still green, still green, still green. All right, a little bit of red, still green. They're buying this right here, guys. They're buying it. They're buyers. They're buying in front of Powell. I'm in the camp that I think Powell is not going to go too crazy. That's crazy. Well, it is just like a bunch of ones. That's the difference. Is the type of orders that are coming through here on Tesla. I'm going to buy one call. There's no size on these on that buying that I see, guys, for Tesla. I don't really see any like real big size coming through. I gotta make it bigger. I'm sorry. I gotta make it bigger. What I what I think I can do is I can if anybody wants to see it. Yeah, and bingo, I don't know what's going on with it. It's been being a little jerk lately, man. It's been cutting off. I've been going. It's because I go on and I'll flip it to turn the camera on. It's just been shutting off. I don't know why. It's just been doing it to me because I've moved the stream into another room. There was a nice big order got filled there, but I still feel like the selling is overpowering. And if anybody's reading this level 2, if they're just using the colors on that time in sales and not really reading into what's going on, they're probably going to be long. I mean, the volume's trying to come in there. They're probably going to try and be long, but there's no real size here. That's why you're not seeing like quick price action move quickly back to up here. You guys know what I'm saying? For it to move quickly back up there. Yeah, so I'm upside down. Yeah, I see that. I'll fix it. I don't mind it. Right? I don't mind it. No, I'm just kidding. I don't know, man. This fucking camera's been pain in the ass. I'm just gonna get a new camera. I don't know why it's been doing this. I'm gonna see what I can do to get this fixed because it's getting annoying. See how the volume on the buying on it kind of just went away? Not that it can, like, it could change, right? It could change, but I was noticing there was a lot of orders coming in at VWAP, but they were only there wasn't no size, right? There wasn't a ton of size with it, and that's why we're seeing this volume slow down. Look at all the selling that was coming in there on Tesla. Look at the rejection, right? I bring it up so you guys can see it because it's important. What's that on Baba? Yeah, and like I say, look, there's Tesla flipping bearish a little bit. Let me get Powell up. They're saying that he's going to be hawkish today. I don't think he's going to be. I think he's just going to say that they need more data. Oh, he's speaking right now? What? Why is it not on CNBC? Come on. Oh, he is.
Today, I will review our progress so far and discuss the outlook and the uncertainties we face as we pursue our dual mandate goals. I will conclude with a summary of what this means for policy. Given how far we have come, at upcoming meetings, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. The ongoing episode of high inflation initially emerged from a collision.
This is way behind on the internet.
Housing services inflation. Powell says policy restricted, but Fed can't be certain what neutral rate level is. Fed will not change 2% inflation target. Fed is mindful monetary policy faces rising risks on both sides. Powell says trend growth should warrant.
Headline inflation is what households and businesses experience most directly, so this decline is very good news. But food and energy prices are influenced by global factors that remain volatile and can provide a misleading signal of where inflation is headed. And in my remaining comments, I will focus on core PCE inflation, which omits the food and energy components. On a 12-month basis, core PCE inflation peaked at 5.4% in February 2022 and declined gradually to 4.3% in July. The lower monthly readings for core inflation in June and July
Yeah,
were welcome.
let's just see what happens
But
here.
2 months of good data
It's
are
been
only the
switching
beginning
back and
of what it
forth.
will
It's
take
been
to build
turning itself on
confidence
and back off.
that inflation is moving
give
down
me 1
sustainably
second.
toward our goal. We can't yet know the extent to which these lower readings will continue,
But yes,
or
it's a
where
nice
underlying
double top
inflation
up
will
there.
settle over coming
Not
quarters.
holding in this 230 at that
12-month core
235,
inflation is
234
still
area.
elevated, and there is
The volume
substantial
just stopped.
further ground to
The
cover
volume stopped up
to get
here.
back
That's
to
what I
price
was saying.
stability.
That's really all.
To understand the
If you come
factors
back
that will
in, you just
likely
have to watch
drive
level 2
further
and time and
progress,
sales
it is
on
useful
Tesla.
to separately examine
But
the
look at that
3
sell
broad
volume.
components of core PCE inflation: inflation for goods, for housing services, and for all other services, sometimes referred
If I
to
take
as
the short up here on
non-housing
a bounce
services.
back to 9 EMA VWAP,
Core goods
I
inflation
will
has
let you
fallen
guys know.
sharply, particularly
I'll
for
probably
durable
try and
goods,
take that entry
as
right
both
there,
tighter monetary
if I
policy
take it.
and the
And I'll see if
slow
I can get it
unwinding
back
of
down to
supply and
yesterday's
demand
close.
dislocations are bringing it down. The motor vehicle sector provides a good illustration. Earlier in the pandemic, demand for vehicles rose sharply, supported by low interest rates, fiscal transfers, curtailed spending on in-person services, and shifts in preference away from using public transportation and from living in cities. But because of a shortage of semiconductors, vehicle supply actually fell. Vehicle prices spiked, and a large pool of pent-up demand emerged. As the pandemic and its effects have waned, production and inventories have grown and supply has improved. At the same time, higher interest rates have weighed on demand. Interest rates on auto loans have nearly doubled since early last year, and customers report
Up
feeling the
there's where I
effect of
wanna
higher
enter,
rates
guys.
on affordability.
234.
On net, motor vehicle inflation has
233,
declined sharply because of the combined
95
effects
area,
of these
okay?
supply and demand factors. Similar dynamics are playing out for core goods inflation overall. As they do, the effects of monetary restraint should show through more fully over time. Core goods prices fell the last 2 months, but on a 12-month basis, core goods inflation remains well above its pre-pandemic level. Sustained progress is needed, and restrictive monetary policy is called for to achieve that progress. In the highly interest-sensitive housing sector, the effects of monetary policy became apparent soon after liftoff. Mortgage rates doubled over the course of 2022, causing housing starts and sales to fall and house price growth to plummet. Growth in market rents soon peaked and then steadily declined. Measured housing
down there is the
services
100-day
inflation
moving
lagged
average.
these changes, as is typical, but has recently begun to fall. This inflation metric reflects rents paid by all tenants, as well as estimates of the equivalent rents that could be earned from homes that are
So
owner-occupied.
notice the SPY. The
Because
SPY's
leases
already filled
turn
the
over
gap. It's
slowly,
below where
it
we
takes
opened,
time
but
for a
Tesla's
decline
not.
in market rent
There's a
growth
little bit of strength
to
there
work
on
its way
Tesla,
into the overall
even though
inflation
it's
measure.
weak intraday.
The market rent slowdown has only
So
recently begun to
I
show
want to get
through to that
my entry
measure.
short. Up
The
here.
slowing growth in rents
If I
for
don't
new
get it, I don't
leases
get it.
over roughly the past year can be thought of as in the pipeline and will affect measured housing services inflation over the coming year. Going forward, if market rent growth settles near pre-pandemic levels, housing services inflation should decline toward its pre-pandemic level as well. And we will continue to watch the market rent data closely for a signal of the upside and downside risks to housing services inflation. The final category, non-housing services, accounts for over half of the core PCE index and includes a broad range of services, such as healthcare, food services, transportation, and
That's a nice
accommodations.
rejection here for the SPY.
12-month
If the
inflation
SPY
in this
rejects
sector
this
has
area
moved sideways
and it
since
doesn't get
liftoff.
back above, you can see
Inflation
some nice
measured
downside.
over the past 3 and 6 months has
Right?
declined, however,
It's turning
which
this
is encouraging.
area of 437
Part of the reason
in
for the
in
modest
resistance.
decline of non-housing services inflation
whole
so
area.
far is that many of these services were less affected by global supply chain bottlenecks and are generally thought to be less interest sensitive than other sectors, such as housing or durable goods. Production of these services is also relatively labor-intensive, and the labor market remains tight. Given the size of this sector, some further progress here will be essential in restoring price stability. Over time, restrictive monetary policy will help bring aggregate supply and demand back into better balance, reducing inflationary pressures in this key sector. Turning then to the outlook, although further unwinding of pandemic-related distortions should continue to put some downward pressure on inflation, restrictive monetary policy will likely play an increasingly important role. Getting inflation sustainably back down to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions.
What did he say to make the
restrictive monetary policy has tightened financial conditions, supporting the expectation of below-trend growth. Since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are higher as well, by nearly 150 basis points. Beyond changes in interest rates, bank lending standards have tightened, and loan growth has slowed sharply. Such a tightening of broad financial conditions typically contributes to a slowing in the growth of economic activity, and there is evidence of that in this cycle as well. For example, growth in industrial production has slowed, and the amount spent on residential investment has declined in each of the past 5 quarters.
I pointed out,
but we are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in above expectations and above its longer-run trend, and recent readings on consumer spending have been especially robust. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up.
I feel like it's in a stage
Additional evidence of persistently above-trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy. The rebalancing of the labor market has continued over the past year, but remains incomplete. Labor supply has improved, driven by stronger participation among workers aged 25 to 54, and by an increase in immigration back toward pre-pandemic levels.
Let me listen to Powell real quick.
Indeed, the labor force participation rate of women in their prime working years reached an all-time high in June. Demand for labor has moderated as well. Job openings remain high, but are trending lower. Payroll job growth has slowed significantly. Total hours worked has been flat over the past 6 months, and the average work week has declined to the lower end of its pre-pandemic range, reflecting a gradual normalization in labor market conditions. This rebalancing has eased wage pressures. Wage growth across a range of measures continues to slow, albeit gradually. While nominal wage growth must ultimately slow to a rate that is consistent with 2% inflation, what matters for households is real wage growth. Even as nominal wage growth has slowed, real wage growth has been increasing as inflation has fallen. We expect this labor market rebalancing to continue. Evidence that the tightness in the labor market is no longer easing could also call for a monetary policy response. Turning to the path forward. 2% is and will remain our inflation target. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to that level over time.
This is crazy.
It is challenging, of course, to know in real time when such a stance has been achieved. There are some challenges that are common to all tightening cycles. For example, real interest rates are now positive and well above mainstream estimates of the neutral policy rate. We see the current stance of policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. But we cannot identify with certainty the neutral rate of interest, and thus there is always uncertainty about the precise level of monetary policy restraint. That assessment is further complicated by uncertainty about the duration of the lags with which monetary tightening affects economic activity and especially inflation. Since the symposium a year ago, the committee has raised the policy rate by 300 basis points, including 100 basis points over the past 7 months. And we have substantially reduced the size of our securities holdings. The wide range of estimates of these lags suggests that there may be significant further drag in the pipeline. Beyond these traditional sources of policy uncertainty, the supply and demand dislocations unique to this cycle raise further complications through their effects on inflation and labor market dynamics. For example, so far, job openings have declined substantially without increasing unemployment, a highly welcome but historically unusual result that appears to reflect large excess demand for labor.
This is crazy. Hold on.
In addition, there is evidence that inflation has become more responsive to labor market tightness than was the case in recent decades. These changing dynamics may or may not persist, and this uncertainty underscores the need for agile policymaking.
Again, 442.
These uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little. Doing too little could allow above target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy. As is often the case, we are navigating by the stars under cloudy skies. In such circumstances, risk management considerations are critical. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data.
That's why it ran.
Restoring price stability
this has
is
already
essential
been said.
to
We're getting all this
both
late.
sides of our dual
They get it
mandate.
real time, guys. I knew something
We will
was
need
said.
price stability to achieve a sustained period of strong labor market conditions that benefit all. And we will keep at it until the job is done. Thank you.
441. Well, what did you guys think? What did you guys think? Little hawkish, right? They need to continue, but it was thrown off with, we may pause. So, like I said yesterday, I don't think you're going to get much of anything. Market rip, put in some nice 3 solid candles. 3 bar and a 3 bar reversal at that there, but it's on lower volume. I'm not sure if I can put too much trust in it. I think the sellers kind of just stepped away to sell it at a higher price, right? It's usually why that happens. There you go, 441. I don't know, guys. I feel like to me, it doesn't seem like they're worried about anything going on with China, which is a deflationary environment. Doesn't seem like he was too worried about any type of headwinds with layoffs and retail and all the things that we just got this week. It doesn't seem like he really cared about that. Doesn't seem like he thinks that there's going to be any. Maybe he did. Maybe he brought it up and I didn't hear it because I didn't know that he was already on. They came on earlier. Actually, I seen it on the tweet, right? I took it down. But when I Googled it, the one girl said, "Why are you on so early? Why did you go on earlier than expected, than you were supposed to?" So I don't know, guys. I feel like it's the same old. I don't think we got much of anything, and this is exactly what I thought. I figured we'd get a little volatility when he came on, and then it really would just be like, all right, we'll be right back to where we opened up. Or where it started, right? And that's what we got. Because nothing's really changed. Everything is still the same. What's up, buddy? How you doing, Collins? Hope you're having a good day today. So, yeah, let me get that for you, Mav. Let me see what Apple is doing right now. All right. So, there's our... Matter of fact, let me go to Tesla real quick because I want to see... I don't want to miss this entry if I get it. And they're still buying this thing up here. Look, Tesla, they're still buying it. There's a little bit of selling that's popped in, but Buyers are in control on time and sales. There they are. There's sellers are trying to step in and step up. Yeah, there they are. There they are. There's little blocks of sellers coming in, but buyers are steady. Man, this is going to be a tough day, guys. This is going to be a tough day. I knew I should have got short up there at 441. Damn it. Fuck. Look at that candle. Right back to where we opened, guys. Shit. And I didn't have it up there. I'm like, this is a clear, easy snipe on the SPY to get short at this level at 441. To a T. To a T, right? It's clear resistance, right? So, or support right here. Resistance. Resistance. We break it. Break back down. Resistance again. We never made it resistance yesterday. And we wrote that down. 439, 441. Yeah, I don't know what rates did. I do got to look at that. So, I think we get more downside. I really do. I think we could. Apple. I mean, Apple's been fairly weak. I'm not sure. I did randomly draw that. I don't know why I drew that. If you get below here, so right now it's trying to hold it, but if you get below here and make 177 resistance, I would trade that range that you got there. I would trade it back down to 175.50, 175.44 to previous lows of like 174. High 173s, right? If you make it resistance. The guy on CNBC, that the guest, he's saying that did Powell just report the PCE number that hasn't been reported yet? He makes a valid point the way he did it, what he just said. I think Powell might have slipped up. Yeah, I'm not sure. That's fine. I'm gonna let you know as soon as if I do it. I just need the confidence. Look, the market hasn't moved. Right? We got a little bit of volume today, but the market hasn't moved yet. We're still right where we opened. All right? That was a good short up here. If anybody was able to get that short on the S&Ps up there, that's where it was. And I feel like the SPY is a little bit weaker than Tesla is today, so that might be, if I want to be short, it might be that, or BABA. I need to look at BABA. I mean, look at that. Like, so there is some divergence going on here. We do got a little bit of divergence going on with Tesla. I need to play something that I need to, like, there's not really any other reason for me to look at Tesla. There's no like significant news other than the Cybertruck. 88 was my first resistance level, and we just about got there. So that's what I wrote down on my book was 88, get long, and then look for it to like drive itself up into resistance. Let me see here. Let's see here. What is this doing? then if it pulls itself down. I'm going to look. If we get a pop back up to VWAP 439, I might get short the SPY, guys. And I might get a little time with it. I will let you guys know if I do it, if I get that opportunity. If it gives it to me. I think I missed that opportunity. I don't know, though. I still think I might be able to get it. I might be able to get it. We'll see. We'll see. Could be an inside day. Remember, it's Friday. It's Friday. Not sure, if anybody's going to put any type of real positioning on going into a weekend. Shit, there goes Tesla pulling back. Damn it. I'm worried because, like I say, I want to get into something, but I need something with momentum. I need something with news. So a firm was FRM. A firm looks pretty strong. If it holds up there. Didn't give it to me, man. That stinks. I was really hoping to get a bounce back on the S&Ps back up here. Fuck. Excuse my language. I'm sorry. 439. Never got the bounce back. All right. So a firm was strong. Has some strength. Let's see what happens when we get down here to this gap fill. Or the close from yesterday. Let's see what happens when we get here. Maybe I will get that chance. It's just going to take a little bit more time, right? Look at that tail coming in. Tesla, this is just choppy price action. There's not real movement, no real momentum. Not sure what you guys are seeing. Netflix, same thing. There's a price upgrade. Baba. The vid. Nvidia. I know AMD ain't moving. Yeah. Might be one of those days, team. Might be one of those days. Okay. Okay. KVUE, Marvel, Amazon, Google. Yeah, Bob, Ron, Brian. So, yeah, man. And bingo, there's been just dropped from 26. Oh, so here's my thoughts on Meta. There was actually a law in Europe, or over there in Europe, where they have to consent to certain things with like people's information, and now all these social media companies are going to have to abide by it. So I was actually thinking about like Snapchat, right? Let's see what it did to Snap, if it did anything at all, right? Meta, yep, look at Snap. See, that's directly correlated to the law that just got passed for data and stuff like that for whatchamacallit. I actually seen it on Twitter. I seen it on Twitter, and I'm like, oh, awesome, sweet. So I got to thank Elon and crew for giving me that. It randomly popped up. It was the one girl that whatchamacallit. The girl that is like a, I don't know who she. It's not like Christine Lagarde or anything. It's the one girl that is like a president or something of one of the whatchamacallits. It's so ridiculous. Alright, anyway. So, yes. That's why you're probably seeing Meta and stuff do what it's doing. Because of that law that was passed for younger kids. Where I guess they can't steal their information and stuff like that. Where it's like harder or something for them to get their information. Alright, Bitcoin looks like it wants to break down again. We'll see. Kinda. Not really. Hold on. Yeah. Alright. I gotta use the restroom real quick, guys. So, yeah. Meta, Snap, their weakness. Great job on that for bringing that, reminding me, Maverick. Because, you know, and you could probably look that up. And look, that's a bounce right off the 50-day moving average. It's probably changed because I haven't changed it in a while, but that's crazy, man. The SPY never gave me the bounce back. Shit. I'm still looking for this area of 438, 71. All right, so watch the close on the S&Ps. All right, so there's your relative weakness, right? Meta making new lows. Hang on that weakness. Catch the bounce backs. It's a little oversold, right? It's a little stretched, I feel like. Man, if you don't get above 283.96, if you're able to get 281.50, you got to be taking some. I would on a day like today. All right, SPY's coming down into yesterday's low. Pretty consistent sell volume and selling still to be had. Maybe we get that bounce off of yesterday's close for an entry. It's 10:30. It's still pretty early. I disagree with that. But maybe he's got the data to prove it, I'm sure. Art Cashin is on CNBC right now. He's one of the longest standing market makers. Guys at the NASDAQ. I'm going to listen to him real quick.
You know, he didn't say his compass was broke, but
the 10 years up at 427, guys. Wow, it's making an all-time high. So watch the 2-year or 10-year.
we get down
Watch the 10s and
4 points.
watch the 10s and 30s. That's your gauge on the SPY.
Bids coming in
Another bounce off that median area.
around the 4.35 area.
There's your
Bring out some caution. So it's
there's your arbitrage right there, right?
be and how
Follow the yield.
to
If you can't break up above here, then we look to go long the SPY. All right, right here. Here's that area. It's going to be like
where we are,
right there.
but I'm
4.281-ish.
navigate in the
Utilities are up. Utilities are actually up the most. And that's what you want to see in a bear market. XLU. I guess that's why Tesla isn't so down that much actually.
well,
Um,
again, the market is being cautious. It's taking its own pulse and its own temperature. On the S&P, I would watch to see if they get resistance on any rally attempt to
oh, we are.
get above that 40
We are, Art.
level. There does seem to be a little bit of mild resistance there, but I would say if I have only one instrument to look at, it's going to be the yield on the 10-year, and I think.
And he just said what I told you guys. He said, if there's only one instrument I had to look at, it's going to be the 10-year. I just told you guys that. That's our arbitrage right there. See if we get some resistance up here. Take the long on the SPY, but don't hold on to it too long, right? Don't hang on to it too long. I still think we're a little oversold. Gotta watch the 10-year. This is your gauge on the SPY right now.
He talked about the wage growth and made it to not be as big a threat as many of us had thought it was, and therefore he intimated the economy might be inching along. I think our friend Steve Leishman's point is well taken. Well, he wouldn't dare use the word again. It became an albatross, but he did hint that the transitory effect of inflation was beginning to show up, that the supply chain backups are coming down, and things are getting in order. But he wanted very carefully not to say mission accomplished. He wanted that banner to read work in progress. And that's what he wants us to know. We're not finished yet. We're not sure yet. The skies are cloudy. Don't ask me for an absolutely clear cut. I'm steering as well as I can. So I will use that yield on the 10-year as my guide to see how.
There it goes. It's bouncing. I knew it. Bastard. Um, I don't know. I don't know how much further it goes. It might go. Because if he's going to continue to talk this way and act this way, then yields are just going to continue to the upside. All right, so we did not break. It did not close below yesterday's close, guys.
what it's going to end up as. But can this economy?
Like I say, I'm kind of just looking, guys. Sometimes you just gotta be patient. All right, so there's your turnaround to see if you're gonna make that area resistance or not.
Dean, I was struck that he didn't spend a whole lot of time talking about the U.S. consumer when that is such an important part of GDP, and we've been trying to decide if we think the consumer is resilient or if they're pulling back, seeing as it seems like we're having a little bit of mixed messages based on what we're seeing in the data and then what executives are telling us about looking forward.
All right, it's a low volume push.
There's things happening that make it unclear at an individual retailer level that that's true. So, for example, the
435.
services shift right now. So, sellers of goods are having a harder time than sellers of services. Plus, internet sales are taking a huge share from in-store retailers still. So that's another reason why some of the department stores, et cetera, are not seeing very good sales, even though overall consumer
Come
spending
on.
is quite strong.
I will be right back, guys.
We had a lot of bifurcation.
It's gonna take Tesla a lot longer to get down, sell off. It's like not that I'm looking for Tesla to really sell off, but I'm looking forward to see if I can get it back down to that 100-day moving average. Just doesn't seem like today's the day, and that's okay. I'll be there when it's ready, when it's time. All right, see if we start to get a little bounce here on the SPY off of yesterday's close, and kind of see if we can bring it back up to that 438.71. 438.72, right up there with VWAP. I'm going to get short up there if we get there, depending on how it reacts. I'll be right back. There's minor support here at 436.88. Nope, now it's trying to break it. Well, it breaks it here, and you just stay below it, and it turns it into resistance. Can't get back above. Gotta look for more downside. Might be one of those days. And look, Tesla's still holding up. Tesla's still back up here at sitting up at 232. It's up, I don't know, X amount from where it opened. It's still above where it opened, not below it. It's a little bit, that's relative strength. There goes the 10-year, guys. That's all you got to do. Watch the 10-year. That's it. It goes higher, the SPY goes lower. Shit, man. What an asshole. I just want that pullback.
For being here, obviously listening to Powell earlier.
Right here is your 100-day moving average. I posted on Twitter last night that we may still have some meat on the bone for a run and test down at the 100-day moving average.
What are you seeing right now with regard
Now, it may have moved up a little bit, and it did.
One complaint that we have heard from realtors is lack of supply. Back then, we had 2 million homes on the market. Today, it is half that level. Only 1.1 million homes available on the marketplace. So that is limiting the inventory choices. Multiple offers still happening.
Sorry, I got Dorito on my hand. I'm just using, well, like my two fingers, and I don't want to get it on my mouse and stuff. So I would be watching that. That's so ridiculous, man. Come on, they didn't give us an opportunity to get. The thing is I messed up by not getting in at 441. That was a clear area to get short at 441. Powell was hawkish, you know. Now do we get a bounce back to this area? You got to look for a bounce back to get short. You can't just get short here. You could. You could. But what happens if it turns around on you and you're in options? Even if they're for next week, can you take that drawdown? And it's just not smart to do that. You want to put yourself in the best position possible. Let's see here, man. Fuck. I said fudge. No, the other word. That's insane, man. Once it broke down from here, and we weren't able to like hold to like get a bounce to see if we could pull it back up to make 438 resistance, I knew it was probably not going to happen. I still can't get over Tesla. Still not below the opening price, guys. Tesla is still not below the opening price. I wonder if it's got that utility factor to it that makes it. I don't know. I'm not sure what's going on with Tesla.
go here? I see in your notes you're talking about home prices rising.
So take notice of that, because I noticed it the other day. It had clear weakness, and then it switched to the other side to strength.
But also the sellers will pull back, so we will have limited inventory. But higher interest rates.
So I'm kind of curious what's going on there.
Recession. Remember, the Fed was late in trying to contain inflation.
Yeah, I agree with you there.
A job-cutting recession and job.
If you guys want CNBC or anything, you just let me know. I can always throw that stuff on here. I'm not sure. NVIDIA, TLT. Yeah, TLT should be red today if... Let's you.
Stop the insanity with Cortisone 10 for bug bites, poison ivy, and leather itches. Cortisone 10 is #1 doctor recommended. It works fast and lasts for hours. Cortisone 10. The Citi Custom Cash Card. A different kind of card that automatically adjusts to your spending. Earn 5% cash back on your top eligible spend categories. Up to $500.
Let me go wipe my hands off. Oh yeah. Oh yeah. Catch a bounce back. Come on. I'm kind of actually just curious where it would be. So we should start to pull back a little bit here.
The biggest ideas inspire new ones. 30 years ago, State Street created an ETF that inspired the world to invest differently. It still does. What can you do with SPY?
Power E-Trade's award-winning trading app makes trading easier. With its customizable options chain, easy-to-use tools, and paper trading to help sharpen
Wow,
skills,
that's crazy.
you can stay on top of the market from wherever.
I don't know why I haven't been using the triple leverage ETFs in a while. I haven't used them in a while. Let me bring up the cues real quick and I'll turn it back on for you. I do got to go wash my hands real quick and grab something to drink. Got a little bear flag getting ready to form and break down. It looks like it was trying right there on the S&Ps. It was trying. It was trying. It was right there, and that's the breakdown. It definitely tried, and there's the intraday breakdown. Let me pull up a 1 minute. See, there's the breakdown. I fucking knew it, man. Fuck! That's alright. It's not much. It's already down. It's probably... I don't have it, but if anybody can find out, like, how many standard deviations we are down from, like, I don't know, from the opening price or VWAP, we start getting this, like, 2 standard deviations below VWAP or below the open, we should look for at least a bounce back reversal of sorts. But it also could depend on volatility, right? This could make for a nice bounce back. Hold on. God damn it. NextEra, Duke. Set the retest and oh, I was thinking about them yesterday. I was thinking about REITs yesterday. It might be starting, guys. It might be starting. It might be starting, guys.
Also, these days technology, you got to look at them as more interest rate sensitive as well, given some of the valuation concerns. Apple, Microsoft, Alphabet, Amazon, and Nvidia, all again now tilting towards the red. more outsized losses in Nvidia, now down 3%, off well from where we were for the highs that we saw post earnings. And then some of the
Everything. There's the bear market. Like I said, everything gets hit.
maybe some of the valuation concerns,
Banks.
trade sensitivity. The VanEck Vector Semiconductor ETF down about 1.5%. Software just slightly positive right now. The global
If the SPY keeps going, guess what? I'm going to hang on Tesla short, guys. Because it's lagging. It's not going to fall as fast. But look, it's only a matter of time. So there's your laggard. But there, look at the volume that just came in on a 1 minute chart
quick state of play here.
on the SPY.
To that interest rate sensitivity type market, I'll send things back.
I appreciate that. We are awaiting some results on this strike authorization vote in the UAW. Phil LeBeau's got some details. Hey, Phil.
We have the results, Carl, and no surprise here. Overwhelming majority of the rank and file members of the United Auto Workers, approximately 150,000 between GM, Ford, and Stellantis.
All right, so that might be a failed breakdown right there. I mean, it's not a failed breakdown because it made a new low, but
If they deem it is the right move when the contract expires on September 14th, the breakdown in the vote among the three automakers, 98% of the UAW members at Ford authorized to strike, 96% authorized to strike at General Motors.
thank you guys. I'm going to put on
95%
triple Q, so
By the way, that was the expectation of everybody in the auto industry, even those at the automakers.
man, look, like Tesla still has not closed below yesterday's close. The SPY, the Qs, all major other
So that is where we
stuff is below it.
strike authorization vote, guys.
I don't know what to do.
Be a strike. It just
As soon as I short or get into Tesla, it's going to reverse.
say we're calling for
You know, the SPY's already down this much.
on September 14th.
I don't know if it continues. You know, it's 11. It's 11 o'clock. We could get a reversal coming up here. There's time and sales turning a bit green right there. Could flatten itself out and turn itself up. I don't know. There we go. It's trying. All right. Yeah. I think we're getting ready to get that turnaround, guys. Where do we go? Where do we go? That's the question. Let's see here.
Let Innovation Refunds help with your ERC tax refund so you can improve your business however you see fit. Rosie used part of her refund to build an outdoor patio. Dr. Marshall used part of his refund to give his practice a facelift. Emily used part of her refund to buy.
I run a wax museum.
Let Innovation Refunds help you get started on your ERC tax refund. Stop waiting. Go to innovationrefunds.com.
436. I'm pretty sure is the number, right?
Professionals for all your home projects, from repairs to renovations, so you can
Why is it going up?
your home. Get started today
Okay.
at Angie.com.
BarkBox is the #1 dog
Okay.
subscription box because we deliver the happiest toys and treats right to your door. Subscribe to Dog Joy at BarkBox.com.
This is AG1, foundational nutrition to support whole body, brain, and gut health. Vitamins, minerals, pre and probiotics, adaptogens.
I had a feeling Powell was talking a bit too hawkish
DrinkAG1.com.
for this market to be up like it was, right? All the stuff that's going on, and he still wants to talk that shit. Okay. I think the market might, like I said before, like we said before, that the market may start to. Exactly, I'm with you, man. You got to. I mean, what are you to do? You know, you're almost probably 2 standard deviations, almost 3 standard deviations. You know, below VWAP. You got to wait for a bounce back to 236 area. I'm surprised we're down 0.5%, or working ourselves on 0.5%. I thought he was talking like really hawkish for us to be coming into an environment where things were like looking like, yeah, people are going to start losing their jobs. All that's going to help with inflation. The things going on with China and their real estate problems is a deflationary event. like things are happening around the globe. Germany, right? Germany's showing signs of that they're things are struggling over there, that they're slowing down with exports and things like that. I don't know. I thought he was a bit too hawkish, and I didn't think he was going to be like that. Looking back on everything, I figured he would be in a decent mood and was kind of not dovish, but not so hawkish by bringing up the facts that PCE and stuff is not here. We're going to leave rates where they were. But the thing is he did end on that. He ended on leaving rates where they are and pausing for the time being. So I also can't forget about that, because I don't think if things continue this way, like the way it's been the past week, 2 weeks, and I know seasonality, the markets pull back, and the news, that things may seem like things are going on, but China's one of the biggest, Evergrande and whatever else. They're having issues, right? They're not paying bond pay. They're not making bond payments. That's an issue. So we don't know what else is to come from over there, but it feels like they've done enough. They need to give it a little bit of time, and I think that that's where they will be at ultimately. Yeah, I see. I was kind of back and forth with, and they're going back over it on CNBC. He said that they're going to. We are prepared to raise rates further if appropriate. Like what? Okay, how much further though? Like what? What are you going to go to 6, 6.25, 6.5? I mean. He's done a lot.
If we continue to see disinflation in the economy, if we continue to see things kind of softening up a bit, our expectation is the FOMC is on hold. But again, I think.
But again, and like, they went from one extreme to another. So it wouldn't surprise me if they do what they need to do, and it's fine. I think they need to bring everything up. Yeah, let me check that out. And you're talking S&Ps, right?
There's still another 25 basis points in there, and so I don't think you would see a dramatic change in the dot plot.
Look at Tesla trying to bounce. Oh, my knee.
I didn't hear anything that would indicate that they think further tightening is needed. I think it's more on the tweak side.
I thought it was interesting when Powell was talking about the recent reads on inflation. He seemed a little reluctant to get too excited about what he had seen there, had some doubt about the recent decline that we had seen. What do you read into those comments?
Yeah, I think that's right. If you, depending on how you slice or dice it, I mean, we have seen, as the chairman pointed out, we have seen an improvement there. But if you look at the 3-month annualized pace,
the volume is still there too, man. Guys, that volume is still coming in on the S&Ps. I need to get it on the bounce back, and I either missed my opportunity here. I just kind of figured we would get ourselves back up to that opening, we would retest. But I see why we didn't now, because this was the initial morning low for the most part, and that's where it came back to retest. So I see now why it did what it did.
I've seen a lot of 170s for Jobs Friday. What do you have in mind? We're kind of close to that, Carl. We're about 160 at this point, so that would represent another step down in the pace of job growth. It's something that
what I was trying to notice was this. Come on.
Will also be the average hourly earnings. We're looking for a 0.3% increase month on month there. So we're seeing continued signs of wage deceleration as well, but the Fed really wants to see some more, and so a lot of data coming up, and it'll be interesting to see how all that plays out and how the Fed reacts to that on the 20th.
Chair Powell did make a comment about what's going on in the banking system, saying that tighter bank credit standards are slowing the economy. Do you agree with that?
It's a nice little bounce on the 15-minute RSI. MACD still got a little bit of momentum. Nice little gap. This could be our bounce.
Really flattened out. Now, there's still issuance going on in the corporate bond markets. That certainly is welcome news. But, credit spreads, are
All right, I'm going to go grab something to drink. Yeah, I am. I am going to wait. Oh, 15 minutes. Tesla. I'm sorry, guys. I'm sorry.
Jay Bryson, thank you very much for joining us from Wells Fargo on a big day for Chairman Powell.
Thank you. Got a deal in the retail sector this week. Singapore-based online retailer Shein teaming up with Forever 21. That deal will see Forever 21 products sold on the popular retail site. Shein now also owns roughly
It's just like, man,
Forever 21's parent.
this thing is just relatively, it's just relatively like oversold. I would look, if we get another opportunity back up there, so that we know 234, 235 is that key area that it's been playing around with this whole week. If you start to get that little waterfall type of momentum like you did here and like you did back on Bitcoin, could be right. But we need to get that RSI. We need to get that MACD up because it's relatively weak, even on a daily longer term, to get that longer term trend, right?
The fabric makers and then the designers and then so it's for us we design something here in New York City, then we send it over to one of our factories. Our factory makes us a sample, they send it back, we approve it, and 6 months later we deliver it. They do it all in 7 days.
Yeah, they changed the game.
They've changed the game. And if we can actually
Oh, there she. I was wondering where she was at.
portfolio, I mean, we're gonna know what you want when you want it. And I don't want to bring up waste, but they run with 2% inventory. Okay.
All right, there's a MACD cross. I usually don't smoke until like the afternoon, but I might have one myself. Damn, there's a bounce back reversal.
There's just so many things that are going to change because of this relationship.
And that could be why I've been angry, because I haven't been smoking.
It's changing the game of retail. And I think that other retailers are going to have to learn what Shein's doing if they want to compete, because they're just faster and better.
All right, so I want to look for a pullback. And I'll let you guys know what I see if I see it. I want to see if I want to see if we're able to, like, I doubt we will. That's some nice volume there. We'll see. Maybe I can get, I don't know. We'll see what happens. It's 11 o'clock. Maybe we are taking a run up to that 438 level.
If you could say, how many brands
437.
are strictly an e-commerce brand and only an e-commerce brand. They're not a physical brand. My guess is
I'm looking at too many things. My ADHD is 437, right? 437.
I don't think you could name a single brand that is only in physical retail and not digital. So I think that this partnership is incredibly important because it does give physical to Shein to test and actually build physical retail and give that experience to the consumer. At the same time, it gives us the ability to do a lot more digital retail because let's be honest, they have the fastest, best digital platform on the planet right now, and nobody is remotely close to how good they are when it comes to digital retail.
But Jamie, isn't it a risk doing this deal and business with a Chinese company right now?
Well, I'm glad you asked that question because it's not a Chinese company for starters. And not that I don't have a problem with China. We do business in China with some of our brands. This is a Singapore company. That's who we did the deal with. Yes, they manufacture in China. By the way, we manufacture in China too. So does the Gap. So does Walmart. So do many other retailers. Okay, manufacture goods in China. Yes, we manufacture
Come on.
other places around the world. But at the end of the day, Shein does not do any business actually in China other than manufacturing goods.
Is Shein a Chinese company, Donald?
Shein was born in China. 2021 that we moved to Singapore and also currently headquartered in Singapore. We do business globally in 150 countries, and we do no business in China currently. No consumer business, but we do have significant amount of a supply chain in China, although we are.
But that's not even we have some.
Notice how I've been like bringing this 100-day up. Like this 100-day still creeping up. I feel like they're going to meet each other.
Politics and tensions have only gone from bad to worse with China, and companies like TikTok are constantly in the news, and politicians want to ban it. Do you worry that if things do get worse, it's going to end up hurting your business in the U.S. and you'll be caught in the middle?
Well, there are a lot of those speculations out there, but we believe that U.S. is a open market.
There was something with balance sheet runoff. I think, I don't know if Powell's taking questions or what. Or like if Fed members are talking. Okay, so this is Tesla.
What about some of the other
And 230.
that are out there, including the ethical concerns around your supply chain? The Uyghur cotton, the work conditions.
The cotton is the biggest issue there.
There we go.
On
That's
that particular issue, number one, we do not source cotton from China. Right? We use the imported cotton to make products in China, cotton-based products. And cotton-based products is about 4% of our entire business. And the way that we are taking steps to make sure that that we comply with the law. Number one,
all right. I'll be right back. I'm gonna grab something to drink.
Because increasingly we've seen you invest in JCPenney and Spark, and now this deal going more into retail. How does that fit in with your strategy?
Well, retail is very small for us. So my goal is ultimately, hopefully, that Shein loves, shop in shops, loves having the ability to talk to their consumer in the physical world, and then ultimately, one day they have 1,000 stores. Okay, so that's that's the goal. It's funny because the market, I call it our extracurricular activity. 95% of our income is on our traditional real estate, bricks and mortar, whether it's office, retail, residential, all the stuff that we do, international. But we've been very profitable in this other side of our business. But we don't, we're perfectly happy where it is. We've created an enormous value for our shareholders. But it's not like we're on a mission to grow it. We're on a mission to create more and more profitability and be opportunistic in some of these investments that we have.
It's very interesting. Shein is a fascinating company, and there's a lot of things going on there, Carl. I think we'd be remiss not to mention that Shein has been looking at a valuation of something like $66 billion. And so now this partnership gives Spark a piece of that. I think it's also important to mention that Donald Tang has moved to Washington, D.C. to stay a little closer to regulators, to lawmakers, to try to explain why they are the good guys, why, yes, there's this misnomer that they're a Chinese company. While they were born there, they're headquartered in Singapore.
Interesting. I mean, we know real estate is multifaceted and varied, but it's not the worst thing in the world to have a new marginal buyer come in and say, hey, we want a taste.
Absolutely not. Absolutely not. I think Sarah's point earlier in the interview, you have to have both real estate and you have to have this digital presence. And I think that there are sort of efficiencies and expertise in both of those that these players can learn from each other. It's a fascinating tie-up, and I look forward to see what happens throughout that.
Good to see Simon, especially on
Yes, exactly.
Such a crucial time.
Very much so. We don't get to hear from him much.
Still ahead, we'll go back to Jackson Hole. First on CNBC interview with President Mester of Cleveland. And then
Intuit CEO Sazin Gudrazi on the back of results. We will get into why that stock has reversed early losses after providing mixed outlooks. Squawk on the Street. We'll be right back.
Step covered.
Welcome back. Let's get to our first earnings interview of the hour. Shares of Intuit higher today after delivering this beat across the board in its latest earnings and guidance, powered by a more than 20% jump in small business revenue on the quarter and some momentum from the company's investments in AI. Joining us this morning in a CNBC exclusive is Intuit's CEO Sasan Goodarzi. Sasan, great to have you back. Stocks rallied $100 since May, and I wonder if you think it reflects some of the tweaks that you've made to the model.
Well, Carl, thank you for having me. You know, we're excited about our momentum. We had a great quarter. We guided to double-digit growth for next year. And we're very excited about a virtual launch on September 6th, where we're going to unveil a number of experiences that are driven by all of our investments over the years in data, AI, and Gen AI. And I think simply said, I would put that our experiences are shifting us to a world for small businesses and consumers where it's a world of done for you, where we can help you grow your customers and be able to manage your cash flow and having us by your side to tip the world in your favor and doing the same thing for consumers. So we're excited about our current momentum and more excited about what's ahead.
I won't ask you to spoil the surprise in advance of the meeting and the rollout, but I will ask you whether or not you think the street is hungry for not just use cases, but money attached to those use cases.
I think that's exactly right. You know, one of the things I talk a lot about internally is there's hype and there's reality. You know, first of all, you have to have large unsolved customer problems. You have to have the capability, and then you have to have a business model. You have to be able to make money. And I think that's where we come in. You know, we've been investing in data and AI for over a decade. And so we have sort of had a 10-year head start. And a lot of the innovation across the company has actually been fueled by all of our investments in data and AI. And a couple of years ago, we accelerated investments in Gen AI. And what's unique in our world relative to Gen AI is it humanizes things. It personalizes things. It can leverage our data, that's our customers' data, to really help them with things like putting together marketing campaigns for them, helping them understand how those campaigns executed and propose other campaigns. You know, help them manage cash flow, whether they need a loan to increase their inventory or to increase their sales, or to do a better job of letting us follow through with existing customers to get paid for the work that they've done. Doing all of that automagically is really important when you think about small businesses.
But getting closer to that 50 days, just trying to time
they don't have the enterprise help that we have. And we will, with data and AI, in particular now Gen AI,
there's a tape speeding up.
Be able to provide that perspective for them to help fuel their success. And I think that's exactly right. The market is looking for that. What are the use cases? Is it have a compelling benefit? Can you make money and monetize based on those benefits? And I think that's a lot of what you're going to see in our September 6th launch. So we're excited about it.
See if we can pull this thing
Sasan,
back.
I'd love to get your sort of broader view as the CEO of Intuit when it comes to health of small businesses. Obviously, really strong revenue here that you posted from the jump in small businesses. But going forward, what are your expectations?
Well, just a little bit of context for your viewers. We have over 10 million small businesses around the world that we serve and over 90 million consumers. So we've got a lot of scale. I'll start with small businesses. What I would share is their cash reserves is about 90% of what it was this time last year. So their cash reserves are down, but it's actually healthier than pre-pandemic. So they're still healthy, but they're having to work hard in this environment. Generally speaking, there's also demand for labor. They are still hiring. That's an aggregate. And then there are sectors, I would say, that are very weak, like transportation, real estate, advertising is weak. But overall, there is strength when you compare where small businesses are today, versus pre-pandemic. And I would say on the consumer side, a couple of things. One, if you look back to March of last year, credit scores are actually down about 13 points. Credit card balances are up about 30%. And Gen Z particularly, their balances have gone up the most. It's up 45% year over year. Now, the good news is we still have a very strong, job market. But consumers are feeling the strain of the current economic environment with inflation. But the good news is I think inflation is topped out and we should be headed for a better future.
Well, tell the Fed chair. That's been a topic of discussion all morning long. And we'll see what the jobs number brings a week from today. Sasan, great to check in with you. Thanks so much.
Yeah, thank you for having me.
Sasan Goodarzi of Intuit.
But we're just a few moments away from Cleveland Fed President Loretta Mester following Powell's speech in the last hour.
Then the Fed paying a lot of attention to the state of the consumer, as we just said. A firm with a unique perspective on that. Management says the business can continue to expand profitably, even in an environment of high rates. Max Levchin is going to join us in this hour. Don't go away.
Is the club.
More signs of life in the IPO market. We're now on the lookout for 2 startups that might file for an IPO later today. Our Deirdre Bosa has the details in today's Tech Check. Dee, what are we watching?
Which would make it 3 major filings just this week alone after a long winter that the IPO window has remained shut. So this could all set up September as the month the IPO window blows open again, or signals to founders and startups stay private. Don't take those valuation knocks. Now, Instacart is the one to watch here, where ARM is more of a spinoff from SoftBank and had few surprises, not many, in its financials. Instacart is more of your traditional venture-backed listing. We don't know much about its profitability or even its growth in the face of more competition. I've talked a lot about its advertising business, which could make its unit economics look better than those of gig peers Uber and DoorDash. But until we get that S1, we don't know anything about those margins. What we do know is that Instacart was at its peak.
Not for me. I want to see where we get up to. I want to wait and see where we get up to. Looks like we're going back up to test the opening price. So if we can get back up to 438-ish,
like
I want to see what we do.
Filing could also reportedly
Right,
drop
I want to
today.
see
It is
how
a Boston-based
what are we doing? So I have the daily
data
chart
startup
here.
that was valued at
If I
$9.5 billion
do
in
anything,
2021,
I will
aka
put it in
peak
the
software time.
chat.
Between ARM, Instacart, and Klaviyo, this is as
It's
much
just like
action as
there's
we've
not-
seen
I
in the
don't-
IPO markets for a
I don't
very
see
long
anything,
time, as
right?
I mentioned. But
I really don't.
I should note, it is not
I mean,
all
right
good
there,
action.
your retest to go
SoftBank-backed
short.
Better.com.
But you're above.
That company went public yesterday via SPAC, and
let me
it was
fix
an
this.
unmitigated disaster, guys. It fell more than 90%,
like, you know,
halting trade 4 times
we're
in the
doing
first
more
30 minutes. In 2021,
up and down
it
than
needed to go
anything
public
else. I'd have to
at
be.
a nearly
I'd have
$8
to
billion
just be.
valuation, and it was at $14
You know,
billion
kind of just
earlier
playing
this
the.
week,
You know,
based
I would
on
be
the
short right
post-merger
now.
full share
I would
count
take
in
it
its
down
latest
here,
filing.
right?
Dilution,
I would take it
post-SPAC,
back down
plus selling
here,
pressure
and then I would
now
go
puts
back
this
and flip
company
it to
at
the long
less
side. I
than
don't
$1
want to do
billion,
that.
Yet it still went
Right,
out.
this
Many
was a
people
nice trade if you were to
talked
get
can't
on it,
figure out why.
and I said that I wanted to get short,
broader
but it
again, there
never
are
gave me the
reasons
pullback. I was
perhaps
looking
to
for the
look past
pullback
Better.com
when
for
it put in this
instant
double
cards and the
bottom
like.
here.
One,
I was wanting to
Better.com
pull
was a SPAC,
back
and
up
investors
here
have
into
wised out to
resistance,
structure.
but it
And
never
two,
bounced
the mortgage
back.
rates are at their highest
It just
levels in more than
continued.
2 decades. So not a great time for a
So
mortgage
that trade
origination
was
company.
going. I kind
Big
of
economy and
noticing
software, they may be in
the
less
buying that's
precarious
taking place,
positions,
guys.
But we will soon see if
So
it
there's
is
1,000 there
bullish
on the
one.
buy
It's
side.
starting
Like
to feel
just
a little like
just take
2021
notice of the
again,
time in
guys. We'll see
sales.
if those valuations
What's coming
fall
through?
in.
Look,
Watching Uber, too, in
444
light of that, down
213
2% today. Dee, thanks
25
very much.
1111
As Fed
on
Chair
the
Powell
sales.
maintains his hawkish stance,
Um,
saying inflation remains too high. We'll talk to Mester
it
about
is-
it, see if she agrees. Next.
God damn this fucking camera. Getting tired of this fucking camera. Excuse my language. Getting tired of it. So, you know, we have some decent selling, but the buyers are also stepping in, and I'm kind of wondering. Everyone is trying to be bearish. I'm kind of wondering if Qualcomm 5 minute. I'm kind of wondering if, you know, especially if the Dow bounces. See, my whole goal is to be able to try and get in on this and ride this down to the 100-day. I feel like that's where we're going, right? I feel like that's where the SPY and Qs are headed. The Dow's been the leader. It's there. It just started to bounce off of it, right? The Dow's made it to its 100-day. I kind of just want to know if the SPY, if it's just a matter of time before the SPY and Qs get there. And that way, it would give you your rotation out of technology and into some of those type of names. But I'm also like, what if there is no rotation because there is no buying? What are you going to rotate into? Right? You're just rotating it to another stock that's up at yearly highs. So maybe we spend the next couple months, or like, you know, August, September, the next couple weeks and stuff, just selling, right? You're just shorting the bounces. You'll get, you know, you get a little bounce higher, you get short, right? The 50-day is pretty close. Maybe we run and gun for another test of the 50-day. We run it back. We run it back up here to like the Dow 345, the SPY. Again, I had to do a little bit more work, but you know, those are my thoughts. I'm gonna look up Qualcomm real quick. I think. So, Cleveland Fed President is on right now with Steve Leisman. Alright, looks like we're putting in resistance. I know it's hard to see these charts. I apologize.
Fadletics.com.
Welcome back. On the back of the Fed chair speech in the last hour, let's get to Steve Leisman with Cleveland Fed President Mester and Jackson Hole. Hey, Steve.
Hey, Carl, thanks very much. Yeah, here in Jackson Hole with a person we've had on quite a bit. In fact, Carl just refers to you as Mester. Not President Mester, not Loretta,
Hey.
Mester. You're just Mester.
Oh, look, there's the three powerhouses.
It's a sign of respect, I think.
ECB, Lagarde, and
Loretta Mester,
Powell.
the Cleveland Fed President. Let me ask you this, just, I guess we talked back in the spring or something like that, and how much has your view changed in terms of the outlook? You, as I recall, you had 2 hikes built in. Still 2?
So in the June SEP, which of course is
Summary of Economic Projections.
I had built in 2. Of course, we've done one of them.
Hold on one second, President Mester. It looks like Fed Chair Jay Powell's taking a walk with Christine Lagarde and the new bank president, I believe, of Japan, right there, whose name escapes me. I don't know if you guys can look it up in the back. I knew it, but forgot it. But there's Jay Powell with Lagarde.
So there's a bounce, guys.
Maybe
See
it's
what I
an
mean?
opportunity to
I'm
talk
not blind
about what's
to the fact
happening
that we
in
could
Europe
get a
too,
bounce
which
back
is
up.
they're sort of in a no
To just,
forward
you know,
guidance
bring
coming to
sellers
the end.
in.
Everybody's coming to the
Sellers
end of the rate
aren't
hikes
enthused
now.
at these prices.
Well,
They,
we're nearing.
they
We've
want to sell
talked
on the
about this
string.
before. Getting close to where we need to be. But I think we still have, as
Again,
Chair Powell said in his remarks this morning,
Mester
we have to be very
said that we're
diligent
getting
about
close
this.
to
We've come a
being
long
where we need
way.
to be on rates.
But we don't want to be
And I
satisfied
agree.
because
I think the
inflation
same
remains
thing.
too high. And
I
we need to
agree.
see more evidence to be assured that it's coming down in a sustainable way and in a timely way.
Right, right. What is it when you think about what's happening overseas in terms of Japan kind of ending yield curve control? Does all that help us a little bit?
Well, I mean, it just
Higher
shows
rates
that,
over
we've had common shocks, right? The pandemic, right, affected all economies. Different economies were different places to start. And what we're seeing is, and various countries took various actions. Japan is different because they were in a very, very low disinflationary, deflationary regime. So they started at a different place than some of the other countries. When we started our prior to the pandemic, we were basically at price stability. And so, what we did in our country was going to be different than some of the other countries.
So let's talk about that second hike that you were talking about. Is it still on the table?
So the way I look at it is think about what's changed in the economy since I wrote down those June projections. So we've had, I think, stronger underlying momentum in the economy. I think the growth rates have come in stronger. We've certainly made a lot of progress on inflation, but again, it's that underlying inflation rate which remains. Chair Powell talked about core inflation being around a little bit over 4%. That's still too high. So we probably have some more work to do. And I don't see that much that has changed in terms of my own outlook. What I think is very important is that we be diligent now. We have to be very careful. We don't want to over-tighten. We don't want to undershoot.
There you go.
And so it's that balancing. It's
they
all
don't
about
want to
risk
over-tighten,
management
so
now.
they got to be careful.
And
Look,
we are
I
in
know.
a restrictive policy stance.
Powell
and
can
then
say
it's the
all that
question
he
of,
wants,
do we need to
but I
move
know
higher?
for a
And then
fact
the second question
they're going to
is,
relax a
how
little
long
bit.
do
I
we
know
need to
they
have
are,
restrictive
and they
policy
know it.
before we're assured
They just don't want
that inflation is moving
anyone
back
to get
down
over
our
their.
2%
Did
goal.
you have cuts built into your outlook for next year?
No, I didn't
Get
in
over
June.
the,
But again,
they don't
I'm
want
going to
the,
reevaluate.
it's not that they don't want the
things
markets to rally. They
as
don't
we get
care
more
what the
data.
markets do. They're more concerned with
Just
credit spreads, but they just
gesturing
don't
over to
want to
Fed Chair
just
Jay
give
Powell,
that sign
inviting him
that
to
like,
join
oh,
us.
everything's
But,
good,
he
like
declined
everything's
that
good,
invitation.
inflation is
Maybe
solved,
next time.
and in case it's not solved, they need to be.
But let's talk about, did
tell
you have
the
cuts
markets
built in
that
June?
they're-
I
they
did
could
not
be
have
doing
cuts
more.
built in
Okay.
for next year.
But for now, they wanna give
we're
it
gonna
some
look at
time. I
all
know
the
they
data. There's data coming in. We got to evaluate that, and then we'll have to see where things are. As inflation moves back down, of course, real interest rates, even if we hold the nominal rate constant, move up. And so we have to balance that again to make
All
sure
right,
that we
Blackberry's
are
on and
setting
popping.
policy
There we
in order
go.
to get inflation down, but also not over tightening. And that's going to be the discussion later. I think right now the discussion is, are policy rates in a restrictive enough territory to make sure that we can reliably have inflation move down to 2%.
I guess I could ask you how you figure that, but I think I know the answer. It's a sustained period of inflation
Yeah, we
coming
need
down.
more evidence to see. I mean, it was very good to see the numbers, the recent numbers, but we need a couple more of those readings to be assured. I mean, there are base effects in some of the numbers, and we know that they're affected by movements in, if you think of total inflation, it's movements in some things that really aren't affected by monetary policy, like energy prices, food prices. So we just have to be a little bit patient now in terms of what evidence we say. We don't want to, this isn't a game where, everyone gets a trophy. We only get a trophy if we get inflation back down to 2%, and we're committed to doing that.
It's not fifth grade soccer is what you're saying. With apologies to the fifth graders. I want to go through a couple recent developments since the June SEP. Chair Powell today talked about the idea that growth is maybe running a little bit stronger than expected. Is that a concern of yours?
Well, it's not a concern, but I think it's one of the factors that you have to take into account when we calibrate monetary policy. What I wouldn't want to have happen, I had basically inflation getting back down to our goal, right, by the end of next year, right? And the SEP had it a little bit up, 2.2% by the end of next year. I wouldn't want to see that drifting farther and farther and farther out.
Sorry, guys.
Right, so when I'm putting together my next SEP, right, I'm going to ask myself, okay, if I want to get inflation back
I
down
didn't
to
do
2%
anything,
in another
man.
year, right? Where would I need to have policy?
I
And
tried
that's
to
the
get
thought
short
process
the
I'm going to go
S&Ps
through.
up
And I
here,
think
but I
that's
never got
probably the right way to think about it
chance. It
because,
never gave me
you know,
that
this
pullback I
inflation,
was
high
looking
inflation has
for.
been with the economy quite a long
It's
time
just one of
now.
those days, man. It's choppy.
And there's
some
concern it
nice
might become
range here.
entrenched.
Well, there's
If you
concern
can
about
catch
that,
it,
but even if you
there's
could
some
say
nice
it's
range.
going to
So I'm gonna
eventually
look
get
for some
down,
small caps or
right? The
something
price
that
level, right, is still
is
high,
high.
and if we keep
I'll
having
keep my
inflation
eye on
well
a
above
couple things.
2%,
Day's not over
people are
with.
actually
We'll see
paying
what
higher
happens.
prices.
All the time.
Yeah,
right?
and so
Maybe-
that isn't something that I think we want to have perpetually embedded in the economy.
Another development since, say, that June SEP was higher long-term interest rates. Is that a problem that you think has? Is it too high?
Well, I don't think it's a problem. I think it's actually, you know, that's going to be part of the calculus. You know, that's a more restrictive stance of policy, and so that actually helps to put downward pressure on inflation. I think the the other, thing to think about there is what does that affect in terms of the financial system
The
and
banks,
banks,
which have had problems already.
Yeah,
adjusting.
I mean, I talked to a lot of bankers. We have several large regional banks in our district, and they're all already taking actions to shore up their balance sheets, to put them in a better liquidity situation. So again, I don't see that recent development, and you're right, they have moved up quite a bit since June, is necessarily a separate factor. But again, it's part of the calculus of how restrictive do we have to be on the policy rate. That's actually putting downward pressure on inflation.
I want to come back to the growth story because Chair Powell reiterated again today that bringing down inflation will require a sustained period of below-trend growth. He said that last year here, didn't get it. It's been 2% plus, and maybe the third quarter's off to the races. Do you have to see a period of below-trend growth in order to feel comfortable inflation?
I think it's very likely that growth will be below trend in order to get inflation back down to 2%. I mean, that's kind of what all the
We actually
the
have some
models,
decent volume
history
today, guys.
have
Look at the
told us.
volume.
We have made progress on
I mean,
inflation,
obviously,
but remember,
because
core
we had
inflation is still
Powell,
above 4%. So again, we can't we don't want to overinterpret.
I'm sorry to interrupt, but that begs a question. As a policymaker, right, you are not a neutral player as to all of the outcomes, right? You get to choose to some extent, or at least coax such outcomes. Do you think that you'd have to induce this period of below-trend growth if you don't get it? Would you do so?
I think that will be a signal that policy is probably too loose to get back to 2% in a timely and sustainable way.
There's my entry.
So we need to sort of see
There's
the
my
demand
entry.
falling, moderating
I haven't
to get
taken it
matched
yet,
to supply. Of course, on the other hand,
We're damn
supply
near
is
at that
actually
439. And
improving,
look,
right?
look
Supply
how it
chain
ripped away
disruptions
from
are
that price
improving.
area.
And on the
Keep
labor
that
side, we
in your
have
mind.
seen a higher participation
Just seen
rate.
how
So
it
there's
went
two
back
things moving,
and
right?
ripped
We're
down
moderating
from that
demand
level,
with
and now I
our
got to log
monetary
in.
policy,
That was the
and
level I
supply
was looking
chains
to
are
get
improving.
short.
I do believe, given all I know about economics, that we're going to have to see growth. Right now growth is above trend, right? We're going to have to see growth go below trend, and that's in
Tape
all the
sped up,
forecasts.
and
that
it
we're gonna see that
quickly
below-trend growth.
quickly
Doesn't have to
ran
be a
away from
recession,
that
no.
level. And I'm talking
Are we
just
aiming for that?
that
No, we're
second
aiming to get
candle when people
inflation
noticed
back
that it
down
was
to
back
2%.
there.
Right now, there has been no trade-off at
It
all.
ripped away from
in
that
terms
level.
of bringing inflation down and a rising unemployment rate. Does that surprise you?
I think the labor market has been stronger than I would have anticipated given the level of interest rates. But I'm also very cognizant of the fact that the pandemic episode, and we're still having the effects of the pandemic, right, and the aftermath of the pandemic and the policy actions taken that were required during the pandemic affecting the economy. So we shouldn't be that surprised that perhaps some of these typical relationships are not necessarily being borne out this time. And that's what makes this a challenge, right, is that there's uncertainty around, and that's why it's very important that we're diligent. We have to be very judicious about what we're doing and very conscientious, but we are committed to that 2% goal.
Let's actually kind of wrap it up and conclude. We went through the period during the pandemic of sort of very strong forward guidance. You were going to do this for a long time, and we weren't thinking about cutting rates. Where are we now, in your opinion? How would you, to a layman, for example,
With her
explain
saying
where
that they're going
policy is, what kind of modality policy is it right
retracing
now?
everything.
I think we're looking
Powell
at data
said,
to tell us how much more restrictive, if any, we
Even
need
though
to
I
be
still
to
think
get
we get it
inflation
pulled back down to the
2%.
100-day.
And
It's
that's
12 o'clock. It's
what's
lunchtime.
happening now.
Not
I
sure
think
what
everyone
type of volume I'm
understands,
gonna
right? The
get
policy is
behind
currently
me
restrictive
on that trade.
right? It's affecting the economy. We
I'm gonna
have
watch
seen
it
growth
for a minute,
moderate.
and
we have
I'll make a
especially in
decision.
the interest rate sensitive sectors. And now it's just a period where we have to stick with it, right, to make sure that inflation gets back down to our 2% goal, and we'll do that.
President Messer, thanks very much for joining us.
Thank you.
Hey, Cantonilla, Leisman and Mester, back to you, Bub.
It is a form of respect, Steve. I'm glad you pointed that out.
I know you meant that way, Carl. Nothing but respect from you.
Thank you, Steve. And I'm also wondering if you have a new line for a new song, "Navigating by the Stars Under Cloudy Skies." Feels like a lyric for Steve.
Under cloudy
in his next
skies, that's a
performance.
great line.
Don't you think?
He's a bit of a musician, that Powell.
I
He
think
does
you
play a
could,
little
you could,
music, so
and
maybe
you could
he's,
incorporate it into your performances as well. "Navigating by the Stars Under Cloudy Skies."
You know what they say, Courtney? Good writers borrow, great writers steal.
I know
So
that.
there you go.
That is true. Thank you very much, Steve and Loretta Mester. Wonderful to have you both with us. Well, a firm showing it can grow revenue even in a high-rate environment, but only a quarter of analysts say to buy the stock. Shares jumping after results. CEO Max Levchin joins us next. Don't go away.
If the tape starts to speed up here and it makes a decision to break that level for 37.89, there it goes. Look at the sales coming in. There it goes, coming down the VWAP. A little bit of buying. Come back up to turn it into resistance. Right, should bounce right back up here and turn it into resistance. Let's bounce it back up. Shake them out. Or make the crazy decision to get long. That's another option as well. Not me personally, but them. So there we go. Let's turn it into resistance. Bang. Do you see that flash? That flash of a ton of red. Right? That's where orders are sitting now. Damn it.
Who joins us with the CEO? Take it away, Kate. Yeah, thanks, Courtney. Joining us now in our first on CNBC interview, Affirm founder and
Let's see what happens.
Max, it's great to see you. Thanks so much for being here.
Athletics.com.
Welcome back. Profitable expansion in a high interest rate environment. That's what Affirm said its latest quarter demonstrates. For more on those results and the consumer, let's get over to Kate Rooney, who joins us with the CEO. Take it away, Kate.
Yeah, thanks, Courtney. Joining us now in our first on CNBC interview, Affirm founder and CEO Max Levchin. Max, it's great to see you. Thanks so much for being here.
Thanks for having me.
I want to start with Powell's comments, if we could, and your reaction to what he spoke about in Jackson Hole, essentially. Rates could be higher for longer, talked a bit of a more restrictive policy, and inflation still being too high right now. How would that affect Affirm's business, higher rates for longer? I just want to get your take on that.
Yep, I think we are prepared for any eventuality. The events of the last 12 months when the rates went up at an unprecedented clip have certainly been plenty tumultuous and made our capital markets partners wonder how to price our products appropriately. Now that the Federal Reserve has accomplished some of its goals, not all of them, they're able to communicate much more clearly what the policy may be going forward, settles the markets down, makes our job a little bit easier, certainly makes our ability to execute on our mission much, much steadier.
And so you're prepared to operate in this higher rate environment?
Absolutely. We just showed that we can maintain the target range of revenue less transaction costs between 3 and 4% in this environment. Whether they go up a little bit more or stay where they are for a long time, we're quite prepared.
Yeah, that line item seemed to surprise analysts on the upside, that RLTC line item there. I want to ask about the health of the consumer. You saw a drop in delinquencies despite some of the fears out there about consumer credit. Can you walk us through that? And how's the consumer looking from your vantage point?
First of all, it's not an accident that the delinquencies went down. Credit, as I've always said, is job number one at a firm. We're keeping an extremely attentive eye on our credit performance. So we will continue executing on everything we must do, growth and expansion included, but credit must remain within the target ranges for us. And so that said, consumer is actually doing all right. It's sort of the same story as it was last quarter. You can see that some categories are up a lot. Travel, ticketing are still performing super strongly in terms of consumer demand. Folks are trying to get out of town and pay their bills to do so. On the other hand, plenty of categories are suffering. Lifestyle and outdoor equipment is quite down year on year, and we're seeing that in consumer demand. But generally speaking, U.S. consumer is still buying things. They're still paying their bills. They're still quite solid.
Outdoor products, that's interesting. I also want to ask about the student loan moratorium. You talked about that as a potential headwind going into the rest of the year. How should investors think about people's ability to pay these loans when they now all of a sudden have to start repaying student loans as well?
Yeah, it's already entirely priced in, if you will, into our forecast, and much more importantly, it is long incorporated into our underwriting models. And so we know what we have to do to make sure that that does not impede our growth and our profitability, but we do think that there'll be a modest percentage of folks that will be impacted within our consumer base.
The debit card got a lot of buzz on the analyst call. People were really focused on that. What's the value proposition there? When will it meaningfully start to add to the bottom line for a firm?
It definitely started adding to our growth this year. We showed that our direct-to-consumer business, as we call it, accelerated sequentially quite a lot, and majority of that acceleration is from the card. I have my prop right here. I'm super proud of the card. It took a long time to get it right, but it is probably the first innovation in card products, credit, debit, or otherwise, in the last 30 or 40 years. It's a card that allows you to elegantly separate pay now and pay later, make it a very easy but a conscious decision for consumers, so you don't have to revolve on the things you don't want to revolve on. And so it's a great product. We're seeing excellent consumer uptake. People are loving it. I get lots and lots of inbounds from consumers telling me what other features they want to see. I'm very active on Twitter lately as people are telling me what they want to see in the card next. So just very excited to keep working on it.
So is something like a debit card enough to re-accelerate growth? A firm's growing volumes at 20% or so, but it's down significantly from sort of the COVID area, 60% growth. Can some of those banking products re-accelerate growth? Is buy now, pay later enough? I just wonder what you're thinking in terms of growing volumes at the pace that you once were.
You know, I think so. I think we have a lot to keep taking in the market. In my letter, I pointed out that we have taken less than 1% of the total addressable market for this company. So we have lots and lots to go before we start running out of ideas. Debit card, we have a lot of very cool features planned within the card, outside the card. We have excellent growth, faster than our overall growth with our platform partners. We've been able to attract partnerships of some of the best e-commerce platforms out there. So there's a lot to do, and we're very excited to do it.
I want to ask you quickly about artificial intelligence. I know it's something you've thought a lot about. Does it have a role in underwriting for a firm?
So we use machine learning everywhere within our underwriting. You know, we've been in the machine learning game since the very beginning. We also use generative AI, which is a little bit different, to enhance the productivity of our engineers, and lately have been using generative AI in very carefully to make sure we don't make any mistakes, to help our servicing productivity and our customer service. And so we have a whole collection of efforts in both AI and machine learning, and have been taking advantage of the technology for quite some time. So there'll be more fun stuff to talk about at some point once we really get to show off with that.
And Max, quick last question. Apple getting into buy now, pay later. You're seeing a lot of competition from other tech companies and the banks as well. What's your thought on the competitive landscape out there right now?
Again, 1% of the market taken by us, and probably not a lot more by everyone else. There's still so much available greenfield, not too concerned with it. Apple did one amazing thing for us. 10 years ago when we started, we were laughed out of rooms when we said we're not going to charge late fees. Fast forward to today, Apple kind of put their stamp of approval on this market and said, yeah, if you're going to do buy now, pay later, you better not charge late fees. I think it just became a lot harder for some of my competitors who haven't gotten the message yet to compete. So that's been pretty positive for us.
Max, we'll have to leave it there. Thanks for your time today. Appreciate it. CEO and founder of a firm, Max Levchin. Courtney and Carl, we'll send it back over to you.
All right, Kate, great stuff. Thank you, Kate Rooney with Max. Markets, meantime, trying to find their sea legs, digesting the Fed chair's comments. Back in the green, even as the 2-year hits about a 1-month high on its yield. Back in a moment.
Eastern.
We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective.
That's Jerome Powell in the last hour, remaining hawkish, some argue, and saying there's more work to be done. We did hear from Cleveland Fed President Mester moments ago, who was essentially on the same page, that the Fed has more effort to do before bringing inflation back to target. That said, market.
That's crazy, man. That's where we needed to be short, right there, guys.
Yields have changed a little bit. Dollar about a 2-month
high,
which says a lot about just the growth prospects in this country versus, say, Europe.
Absolutely, and the VIX still below 17. WTI trading around where it was before, just around $80, a little bit below there. I know we were both taking notes, and I just kept writing down when Powell said things like substantially further to go, concerned that the economy is too strong right now, substantial ground to cover to get back to price stability, sort of, not really tipping his hand, but at the same
Chapter
time,
11
not taking a
bankruptcy
victory
on
lap
Rite
at all.
Aid.
It didn't seem, not to me.
No, I did argue in some areas that
bang, Rite Aid's down, guys, down bad. Oh, it's already still at $1.50.
That drag does exist. I think the word optionality got tossed around a lot today, sort of leaving his options open, something for everybody.
You can see how, well, if we go out unchanged on this speech, it's going to be fascinating. Meantime, next week's going to be very busy because we are going to get jolts on Tuesday. We know how much the Fed pays attention to that picture. China PMIs, European inflation, our own PCE, and then jobs Friday, where the estimates are still coming in around 170, but not above that 200K level, which is something that would make the Fed nervous.
Yeah, absolutely. Still a lot more data for the Fed to sort of put into its forecast to determine where we go. Although it does seem like September is largely off the table, at least by the market standards, for another hike, but November potentially still in play. What a session that we've had here so far. A lot of action from Fed on a Friday in August. Nice to have that.
Yeah, everybody's been obviously paying attention to the speech. It's one of the last major catalysts of the month.
Absolutely.
And then next week, I guess we can talk about
the
volume and whether or not everybody's on vacation before we really get back to work.
That's right. September right around the corner.
Court, thanks so much. Great having you.
Thank you. It was great to be here.
Let's get to Post 9 and the Judge.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Reaction to the Fed Chair's speech, what it means for the markets and your money in the months ahead. The Investment Committee debating all of that. Joining me for the hour today, Carrie Firestone, Joe Terranova, Jim Leventhal, Rob Seepchin. Let's check the markets because we've kind of been all over the map since Jay Powell spoke. Right now, the Dow's positive, S&P's fighting it out. It's up 1.5. NASDAQ is negative. Yields have since moved higher. There's, I think I just saw 425 on the 10-year. Joe, okay, so we're parsing every word. We knew we would. What's the market reaction telling you about what this means now?
We had two catalysts to defeat the seasonal weakness this week, and we're 0 for 2. It's still a sell the rips market. Chairman Powell did nothing more than read me yesterday's newspaper. The market had already priced in exactly what he said. The market realizes that the risk is that the economy stays longer than the Federal Reserve is comfortable with, and that they're going to have to raise rates further.
So that's when he
That's
said,
what the Treasury market has been telling us.
So you're hanging on the persistent signs of above-trend growth could put progress on inflation at risk and warrant further tightening. Those are the words that you think matter more than anything to the market right now.
Well, that's what's mattered to the market in the last 3 weeks, and he's just reiterating that. Quite candidly, I think he's wrong. I think he's a classic example of a trader who is right, but early. I think the inflation is going to ultimately prove to be transitory. We've got $1 trillion of fiscal stimulus that will begin to fade out. You have disinflation in China and in Asia that is ultimately going to be exported here. I think inflation is going to come down. I just don't think it's going to come down fast enough, and he's going to be doing a little bit too much.
Okay, so the read, Jim, on the chair was that he was more hawkish than not. I'm not trying to just be an automatic contrarian or anything, but I was hanging on the lines a little bit. Uncertain about the lags.
Yep.
He said might be, quote, significant further drag in the pipeline. To me, that sounded like somebody who was looking at a bar that was kind of high to doing more, like concerned about what sort of lags have yet to be felt. I don't know if we should be focusing on that a little bit more than perhaps some are.
I will agree with you that he was, I'd call him hawkish. I don't think, he wasn't dovish. Certainly no talk about cuts, right? There shouldn't have been, and there wasn't.
Maybe it was just neutral.
Good. Yes. Okay. And the reason he's neutral is because he's saying, look, last year he punched the market in the face. This year he's saying, I'll do it again, but I'm going to wait and see what the data comes in and tells me. He says, we're ready to raise rates. Going to wait and see what the inflation data does. 2 months isn't enough. Also acknowledged again the long and variable lags. Doesn't know where R star is. Nobody knows where R star is. It's not something, you look up on the Wall Street Journal front page. So he's acknowledging, he did this at least twice. He acknowledges there are risks out there, and they're going to be very careful with how they proceed. Not changing the inflation target. That's silly. That was not going to happen. That's not a one-man decision.
Oh, he underscored 2%, right?
Yeah.
I mean, what is he going to say anyway?
No, he can't make that change on his own anyway. And if they were going to make it, you hear a lot of people saying it. So that was off the table. Look, ultimately, just simplify this, data dependent. So Joe, to what you were saying, I agree with you. I think inflation's going to come down. On that note, last thing, he did acknowledge the lagging effect of rents in the stated CPI numbers. I think that's important. He knows that.
Rob, so Joe referenced 0 for 2. I know what he means. The first one's clearly NVIDIA, right? They knocked the cover off the ball yet again. They round the bases, and we think, okay, the market's going to react positively to that. Didn't really. It's kind of muted, actually. And now you got Powell. The market's not sure really what to take from all of it. So where does it leave us at a time where the S&P is now down 4.5% from its 52-week high? If we're in a correction, it's been mild and modest to this degree, to this point. What now?
So I think we're in an environment where you had the speech kind of play out this way. Maximum optionality with some hawkishness. So trying to preserve that soft landing narrative. NVIDIA yesterday is really interesting because the traders reacted positively and then the investors considered and they decided that it's probably a time to be mindful of risk. You look at what happened with Microsoft. You look at what happened to some of these big names. And that's what happens when you get extended. You are incredibly, from a valuation perspective, you're incredibly vulnerable to disappointment. You're incredibly vulnerable to a change in momentum. You're incredibly vulnerable coming into seasonal weakness. And I would say that positioning should reflect that, being mindful of price.
I mean, there is talk about, Michael Hartnett, Bank of America, who does their flow show and who puts out some, I think, pretty thoughtful research. They continue to say tech, second half trouble, rather than an era of what he calls new AI rules. Higher for longer, rates and yields will cause pop and bust, sell the last rate hike. So seasonality is not your friend right now. Carrie, that's something we have to contend with, too. It's been not a great August, obviously, and now we're going into a couple of months that are traditionally not great either for investors. So we got NVIDIA, we got the Fed chair, you got a jittery market. What do you make of it?
Well, the market obviously cared a whole lot more about what Jay Powell said than what NVIDIA said. And that tells us something. We're really caught in this kind of intense scrutiny of everything the Fed is thinking about doing, saying what they might or might not do. It's really pretty tenuous when you think about hanging on every single word and parsing every syllable. So I think that what we can take away from this is we haven't had a recession. We can argue with the timing of what Jay Powell has done and the Fed over the last year and a half, but they haven't caused a recession. Inflation has come down. The market is only off 8%, roughly, from the all-time high.
Right.
So that's pretty impressive. I know down 4%, but it hasn't had, recently, it has not had a big drop. And earnings seem to be okay, not fantastic.
My day's going good, Chris. How's yours?
Retail,
I didn't really get into anything.
The biggest companies have held their own.
How about yourself,
so
man?
I would
How about
say
yourself,
neutral
Glenn?
is the right word right now. The market
Hopefully
is flat.
good.
It
felt like
there's many
small caps
buyers
were
and
starting
sellers
to,
today. So people were taking away from this, I guess,
small
what they
caps
expected.
were starting to pop up.
And that's fine. But we know that they're not going to raise rates, or we presume they're not going to raise rates in September. And let's see how
like
the
GDP
numbers come in and what we hear from companies that report.
All right, so we got a lot to get to on the show in terms of trades we need to talk about that people have made.
To see what's going on.
We'll
when
size
I get
up
back.
the market in the weeks ahead. We've got
walk
Austin Goolsby
real
coming
quick,
up at 12:30 here with Steve Leisman from Jackson Hole. Let's, in the
thanks
meantime,
for
bring in
stopping
Richard
by,
Fisher,
Chris,
the
man.
former
Appreciate
Dallas
it.
Fed president, before we get back to some,
and I hope you guys are having a good day. It's
actual,
like, it's tough to
Mr. Fisher,
sit
good to see you
here
again.
and
it's good to have you today.
kind of just get whipsawed around.
How much more
you don't really have clear
are Jay
direction.
Powell and company going to do?
You know we're resistance and you know we're supporters.
I don't think they know, and I think he was very frank about it. He's navigating by the stars.
The later we get into the end of the day, it's going to just get slower and slower.
Having navigated at the Naval Academy as a midshipman,
especially after lunchtime,
when you can't navigate by the stars, you end up navigating boats called dead reckoning.
It is a shame that summertime.
There's a lot of uncertainty there, and I think that's
pretty
what
much
he
over
is frank about.
We're going right
the
in.
one thing I think
I figure
our panel
September
and
is it,
observers and pundits should
October,
realize
November, it gets cold.
there's no GPS to monetary policy. There's no
December,
precision.
But
it's a matter of judgment.
I don't know.
And you want to have an experienced captain steering that ship.
It's been a really good summer this year.
What I like to remind people
about. It's
been
a long time since I've seen the market.
Place, either as governor or as chair.
It was every day, or every week.
He's an experienced captain,
the market,
experienced skipper.
And
what I like about him, instead of just
the S&Ps, the overall markets couldn't take a break. It was CPI, and then it was Powell, then we get PPI, then we get PCE, then we get
still.
ISM manufacturing. Oh, we got Powell again with CPI, PPI, inflation.
Okay,
an event, China, right?
It's super clear.
It was just
they will not
boom,
abandon
boom,
the 2%
boom, boom,
target
and it's still
while
doing
he's
it.
chair.
It's crazy.
They will not
it really is. It's crazy.
indulge in serious discussion
yeah,
about
I'll be right
R-star
back.
and neutral rates.
And then add in earnings there, you know?
That's theoretically a concept, but they're navigating in the real world, and it's a very difficult world right now.
You say he's an experienced skipper, and of course he is, but he already misread the map once when he talked about transitory. And now the
you and I talked about this many times, Scott.
But let me finish. Let me finish though, please. The worry now is that people think he's going to drive us into an iceberg by doing too much, because even Mester says, it's all about risk management. Then my question to you is, are the risks now skewed towards doing too much? Because even the chair himself today says we just don't know about the lags. There could be considerable drag still to come.
I like the iceberg thing. I can just see him and Janet Yellen on the bow of the ship. So it's quite an image. Yeah, but I think he's been frank about that too. Remember last year he talked about you're going to create some pain. And it's very clear the singular focus here, as long as we have the kind of employment numbers we have, the kind of growth numbers that appear to be manifesting themselves in this quarter, they will err on the side of quelling the inflation drag. And that's their singular focus right now. They're lucky the economy is relatively strong still. Employment's at a 50-year, unemployment's at a 50-year low. The pressures on inflation are coming down. They're disinflating, but they have a job to do. And what I get from the talk, following on last year, it's a continuum. They will keep at it. Loretta made that very clear in her interview.
Mm-hmm. Do you think the economy, the one you just referenced, has thrown a wrench of sorts into the Fed's plans?
But I mean, it's just another variable they have to take into account. It's actually good news, Scott. We're continuing to steam along. I'm going to kill the naval analogy here. We're still steaming forward. And we have a very good skipper at the helm and a good committee that's advising him. So I think this is good news. The market has reacted in a way, to the degree markets react, pretty neutrally here, as was just discussed. So we've had a severe correction. The market didn't overreact to that talk that he gave this morning. And we're speed, and the boilers aren't over. Still a little bit too hot. How's that?
To what degree should he maybe declare victory? If he doesn't need to go on the aircraft carrier with mission accomplished, but look, I mean, from where he was last year, inflation's come way down. The economy has stayed strong. They've done a pretty good job of getting us to where they are now. Earlier mistakes aside, I mean, whatever. It's about what have you done for me lately? And the economy's pretty good, and inflation's going in the right direction. He knows there's still lags to come. So maybe just step back, take a seat, see what happens.
Scott, put yourself in his shoes. He did make a big mistake by letting the staff convince him the transitory argument was sound. He has 2.5 years or whatever left. He does not want to make two mistakes in a row. And the worst mistake he could make here, or the committee could make, is to see inflation start to come up again or not continue to go down. He has to worry about his historical legacy. Now is the time to correct for embracing the transitory argument and waiting too long. And I believe that's, if I were him, I would be very conscious of the need to make sure I don't make, because then I go down in history as not being a good Fed chairman. Correcting for getting off course, and now he's back to stay that course as long as he's chair.
Okay, and let's wrap it, because I've got Austin Goolsbee. Got to get to some things before that. 2%. I know he said, but to say it. Right. When do they first cut rates, do you think? Presumably, they're not going to wait, obviously, until you get all the way to 2%. You got to feel like you're on the steady course there, to continue to use this analogy. Is that right? I mean, when does the first cut come, do you think?
I don't think it comes till sometime late next year.
late next year. So in calendar
unless
24.
Unless the economy implodes, and we're nowhere near imploding. The manufacturing sector's got weaknesses, obviously. Some of the transport folks do. But the consumer, which is not as robust, is still driving the economy. And unless we have an implosion, we see a sudden rise, significance in employment. Well, I don't see a need for them to cut. They have normalized rates. We were living in an artificial environment for far too long. It distorted price discovery. And now we're getting back to a decent rate structure. So I wouldn't feel the pressure. It depends on the economic circumstances, obviously. Or if we start to deflate. I don't see that in the cards.
Richard, I always like talking to you. We'll talk to you soon. Thank you so much.
Thank you, Scotty-san.
All right. Bye-bye. That's Richard Fisher, the former Dallas Fed president, joining us. All of this plays into, the rate picture. Let's just move it from the Fed and rates to tech, okay? Because that's the other big variable this week is what happens from here forward. It's been a rough month, as we know, Rob, for tech. Apple's down 9.5%. NVIDIA's down 2% because it had a big ramp even into this week's earnings, and then the reaction on the other side. Meta's down 12%. These stocks have been uncertain. They've been unsettled. They've, to some degree, gotten us to where we are now. We wouldn't even be having a conversation about the strong market this year without it. So what happens now?
So I think you're in a really precarious spot because on the one hand, tech has been a safety trade. Now that's in another era when they were priced differently, but that was the flight to quality trade. And now we're talking about an environment where the earnings are really exposed to long-term interest rates. And prices are much different than they were then. So if you get this environment where tech starts to break, and it's certainly looking like there's the initial phases of some breakage, I think you can see some massive decline. Now, the demographics of NVIDIA are obviously very different because of AI and everybody playing to catch up. When Meta got to that place, it fell enormously.
But those were self-inflicted wounds. Those were taken.
But think
NVIDIA's
about
not
when
doing that.
They're definitely not. But think about when you reach these price to sales levels, as they have reached before, they tend to bounce off them. All I'm saying is you are vulnerable to a change in momentum, to a change in sentiment, and these stocks re-rate very, very quickly. Very quickly. You're seeing it in some stocks today. So I'm not worried about the long-term fundamental thesis for these names. They are very strong. AI is going to drive productivity. You're not seeing it in any of the earnings yet, except for NVIDIA, which is a pick and shovel company that sells into this space. You're starting to see it in some of the other businesses that help build AI. But even Microsoft, which is arguably has the preeminent strategy in the space, is selling off over the last few weeks. I mean, I think we are vulnerable into this seasonally weak period with momentum breaking down.
Wells Fargo says say it's totally what? They say, hold on. Wells Fargo on mega caps. We favor Uber caps for the remainder of the year. In a quote-unquote melt-up, we expect a narrow market, which we had before, with Uber caps leading the parade.
I think it's totally fine if you see a correction in the mega caps into what is a prevailing bullish trend in 2023. What happened in 2022 is you had a prevailing downtrend that reached a crescendo at the end of the year with significant tax loss harvesting. This is a completely different environment. I think what's also happening right now is there is no institutional buying in these mega caps. We witnessed that the other day from NVIDIA. So positioning now comes back into play. If in fact we experience the seasonal weakness, which obviously the indications are that's what we're experiencing right now. On the other side of that, if technology restores its prevailing bullish trend, you're going to have the general portfolio manager on the institutional side that's underweight technology. That creates what I've said all along is a Q4 chase for performance. Right. I believe that's real. I think that's coming in 2023. Listen, in the interim, I run an equal weighted strategy. So I own technology differently, and that's had a negative effect on my performance year to date because you should have owned the market cap.
Don't we look at what NVIDIA delivered, though, Jim, and say that you can't tell me that these stocks are going to go down a ton, because if they come down at all further from where they've already done this month, it's going to be snapped up by the dip.
Yeah.
By the dip may be narrow, but by the dip in those names.
Yeah, I think that's exactly right. But even before you get that, where I think we are right now is people are saying, Joe, you and I and Rob, we're not the only ones talking about seasonality, right? So if you are worried about that, I've been raising some funds. Other people have been raising funds. Where are you going to go to? I mean, how big, if you owned NVIDIA at the beginning of the year, or Apple or Tesla or any of these names right now. So if you're going to raise funds to just off the market for the next month or so, that's likely where you're going to take the funds from. And I totally agree with your supposition. I'm one of them, right?
I'm thinking of you as you're talking. You're the poster guy.
As these techs raise some funds, right? I've raised some funds, cyclical non-tech names. I'm going to let these names come in probably over the next 2 to 3 weeks. Half of September, this will be over. Joe, I'm in complete. Usually, I mean, just history says when you have a strong year, you're likely to get one heck of a Christmas rally. I mean, you really are.
But see, look, you bought NVIDIA this week.
Yep.
You were out of it. You know, we use the train analogy all year of this train tracks.
Yep.
It's like that's where the party is, and eventually you run fast enough. The train pulls back a little bit and slows down. You have a chance to get on, which you did. Now, Carrie, take that to the next level, though, before we take our first break. Are there a lot of gyms out there? Those who aren't in the NVIDIAs, those who are still institutionally underweight mega caps. And does that save the day in these names?
The answer is going to be yes. I mean, first of all, no one is overweight Apple and Microsoft. I mean, very, very few people, because they're 7 and 6% of the S&P. But a lot of people don't own NVIDIA. They certainly don't own Tesla broadly. I think that Meta has been a stock that people have been piling into, but still there are lots of people who haven't believed. And Meta and Google both trade at market multiples, slightly lower than market multiples, in fact. The expensive stock on the price to sales basis, as Rob alluded to, that's NVIDIA. It's not really true of the others. In fact, you can make a case that the PE multiple of the 4 largest names, Amazon, Apple, Microsoft, and Microsoft, where are we? Amazon, Microsoft, Apple, yeah.
I feel, Chris, I get it.
That's
Today's
exactly
even
the same as it's been for the
whether
top 4 names for the past 20
not
years.
experienced. I didn't trade today because there wasn't much volatility. There's a little bit of whipsaw, one direction, one way.
August,
same directional momentum the other way,
and
it's
I don't put much
if
into
the market doesn't give you a direction, you really want to, unless you get one of these trends up and down, which I thought about getting short up here and didn't get my re-entry here. I was hoping that we would bounce back off of this level to bounce back to VWAP, but didn't happen. I'm kind of thinking about what it is that I'm going to do from here on out. What do I want to start thinking about? Do I want to just think about the long? Like now, we could possibly get ourselves a small rally into the close. We could just take our time.
Read the room, boys.
We could honestly just sit here where we are too, though. It wouldn't surprise me either way.
Coming up, a big upgrade for a stock that's already up 40% this week. Why one analyst sees another 20% upside ahead. We debate it. Plus, we'll take you live to Jackson Hole for a first on interview with Chicago Fed President Austin Goolsby's coming up. Halftime's
maybe
back
there's some opportunity around here. Yeah, there's nothing is really moving today. There's just. I had a feeling it was going to be like this. We got the positioning yesterday, and so it's all good. That's it, doing what you're doing and not, trying to do too much is, it's saving you money, and that's the goal. It's not, you're not hurting your account. At least you're not doing that. I'm going to search real quick. I'm going to fix this camera. Give me 1 second. I'm not going anywhere. I'm here. I'm going to see if there's small caps. I'm going to run through the scanner real quick and see if anything is lining up for like a lunchtime bounce. See what I mean? See these small caps popping off? Alright. Here they are. They're starting. Where's DWAC, drugs, and top? Tops, I mean. Why'd you get out of it? Would you? That's. Where do you guys hear this? Listen to this. He's like interrogating him.
Us.com.
All right, listen to this, guys.
Welcome back to our call today. It's Netflix upgraded to buy at Loop. The firm sees the stock heading to $500. There it is, just north of 400. Gain of 1 1/3% today. So you sold, Joe. You did Netflix during your rebalance in July. What do you think of this call?
How about this? I agree with the call. I think the call's right. I think Netflix could go to 500. I think what they're citing fundamentally, all the reasons are valid. They seem to make sense to me.
Why'd you get out of it? You have to
understand.
Why'd you rebalance it?
Because
Why'd you get out of it?
We have rules that we follow, and the rules have worked for us.
Maybe it was me. It just sounded a little bit funny.
Of 2021, we sold Netflix at $513. We bought it back 2 years later. We stayed out of the stock for 2 years. We bought it back at $329. We sold it at the end of July at $439, and the reasoning was because we prioritized the direction of revenue growth. 3-year revenue growth, 16%, 2-year revenue growth, 8%, 1-year revenue growth down to 3%. So very easily, Scott, we could see an acceleration in the revenue growth once again. We could see all the fundamentals that are being suggested in the Loop Capital report come together once again. And guess what? We'll buy it right back.
You ever break the rules?
No. No.
Never?
You know that from the last block.
Well, that's true.
It's just the way he's doing it. He's like leaning like, you ever broke the rules?
That. Thank you. These guys break the rules. Jimmy, you own Disney. Maybe you wish you owned Netflix instead.
Yeah.
Because Disney's been brutal. Let's show Disney. I mean, it's been under 84. It's a new, right, this week put in a new post-COVID low.
Yeah.
And it hasn't been under, I don't know, I don't think it's been under 84 since like 2014.
Yeah, I mean,
something like that.
Frustrating thing about Disney, and we actually discussed this yesterday, is like, what's the news? Like, what's the catalyst that's knocking it down? It's just general malaise. Everybody knows what the issues are that are out there, and we talked about them yesterday, right? What are we going to do with Hulu? I mean, just buy it already. When are they going to reinstate the dividend? ESPN is the real albatross that's hanging back on this. But I think, you know, Disney might be emblematic of a lot of stocks right now in this seasonal time that really doesn't have a lot of love in the markets, and certainly for stocks that are down. It's not like there is news this week that has knocked this down. That's what's vexing.
I mean, there's a speck of news today. Amazon said to be, according to the information, in talks with Disney about ESPN streaming partnership.
And Verizon,
maybe that's why the stock's up 1%.
I mean, Verizon, maybe it's a sympathy bounce is what I think today is. But, you know, last week it was Verizon in the same sort of talks. Okay, the talks are going on. Bob Iger's not, you know, sitting on his butt, not doing things. He's working. The team's working. But they're just, I don't think there's enough news to hang your hat on to make the stock go one way or the other right now. That's why it's just vexing that it's coming down on no news.
Seach, you don't own Disney, you don't own Netflix either.
Don't own Amazon anymore. I mean, Disney's underperformed the S&P by 80% over the last 5 years. It's broken. I mean, there's a lot of work that needs to happen there, and we're just not interested in wading through it.
All right, let's get the headlines now with Seema Modi. Hi, Seema.
Scott, let's start in Hawaii. We're at Maui County releasing the names of nearly 400 people who are still missing 2 weeks after those wildfires. First and last names of those missing were compiled by the FBI and released by county police. Officials announced last night that more than 1,700 people who had been reported as unaccounted for have been found safe and well. Spirit Airlines will pay over $8 million to settle a class action lawsuit over surprise fees. Passengers say the budget airline added carry-on bag fees to tickets bought from third-party vendors, including Expedia and Travelocity. Eligible travelers seeking refunds will get up to 75% of their fees back, depending on the number of people submitting a refund request. And official announced that Spain's government has started legal proceedings to suspend the Soccer Federation president for kissing a player after winning the World Cup. The president refused to quit today, fueling outrage among players and government officials who have spoken out against his behavior. Scott, back to you.
Okay, Seema, thank you. Seema Modi. Straight ahead, we go back to Jackson Hole. Our own Steve Leisman sitting down with Chicago Fed President Austin Goolsbee. Can't miss that interview. See what comes out of that, what the market does. We're back after this.
Got indigestion. Or like, you know, so whatever it's called. Alright. What could we do? What could we do? I want to thank all of you guys too, by the way. Bingo killed it today. Bingo was out there chasing that dream this morning and said, yeah, Bob, I'm gonna make you my little you know what. Alright, we are coming up. This might be a good area to get short SPY. Yeah, 439, guys. This is a really good area. Austin Goolsbee, Chicago Fed president from Alabama. Southern, the most southern guy you'll ever meet. Talking southern. Listen, you guys will see it. Watch. But he running the streets of Chicago. That's funny.
And retrain.
All right, welcome back. We'll go back to Jackson Hole now. That's where Steve Leisman sitting down with Chicago Fed President Austin Goolsbee. Steve?
Scott, thanks very much. I am here in Jackson Hole with Chicago Fed President Austin Goolsbee. Austin, you've been among the more, I don't know, optimistic, outspoken folks about the possibility of a soft landing. Do you still feel that way?
I still feel like there's a path. You know, I keep calling it the golden path, that we could get inflation down without having a big recession. That would be virtually unprecedented for inflation to come down as much as we needed. But we've thus far, it's been going okay. So, you know, we still need more information coming in, but nothing's happened in the last 2 months that make me think that the golden path is impossible.
I want to get more broadly to Chair Powell's speech, but he did say, and he reiterated from a comment he made last year, that bringing inflation down is going to require a period of below potential growth. He said that last year we haven't had it. Inflation came down. Do you think we can do that without falling below potential growth and without a rise in the unemployment rate?
Maybe. I mean, that kind of raises the bar. My standard for what would be a major triumph for the Fed would be if you didn't have a big recession. You got inflation down from high levels down to target without a big recession.
There it was again.
There's a second thing. Maybe if you got beneficial supply shocks, you could even do it without an interruption of growth. Maybe. But I do feel like that's a higher threshold. That's a higher bar.
Tell us about your base case. Are you done hiking?
Right here.
I don't know. As you know, I don't like to speculate before the meeting, especially when you got important data coming in on prices and inflation. It does feel like we're in a period where if conditions keep going like what we've seen the last couple of months, our argument is going to revolve around, well, how long should we keep rates at the levels they are rather than how much higher should the rates go?
You know, since you don't want to speculate, I'll ask you to speculate even longer term.
Could it?
What about next year? Is that a year when the Fed might be easing back on interest rates?
Look,
I don't know if he's a voting Fed member.
Tell me what happens to price inflation, especially.
Well, that's why we hire you, is for you to tell us.
We just gotta watch the conditions on these. There are scenarios in which I feel like it will be obvious that the Fed needs to be more aggressive. There are scenarios in which it's clear the Fed needs to be less aggressive, and we're all trying to play by ear because this business cycle and this circumstance is really very unusual.
Talk about the Fed chair speech. It wasn't a victory speech. It wasn't a mission accomplished speech. Even though inflation has come down from 8% to, say, 3%, or 9% to 3%, depends how you want to measure it. Should it have been more of a victory speech that inflation is closer to being vanquished?
I learned from the first day I got here. I don't tell the chair what to say or what to do. I think he was properly sober. Let's not conclude too much. We've gotten a couple of good months of improvement data on inflation. We saw progress in the areas that we've been wanting to see progress on goods, on the beginning of housing, but there's still a long way to go. So I think if the chair had gotten up and said mission accomplished, that seems like it'd be premature.
One of the things I remember about in the wake of the Silicon Valley Bank is you were among those who were more concerned about the potential impact of bank credit tightening on the economy. It doesn't quite seem to materialize.
So far, it does not seem like it materialized.
So you'll admit you were wrong.
I said I wanted to watch that, and I've been happy to find that there has definitely been credit tightening, and you saw Chair Powell say there's been intense credit tightening. But we raised the interest rate 500 plus basis points in a short period. There's always going to be credit tightening. The question was, is there going to be more than just what you'd expect from monetary policy? So far, it doesn't seem like there has been. So that's promising.
Well, so far is a good phrase because we have recently had a recent spike up in interest rates.
Yes.
Does it cause you some concern for the economy? Does it change your outlook? Especially on the long end.
A little, some concerns. It is what it is. In a way, we're in a position where we're balancing off. There are other readings, like the GDP now type readings, that say maybe growth is accelerating. So if the longer rates are going up and if there's some restraint coming on that side to bring it into balance,
you don't have to react as a result.
Maybe that's okay. That's what we're trying to weigh.
Scott Wapner's got a question for you.
I appreciate it, Steve. Austin, it's nice to see you, and thank you for being here on Halftime. To me, one of the real wild cards centers around the lag effect. The Fed chair himself mentioned it today when he talked about the possibility of still significant drags on the economy. I'm curious from your standpoint, how significant do you think the lag still might be from what you guys have already done?
What's
new,
look,
right? Scott, you're honing right in, of course, on the central question of there's one worldview that says monetary policy takes a couple of years to work its way through the system, so there's still a lot of tightening that's coming down the pipe. And another view says people's expectations move before monetary policy even moves, So therefore, the 2 years is already done, and this is kind of what we've seen. We're still trying to get us. It's not like there's an obvious answer to that. We're still trying to sort that out. But either way, I think that's argues a little bit for caution. That keep your eye on the price series. The new months of price inflation is the best thing to be looking at it in the short run, because you can't observe what the lags are. We kind of just have to wait to see.
When you look at some of those lags, among them is looking at what's happening with, for example, credit card balances and delinquencies. What kind of concern do you have right now for what's happening with the consumer?
I'd say the most interesting / unusual thing about the consumer is that the interest rate is up as much as it is, and you really haven't seen the consumer spending deteriorate in a way that would be traditional. And part of that is probably consumer durables like autos. Normally that would be a major channel of monetary policy. Auto production and auto purchase are actually up a bit, despite the rates being up as much as they are. And I think some part of that is this pent-up demand, and we had the supply constraints, so it's from an artificially low base. That just makes it more confusing. I mean, it would be a triumph if the Fed or any central bank can get inflation down without a recession. It's hardly ever happened before. And if the consumer spending can maintain a steadiness in the face of these high interest rates, I feel like that makes it a little more possible.
Austin, we're real tight on time, but I'm sorry to lay this big question on you right here, but it's kind of important. People say that getting from 9 to 3 was the easy part. I'm not saying it was easy, but that's what people say. Getting from 3 to 2 is the hard part. And when they say that, they start to ask the question, how much is it really worth it to get down to 2? What are you willing to give up? What are you willing to sacrifice in the way of the economy to get it to 2? If you got to 3 with no change in the unemployment rate, you got there with a stock market that really hasn't changed, are you willing to give up the economy, give up the stock market, give up all that stuff just to get to 2?
I see where you're going. It's leading us down the path into the hypothetical religious wars that I definitely don't want to get involved.
Explain what you're talking about. Which
so I will say that's the question.
Which is giving up the target.
Should you give up the target?
Right.
Should you change the target and just declare victory, even if it wasn't victory? I think not. I think inflation's not fully down to 3%. It feels like that's headline, but the headline's got energy prices that move around a lot. It's got food prices that move around a lot. There's definitely been improvement in core inflation, but it's too high. The inflation's too high. So I'm uncomfortable with declaring victory when it's clearly not victory. We stated before we got into this what the target was going to be. I just don't feel like you can change your inflation target until you've hit it. Then you can have a discussion about that.
So you say go all the way and then figure it out.
I think you have to go all the way. Now, my uneasiness
Powell
with the
says
target
go all the
is
way
everybody
because he's got tools
like
to fix everything.
We can be as precise as should the target be 2.0 or 2.1.
If things get bad,
inflation is far too variable for that. So I think we got to take a broader perspective on.
But are you willing to be patient getting there?
I'm willing to be patient getting there.
Okay.
And I think you see, if you look at the SEP and the statements of the projections of the whole FOMC, there is a patience that's involved in it that they're projecting.
Austin, thanks for joining us today.
Steve, great to see you.
Austin Goolsbee, Scott, we're on the golden path. All right, there's a path to the golden path.
Might be.
Yeah.
But Steve, lastly, before I let you go, I mean, to your last question, therein lies the greatest risk. Does the Fed have the patience to let what they've done work its way through, even before the reads themselves say you're at 2%, or do they push it too far? It matters for everybody watching, investor class, every class.
I'm not going to answer for the Fed, Scott. Scott, I'm not going to answer for the Fed, but I will point out historically, the Fed had an awful lot of patience with an inflation rate that didn't hit 2%. And ran below it for quite some time. Perhaps there should be an equal amount of patience, depending upon what they call here, Scott, the sacrifice ratio. What do you have to give up to get there? And if you go slowly, do you not have to give up as much? There was an idea of raising rates quickly on the front end, thinking you were going to do a better job with that. I'm talking here with an expert who knows more about this than I do, right next to me here. But I'll just say that maybe if you're patient, you don't have to give up so much.
Well, they did a lot, and they did a lot quickly, and they really haven't given up, to your earlier question and point, all that much, considering where we are in everything. Steve, thank you so much. I appreciate it very much. We'll see you back here. It's Steve Leisman. Jackson Hole up next. Jim just made a big move in the beaten down retail space. We're going to tell you about it next.
Yeah, man, I definitely will, bro. Oh, nice. It's a nice rally. Let me see here.
Say about a move that Jim Lebenthal has made. You trimmed Home Depot.
I did.
Why?
Boy, I really respect how this stock has hung in there for the last year. Joe and I, you may have heard us in the commercial break, Scott. We were just going over March 16th, the first rate hike of March 16th of last year. The stock's up about 3% from then, as mortgage rates have more than tripled during that time frame. I mean, you got to respect what this has done. I'm not sure it has much more in it for the short term. Now, I am not negative on Home Depot. I'm still retaining a position. I've cut it by a little bit more than half. And this is my way of saying I just don't think it's going anywhere for the near term. So I'd like to have some dry powder for this pullback that Joe, Rob, and I all see is happening right now. I'd like to have some dry powder, and I'm taking it from Home Depot. Let's let NVIDIA come in some more, Scott. That's where I'll add. Can add to Microsoft and Apple as well, but I'm going to let that happen.
Well, you're also looking at Nike, which is
Yeah.
Can we throw up Nike?
Oh,
I mean, it's been
boy.
down 11 straight days. I don't know what it's doing today. That was before today.
I'll
Before
give you my
today.
position.
Is it a bounce for Nike today after 11 down days in a row? It is a modest one, but nonetheless, at least it's green.
I may be being too cute here, Scott. It's a forward multiple, I think, of 27. I'm not looking on the screen. I'm just doing that from memory. If I get this at a forward multiple of 24, this is getting a super high quality company at a great price. Normally, people, long-term investors, like to get great companies at good prices. If I can get this at a forward multiple of 24, history says that's a great price to buy Nike.
It's like 26 and a half if we round up. You're close. But, you know, I'm not going to give you 27.
I did not expect you to give me anything.
He knows. All right, up next, the committee gets you set up for some key earnings next week. We're right back after this quick break.
What's next?
We've got some earnings to get through in the week ahead. Carrie, Salesforce next Wednesday after the bell, along with CrowdStrike, too, which has ownership on the show. We'll get to that in a second. But what about Salesforce, Carrie?
Well, we think that it'll have a good quarter. The stock's up over 50% for the year, but we think that the earnings should be up 50%. They're going to start to show better numbers on the top line, and we continue to like it and think there's a good chance they beat.
Okay. Joe, you own Salesforce as well in the Joe T. CrowdStrike personally.
Back into CrowdStrike once again, got out of in June. After what we heard from Palo Alto, I expect a good quarter from CrowdStrike. Options pricing in an 8% move. The viewers need to understand that this will have an above average move relative to what we've seen in some of these other cyber names.
A couple other interesting names to pay attention to. Thursday after the bell, Lulu. You own that. Give me that read first.
Lulu is going to be interesting. You want to see here how they were able to grab more of a footprint internationally. I think that's going to be a critical part of the story.
So a lot of focus has obviously been on NVIDIA, and for good reason. Broadcom. You own that personally and in the Joe T. And that is a name that you always hear, which is another big AI play, they say. The stock's up 50% year to date. After what NVIDIA did, and what the market did after NVIDIA reported, how should we be thinking now about Broadcom?
I think you saved the best for last. I still view Broadcom as a reasonably valued way to participate in the generative AI trade. This is one of the more strategically opportunistic plays in the semiconductor space. They're going to grow their AI revenue from where it was 10% in 22, 15% in 23, ultimately 25% in 24, $1 billion in AI revenue. And I think that the fact that NVIDIA had that type of a reversal takes a little bit of the pressure off of Broadcom in terms of what the price reaction is going to be post earnings. I think you could see a strong price reaction concurrent with a strong earnings.
Okay, quick break. Final trades right thereafter.
Quote.
Closing bell, 3 o'clock Eastern on this Friday. We got a lot to discuss, a lot to look ahead to as well. Jeremy Siegel, the professor, is with us. Dan Ives has a new note on Tesla. He'll be with me. Mark Okada as well. And we got the markets cornered at 3 o'clock, and I hope to see all of you then. Let's do final trades. Carrie, what do you got?
Autodesk. So the stock has been very weak over the past year and a half as construction and interest rates obviously hurt. They lead in the design software for construction and all sorts of building. But they reported a decent quarter. They took the guidance up for the next fiscal year, and we think that there's a long runway now for Autodesk, which has really been a poor performer, but is starting to pick up a bit.
All right. Thank you, Robert.
ConocoPhillips in a golden cross, 50-day above the 200-day. Looks like that's going to be a good sign. It's one of the best names in the space. We own it.
Glad you stayed for the whole time. What time's this show end, Rob?
1 o'clock, Scott.
Jimmy.
Wobbly market at the end of summer. I'm going with a steady Eddie here, Berkshire Hathaway.
Joe T.
Maybe this isn't good. There's still time for you to leave. You got a couple of seconds.
I got 5 seconds.
Yeah, maybe this isn't good for inflation, but Valero, seasonality matters here.
All right, I'll see you on the closing bell. A good weekend. The exchanges now.
Thank you, Scott, and welcome to The Exchange. I'm Kelly Evans, and here's what's ahead this hour. Inflation is still too high, and further rate hikes are still in play. Jay Powell's rather hawkish tone causing stocks to reverse course several times today, but it shouldn't give you cause for concern, our market guest says. She gives Powell's speech an A and says it works well with what she's buying. She joins us ahead with the sectors and the names. Plus, a 1% down payment on a home. What could possibly go wrong? We'll ask the chief economist at Zillow Home Loans because they are now offering this option to address the affordability crisis. And from ketchup to hand sanitizers and beauty products, chances are you use a product this company provides packaging for. But there's one thing they package that caught our attention in the latest earnings report and may set them up nicely from here. Let's see if you can guess what it is. It's not a mystery chart. It's a mystery product today, Dom.
I don't know what it is. That's a great tease, by the way.
But in the meantime, how are the markets?
The markets are actually positive, but we've seen both sides of the market so far today, Kelly. So if you take a look at what's happening overall, the S&P 500 is at 43.93, so still below the 4,400 mark. But on the day, we're up 17 points, roughly 0.5%. At the highs of the session, we were up actually 40 points, so significantly stronger here. We were actually down as much as 20 so far today. The Dow Industrial is up about a similar percentage amount, 0.5%, 176 points, 34,275. The Nasdaq Composite up about 1/3%, the laggard, if you want to call it that, 13,514, spot 89, up about 50 points right now. So again, both sides of the unchanged we've seen so far today, but generally a little bit more positive, fractionally so. If you take a look at the interest rate complex, that's been the focus today, given Fed Chair Jay Powell's speech at the Jackson Hole Symposium. Maybe more hawkish. Some people are interpreting it different ways. No matter what, we have seen upward pressure on yields, downward pressure on prices. The 2-year note yield currently up to back above 5.05%. The 10-year note yield, 4.24%. It got as high as about 4.2728-ish at one point today. There's been a lot more focus on that 10-year note yield, given all the conversations around what the neutral rate or natural rate of interest should be on a short-term basis, that so-called R-star. A lot of people point towards that 10-year note as maybe a proxy for that kind of a level. So we're watching that pretty closely there. So keep an eye on rates. And then interest rate sensitivity. It used to basically be utilities and staples, maybe real estate in there, but we've expanded it because so many more parts of the market are interest rate sensitive. NextEra on the utility side, Kraft Heinz, both clinging on to gains right now. Meanwhile, banks like JP Morgan Chase just about flat on the session. NVIDIA, you might call it interest rate sensitive, hyper growth. Sometimes those interest rates play out there. NVIDIA, that is now down 3.5% of the day, which means it's about 10% below its post-earnings high at this point, and the ARK Innovation ETF about 1% as well. So keep an eye on those various parts of the market. Very closely watch with regard to how Fed policy is going to shape up. Kel, I'll send things back over to you.
All right, Dom, thank you very much. We start with Fed Chair Jerome Powell's big speech in Jackson Hole. He maintained his somewhat hawkish stance, saying he's still open to further rate hikes to combat inflation if needed. Take a listen.
Although inflation has moved down from its peak, a welcome development, it remains too high. We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective.
Let's get some reaction now from Gus Fauché. He's chief economist at PNC, and Aditya Bave, a senior U.S. economist at Bank of America. Welcome to both of you. Gus, I'll start with you. And Nick Timrose at the Journal described this as more of a risk management speech. So was it hawkish? Was it dovish? Was it wait and see? What do you think?
I think he struck a hawkish tone, but the content wasn't quite as hawkish as the way that he said it. He made it clear that the Fed is ready to raise rates again if necessary, but he didn't say that a rate hike was forthcoming necessarily. So I think he's taking a risk management approach where he's saying we're more likely to raise rates than lower them, but he's setting the market up in case they do need to raise rates again.
And going into this speech, Aditya, the futures market was already pricing in almost a 0.5% or a 50-50 chance that they raise again in November. Is that in your expectation?
I think we're likely
we have them hiking.
Go ahead, Aditya.
Yes, so we have them hiking 25 basis points in November, and we have them cutting just 75 basis points next year. And markets move towards both of those forecasts. But I actually agree that the comments were fairly balanced. They had both hawkish and dovish elements to them. And so ultimately, he presented a Rorschach test to investors. And that's exactly what you're seeing in market action today.
One of the areas that he talked about was the labor market. I want to play a little bit of what he said about the tightness of those dynamics and the impact that may have on further hikes. Take a listen.
So far, job openings have declined substantially without increasing unemployment, a highly welcome but historically unusual result that appears to reflect large excess demand for labor. In addition, there is evidence that inflation has become more responsive to labor market tightness than was the case in recent decades. These changing dynamics may or may not persist, and this uncertainty underscores the need for agile policymaking.
Gus, what does he mean by that, that the labor market has become more responsive to tightness than in recent decades?
What he's saying is that strong wage growth, a tight labor market, is pushing overall inflation higher. As the economy has become more services dependent, strong wages are more likely to show up in inflation, which is what we're seeing. And so therefore, the Fed may need to push back a little bit harder against that tight labor market in order to get inflation to that 2% objective.
Would that, Aditya, be part of an argument for this being a rather hawkish speech? If not so much today, maybe in retrospect, if they do have to lean harder against the labor market?
Right, I think it's a little bit nuanced because if inflation is more responsive to a tight labor market, then hopefully that works the other way around as well. To me, essentially what he's saying is that we finally found the steep part of the Phillips curve after being on the very flat part of the Phillips curve for over a decade, and that cuts both ways. So hopefully when the labor market does ease up, and we're seeing some signs of that, inflation should continue to cool relatively fast. That would be the hope for the Fed.
Yeah, we also got the University of Michigan data this morning, consumer sentiment. I think it was down a little bit. Yeah, 69.5 in August. But notably, inflation expectations are still higher than they used to be. Aditya, 3.3%, let's call it, with a little bit of a rebound in gasoline prices lately. Is this a data point you think they'll be concerned about?
I think the one-year inflation expectations figure was always going to go up with, as you said, the rebound in gasoline prices. 3% on the 10-year is pretty much fine. It's, as you mentioned, a little bit towards the high end of the recent range, but we haven't really broken outside that range, and so for now they're pretty comfortable with that.
All right. Gus, where do we go from here?
I think we see the Fed holding steady. I think you saw President Harker and President Collins yesterday saying that they didn't think further rate hikes would be necessary. I think we will see a slowing in the labor market. We're likely to get a mild recession starting in early 2024 that will bring inflation back down to 2%. So we see the Fed holding steady in the near term and then cutting sometime in the late winter, early spring next year.
So do you think, is the message you're getting from them that they don't know any, that's your forecast, but they don't sound to me like they're particularly wedded to any forecast, that they're just kind of waiting like the rest of us to see how the data come in, Gus? Would you say that's right?
Yes, and I think Chair Powell made that clear. He said, look, we've gotten 2 good months of news on inflation, but we aren't sure that that's going to last, and they're going to be looking at the inflation data. They're going to be looking at the labor market. They're going to be looking for those slowings that they're expecting, and if they don't see them, then they're perfectly willing to raise rates again if that's what it takes.
And before we go, Aditya, just can you put some context around these high numbers we're getting for the third quarter from the Atlanta Fed? And not so much to get into whether they're any better than anyone else, but how strong could third quarter GDP be? How different might it look by the fourth quarter, first quarter of next year?
Right, so we're tracking 2.7% for the third quarter. The Atlanta Fed, of course, is closer to 6%. There's different elements to these forecasts, but the point is that we started at 2%, and very quickly with the early wave of July data, we've gone to 2.7. I think we'll probably see a softer consumer in August and September just because the strength in July was so outsized, and that could set you up for a less favorable base effect for the first quarter of next year as well as the fourth quarter of this year. So we have a slowdown in growth to around the 1.5–1% mark later this year, but we don't actually have a recession in the forecast either this year or next year.
All right, Brother, I remember talking to Gapin about that for sure. We'll let you guys go. Gus, what happened? Was it your elbow? Tennis elbow?
I broke my shoulder on vacation.
Oh, my gosh. Oh, well, thank you for joining us regardless. We wish you a speedy recovery.
Thanks.
Gus Fauché from PNC and Aditya Bave. Well, she gave Powell an A, and now she's going to give us the play. And that involves looking for companies that may be struggling right now, but are well-positioned to outperform their peers long-term. Let's bring in Kim Forrest now. She's founder and CIO of Boca Capital Partners. You give him an A, Kim. What did you hear this morning that you liked?
I do. I heard what I've always heard from Jay Powell, which is we are data-driven, and we are going to adjust the interest rates according to the data. And that's pretty much what he reiterated during his whole speech. Now, I think he also reiterated the data that the rest of us are seeing, and that's retail consumers and investors alike, that the inflation rate has dropped, but it's not to the 2% that the Fed wants to have, and that they're going to continue to evaluate both the labor economy and the regular economy and take action. Like, this is what Powell wants, is consistent messaging and a predictable outcome. And I think that that is why I gave him an A, because he is giving us the guidelines that they use to make decisions.
All right, and I ask you about that, even though I really should be asking you about your sweet spot here, semis. That's all that matters. This the whole game. I mean, do you look at NVIDIA and think it's practically a value stock because the PE now? Well, the PE in February must have been like 4 now, based on what we know now.
Yes. Well, maybe. You know, I don't think anything with 3 digits is a value stock in the PE. I'm sorry. I don't generally hold fast to. I'm more of a relative kind of data person rather than an absolute number. But NVIDIA is richly valued any way you look at it. But here's the good part. They are in demand. They are ahead of the curve from anybody else with respect to AI and other glamorous areas of the semiconductor market. But we need them. We need productivity. Semis give us productivity. And the other thing is, AI is not just a passing fancy. It is going to deliver productivity and maybe entertainment. But what it really needs is lots and lots of data. So I know that for a fact. I used to be a software engineer in AI, and data is the key to successful math modeling. So I don't know that we can ever have enough storage. So that's why, like Micron and other developers or makers of NAND technology. And I just don't think semis are ever going to go out of fashion ever again.
A lot more favorability for Micron lately. NetApp, another one you like. 30 times is the multiple for NVIDIA. 30, okay? Can we show Coke, Tori? Put like a Coke or a
free
Pepsi
cash flow, though.
or a Clorox or somebody like that on the
growing
screen.
at a crazy rate.
I mean, Kim, you can get NVIDIA at 30 times after everything that's... Coke's at 23. Which would you rather own?
Right, but here's the thing. They are not alone in making new chips. And it's going to be really hard with AI driving this. Everybody else in the semi space is going to want to catch up to them. And I don't know that they are that far ahead that they can evade having competition. That's pretty much that.
All right, fair enough. And as I've said, you know it better than anybody. Where else? So you want to buy companies right now that you think might offer some value, but more importantly, are going to outperform in the long run. Who else fits that description?
Sure. Well, back in semi-land, we really like Synopsys because they help people design chips. But also, we're looking in other sectors. I know, there are other sectors other than technology. But we actually like consumer discretionary because it's really unloved at this point. And there are great retailers out there. And we think financials are worth a look because we are at the end or near the very end of the rate hike cycle. And we're not in the position where we were last year at this time, where we didn't know where that number was going to be, that 10-year number. So we're very close to the end, if not at the end. And I think financials deserve a good hard look. But again, you have to really do tons of homework there, not to get caught out by somebody that might have a bad balance sheet or bad assets on their balance sheet.
Right, and most people feel like that's just over their head trying to figure that out. Although I notice a firm, it's techie financial, but having quite a strong session today. Would you go, big banks, regionals? Like, it truly just depends. Any criteria in particular that you would be screening for?
Well, actually, I really like both companies in the regional area, but again, companies that don't have any or very much exposure to commercial real estate, specifically offices. And then there are good large players that you can take a look at. Again, we like Morgan Stanley is one of those that don't do a whole lot of lending, but do have a lot of fees. And we like hometown favorite PNC, again, because they have a whole lot of their revenue generated by fees as opposed to lending.
We just had Gus Fauché, their chief economist, last segment. Interestingly enough, PNC 25% decline year to date, but even Morgan Stanley's in the red now. I didn't realize how much weakness we've seen over the past month. So maybe a chance to be opportunistic. Kim, thanks so much for your time as always.
Thank you.
Kim Forrest joining us from Boca Capital Partners. Coming up, from China to beauty to pharma, even food. My next guest company is uniquely positioned to give insight into all of those areas with products that they make. The CEO of Aptar Group joins us live with where they see strength and where they don't right now. Plus, as Instacart readies its IPO, we look at how the economics are evolving for the grocery delivery business and whether this move will more fully open the IPO market. As we head to break, here's a broad look at the markets, which have really made a comeback. Dow's up 185 or 0.5%, and it's actually leading the way today. The Russell 2000's up 0.25%. The 10-year note hovering around 4.24. We're back after this.
This is The Exchange on CNBC.
Welcome back to The Exchange. I mentioned the Dow outperforming today, and here's a reason why. Boeing moving higher and up almost 2% right now on reports that it's getting ready to restart 737 MAX deliveries to China after about 4 years. Again, Boeing, which had been hit earlier in this week by some delays on the 737 MAX, now benefiting from some positive news flow as it specifically relates to China orders. Shares are up 2%. Dow's up 154 now. Meantime, joining me now is, well, let's back up for a second and talk about packaging. It's part of the industry that you don't hear about that much, but this is a company we spoke with during the pandemic when they were making packaging for all of those hand sanitizers we were buying. We checked in with them last year, and they told us about the labor shortages they were experiencing, and now they're seeing strength in one part of the market in particular that makes sense if you think about it. It's weight loss drugs. That's right. Joining me now is the company in the midst of all of it and their CEO, Stephen Tanda, the CEO of Aptar Group, whose shares are starting to approach their 2021 highs, by the way. Stephen, it's great to have you back. Welcome.
Thanks for having me back, Kelly. Great to be here.
Tell me, do you guys make some of the packaging for injectable diabetes and weight loss drugs?
Well, we can't talk about any specific customers, but what I can tell you is that indeed we supply elastomeric components for 3 of the GLP drugs that are on the market, and clearly consumers are very excited about it, patients and our customers are very excited about it, securing future supply, investing. We ourselves invest more than 180 million in our own capacity for biologic drugs, including GLP-1 drugs.
Wow. I mean, you guys, I think about your business the last couple of years, and you had to go, okay, go quickly make tons of hand sanitizer. Okay, now pull back on that. Okay, now go quickly make tons of supplies for the GLP drugs. I mean, how does your business respond to all of this?
Well, we've really been around for almost 80 years, public is for 30 years. So we really are, if you want the intel inside, all of your viewers have a dozen of our product at home, from spray-on sunscreen to upside-down ketchup to high-end fragrances, and also, unfortunately, Narcan. So it's all about delivering medicine, delivering consumer products to the consumer in a way that makes brands more enjoyable and the drugs more available.
Yeah, the upside-down ketchup might be the single greatest innovation. makes my family life a little easier. But put that in context for us. So huge demand, for instance, in this weight loss category. Where else are things softer now? Because we know consumer goods and durable goods more, well, not that they're durable goods, but that this is an area of softness lately.
Yeah, actually, overall demand for our products is very strong. The pharma business, whether it's nasal sprays for allergies or inhalers or sinus rinses, so anything the consumer has learned during the pandemic about keeping their sinus passages clear has really changed the consumer behavior. Our beauty business is actually very strong because of pickup of travel retail. The one area where we see weakness is in the U.S. food space and personal care and home care. Partly that's because, patterns have changed coming out of the pandemic, and part of it is our customers and retailers still working down their tremendous COVID inventories.
That's interesting. So in personal care and home sort of things in particular, and that echoes what we've heard from other companies in that business, how do you think you have another year or so to normalize things there?
Well, we see food starting to normalize. We believe personal care and home care probably will run their course by the end of the year, early next year. Thankfully, I don't say this often, our business is 75% outside of the U.S. and travel retail really, especially between the U.S. and Europe, has boomed in driving our beauty business, high-end fragrances, makeup, skincare. And of course, pharma is global, and the U.S. patients and U.S. consumers need the pharma products, whether the economy is doing well or not.
It's fascinating. You guys really do have a really unique win. And like you said, it's not often you say it's a good thing. We're 75% outside of the U.S. What about China? Any exposure there or any kind of secondhand exposure that could tell us what's going on with trends there?
No, China is an important market for us. For some of our segments, like beauty, it's actually the largest beauty market in the world.
Wow.
And a lot of the sales that we report in Europe are really going to global beauty brands like L'Oreal or LVMH, who then sell their products onto China. Clearly, the recovery is more muted than people had hoped and expected, but even lower growth on a large base makes a big difference. And We have just started up one of our flagship investments in Suzhou, China, and opened 2 plants in the north in the dairy area during the pandemic. So we continue to see China as an important market, and thankfully we are not in any geopolitically sensitive areas. So we're seen as benefiting the Chinese patients and consumers.
Yeah, so far makeup is not on the list yet of highly sensitive industries. Before I let you go, can you talk to just briefly about the labor force? I have to imagine between some of the slowdowns you've cited and everything else that you're not seeing the same staffing challenges you once had, but is there any sign of kind of wages reversing lower or anything like that?
No, but clearly the issues we talked about last time have abated. We saw more people joining the labor force. And those plants, particularly in the Midwest, are exactly the ones producing the things that are weaker, personal care, home care. So this is no longer an issue. And thankfully, in the booming areas like pharma, we have plenty of capacity. You never want to be out of Narcan.
Oh my gosh, that's for sure. Stefan, thanks so much for rejoining us. It's really good to check in with you.
Great to check up with you, Kelly.
Stefan Tanda is the CEO of Aptar Group. Shares are up 15% this year. And coming up, shares of this company are making some big moves this month, prompting 2 upgrades just this week. The name and the reasons for those calls ahead. Plus, Zillow Home Loans making a move that's supposed to make homeownership more affordable, but it's also drawing some comparisons to what happened before the mortgage crisis. Those details are coming up. As we head to break, here's the Dow heat map with 2 to 3 gainers versus decliners today, led, I believe, by Boeing, whose shares are up 2% on that news we brought you top of the hour. On the flip side of things, the financials are weak. American Express, Goldman, JP Morgan, your biggest decliners. We're back after this.
Only on Verizon.
Welcome back, everybody. I'm Tyler Matheson with your CNBC News update. Former President Trump and all 18 co-defendants have met the noon deadline today to surrender to authorities in Fulton County, Georgia. All but one were released on bond after being booked. One of the defendants spent the night in jail because he didn't negotiate his bond agreement ahead of time. Bet he regrets that, or she. Heineken announced it's selling its business in Russia for just €1. The company is selling to the Russian manufacturer Arnest Group and will lose around $325 million. A Dutch brewer announced its plan to withdraw from the country last year after Moscow invaded Ukraine, but Heineken was slow to exit. The company said it was trying to look after local employees. And Starbucks confirms it's looking at scanless pay, which is a contactless checkout method. It can identify a Starbucks app user's current location when they're in the drive-through lane. The experience is currently being tested with employees. Kelly, back to you.
Scanless pay that can ID you in the drive-thru.
Cash is going away.
Well, no, I've never paid with cash more because they charge you 3% everywhere if you want to use a credit card.
Yeah.
I don't know. A little bit of both.
See you in a half
See you
hour.
soon, Tyler. Thanks. Coming up, home ownership getting increasingly more unaffordable with home prices high and the rate on the 30-year fixed mortgage firmly above 7%. But Zillow Home Loan says there's a solution, and it's raising some eyebrows. We have those details next.
And now, CNBC Trend Tracker. Eastern.
Welcome back to The Exchange. If you've been one of the unfortunate ones in the hunt for a new home this year, you know just how bad the affordability crisis has become. As of last month, the median home price in America is over $406,000, and mortgage rates are at multi-decade highs, with the 30-year currently at 7.37%. That is making both down payments and monthly mortgage payments increasingly unaffordable. And now Zillow has a solution to that, launching a new program with just a 1% down payment option. But for buyers to qualify, they must have a credit score of at least 620, a steady income, and a low debt-to-income ratio. For more here, let's bring in Zillow Home Loan senior economist Orphe Divounguy. Orphe, it's great to have you here. Welcome.
Thanks for having me.
As an economist in particular, make the case for this program, Orphe.
Look, Zillow Home Loans has been operating since about 2018, and this new product is a 2% grant to prospective buyers in Arizona. Essentially, a borrower can put up to 3% down, and Zillow Home Loans will give them an additional 2%. It's really for, it's for people that are, small number of buyers who might be well qualified with high enough credit scores and who may already be paying the monthly payment and rent, but lack access to a down payment.
So doesn't FHA already offer 3% down payments, I believe? So could people qualify for that program? But do you think there's still a big difference between people who can afford a 3% down payment and the 1% that you guys are now offering through your subsidies?
Look, with rents increasing so much during the pandemic, look, the typical rent has gone up 30% during the pandemic. And so rent increasing so much, basically, not only it takes longer to save up for a down payment, but you have well-qualified, credit-worthy renters out there who may already be paying more on a monthly mortgage on rent than the monthly payment would be on that mortgage, without benefiting from the upside, right? The home ownership, the upside of home ownership. Zillow really wants to help with that.
So correct me if I'm mistaken, one of the reasons why we have things like the 20% traditional down payment is to make sure that homeowners have enough skin in the game that they don't just walk away from the house, right, and kind of put it back on the bank or on the lender. So it's really meant to protect you. Are you concerned that if people have a 1% down payment and then find that they can't make that mortgage payment, for instance, they're just going to walk away and it's going to become your problem, or I guess whoever owns the loan at that point?
Look, 40% of first-time home buyers use gifts to purchase their home. And historically, many first-time home buyers have had recourse to family funds. Those with parents who own their homes or were able to extract home equity from their home are more likely to own. This is part of why the racial gap in home ownership is so wide. Zillow wants to be part of the solution. Essentially, you still have a strong labor market. The unemployment rate is 3.5% right now. Home values are still rising. Mortgage delinquency rates are near an all-time low. And the credit scores of new home buyers are at the highest level they've ever been. So, to emphasize, the risk to the financial system, I think is somewhat of a fool's errand. I think that, the economy is strong, mortgage rates are increasing because the consumer finances are still so strong. And I think this is a program that actually would help a small number of buyers. It's not for everyone. It's for those who are already able to afford the monthly payment, but just don't have enough saved up for a down payment.
Yeah, I have to imagine you remember well the 2007 crisis. Back then there was a similar move to make sure that, housing was affordable enough and accessible enough for everybody, and then it backfired. How do we make sure this doesn't backfire this time around?
Yeah, look, it's a tough affordability situation, but you look at the demand in the housing market, demand still exceeds supply. And homeowners are sitting comfortably here. In the past decade, the typical homeowner acquired 40 times more in net worth than the typical renter. And you have a lot of renters that are out there who are already paying more in their rent than the monthly payment would be. So let me give you a concrete example. Take the typical rent in Phoenix, for example. It's almost $2,000. A borrower putting 3% down, getting a 2% grant from Zillow Home Loans today at today's interest rates would be paying roughly $1,900, saving about $100 a month with the opportunity to build housing wealth, right? So this is really a small step in the right direction. It's one of the solutions, for a small number of people in Arizona today that may already be, that are well qualified, credit worthy, and may already be paying a lot more than they would pay under this program.
Why Arizona to test this program, and by what criteria will it then be rolled out to more parts of the country?
Look, there's a lot of very smart people at Zillow Home Loans that are working on this. But as an economist, I can tell you that for those paying higher rents that have not been able to save up enough for a down payment, this is an opportunity to get on the homeownership ladder and build home equity. It's really, really tough out there for renters. And unfortunately, many are already paying the price, but just not benefiting from the upside of home ownership.
Orphe, it is the talk of the town, and we're so glad you could join us today to explain and defend it. Thank you so much for your time.
Pleasure to be on air.
Orphe Divounguy, senior economist with Zillow. Still ahead, after a few stutter steps, Instacart is now expected to file to go public within the next week. What that IPO could look like and the new sign of hope for grocery delivery companies is next. Before we head to break, let's also do some show and tell, where we show you a chart and tell the story. And shares of payment processor Shift4 are down almost 19% in August, prompting 2 upgrades this week. Morgan Stanley today raising its target to equal weight, saying valuations are more attractive now. Raymond James moving it to outperform with a $74 price target earlier this week, partly on valuation, but also noting that Shift4's wins since last year have come from less macro-dependent verticals. And CEO Jared Isaacman told us he's still seeing strength in the consumer when he joined us to discuss the company's earnings beat earlier this month.
Our hotel and travel business going very strong, stadiums going strong, ticketing going strong. Restaurants, there's definitely a little moderation there. It's not the euphoria of 2021 when everybody was reopening and things were going out of control, but people are still going out and eat and drink, and it's obviously still contributing very well to our volume growth.
Welcome back. Marketing platform Klaviyo just filed to go public earlier this hour. Another little sign of life for the tech IPO space as we stay on the lookout for Instacart's filing today. Joining me to discuss Axios, Dan Primack, and our very own Deirdre Bosa. Welcome to both of you. Deirdre, we want to talk Instacart, but any significance on this Klaviyo filing?
I think there are
player on one of the teams. But let me ask you this very quickly. In terms of partner scale, the deal that Disney ESPN did with that gambling company a month or so ago, that's not the kind of scaled partnership we're talking about here.
That's a different situation here. What they're trying to figure out is what does it look like when you take this TV channel that's been so essential to the TV bundle and you offer it outside the TV bundle? How much do you have to charge? Who do you want to make sure you have on your side, and maybe as an investor, to make sure that it can reach massive scale to compensate for the fact that you're probably going to be losing even more revenue from that linear TV business? Julia,
thank you. Sarat, any thoughts on Disney ESPN here?
So I think this is really smart. If you think about what they're trying to do, and we don't know the details but you're trying to carve out the ESPN asset, which we know is not getting any valuation really because it's a depleting asset, but it is cash flow heavy.
Depleting because of cost cutting, cord cutting,
because you're losing subscribers, but you're losing the subscribers who aren't really watching. So why don't you take the content, which is live TV, which is live sports that everybody loves, and find the right audience who's going to pay for it. This allows you to carve out ESPN from Disney, which is holding back the valuation of Disney, and getting a separate valuation potentially for ESPN that if Amazon makes an investment, you could eventually spin it out or sell it to private equity or do something because it is cash flow rich. You just need to get the right optimization of capital structure.
Very interesting. And I can't wait for college football to start on Saturday. All right, one media name is best positioned for the strike, and Loop Capital says this, hiking their price target to $500. Loop says the streaming giant has the best content pipeline to weather the TV drought. With us now is the analyst who made the call, Loop Capital's Alan Gould. I don't believe we mentioned the company that we're talking about here. That would be, Alan, Netflix. Why do you like it so much?
First, thanks for having me on.
You're
welcome.
welcome.
I think Netflix is best positioned for what's occurring right now. Number one, all the competition is raising price and they're cutting back on the amount of content. So Netflix will be in a better competitive position. Two, they're best positioned with the strike because they've got a bigger pipeline of unreleased content. They also have more global production capability than anyone. Three, streaming rationalization is inevitable. You take the 4 large U.S. traditional TV studios, they will probably lose about $6.7 billion in streaming this year. Netflix will make over $7 billion. Next year, they're going to lose probably $3 billion. That can't go on forever. There's too many players. There will be rationalization. There'll be a combination. One will go by the wayside. That should improve Netflix's market share. The strike, we think the length of the strike is a little bit longer than people had anticipated. I think that's going to accelerate the decline in linear TV. That will help streaming, and with Netflix as a leader in streaming, that should help Netflix. The paid sharing or password sharing rollout was much smoother in the U.S. than we had anticipated, and advertising is still on the come. So we think they're very well positioned. I think the earnings estimates over time will go up. I think the usage will go up given these advantages. So we like the stock in here.
That is a really muscular thesis that you have just laid out there, Alan. And what I hear among many things I'd like to pick up on is the idea that the other studios, whether it is Universal or Paramount or Disney, that they are going to be, well, victims is my word, of the muscularity of Netflix.
Right now, Comcast is or Peacock is losing $3 billion. It should be their peak losses for Comcast, but I don't see Brian Roberts standing by and continuing to lose large sums of money in the streaming business. Paramount Plus is losing.
So what does Comcast do then? Do they get out of that business? What?
No,
I can't afford to do that.
Will there be some sort of a combination? I don't know. Well, I mean, you've got, for example, it could be something as simple as Peacock and Paramount Plus have a joint venture in Europe where they have joined forces. So could it be a joint venture like that? Or could it be something of a greater scale? A lot of people think at some point Comcast spins out NBCU and merges it into WBD, Warner Brothers Discovery, and then you'd have a merger of Max and Peacock. But in some way, shape, or form, there will be fewer players in this business.
We've certainly, I mean, obviously Comcast is our parent company, and we're not immune to hearing those same kinds of rumors. Sarat, any thoughts here?
Yeah, question for you. I mean, one of the things during COVID was let's just try and get as many eyeballs as we can. Where do you see Netflix in there now? Is the growth going to come from new viewers? Is it going to come from more raising prices? Are they going to, is the pie kind of grown to where it's maximum, or is there more potential there?
From both areas, both from users and from revenue per user. As you know, they claim they had 100 million people using password sharing, about 40 million of those in the US-Canada market. So you've captured some. You certainly haven't captured all of those players who were sharing, who are still willing to subscribe, or maybe take the $6.99 advertising-based tier, which is relatively inexpensive. And I think you'll see price increases. Netflix tends to raise prices about once a year. This year, they did not raise prices, as the charging for password sharing was effectively a price increase. You look right now, I mean, Disney has gone from $7.99 to $10.99 last December and raising it to $13.99 for Disney Plus this November. That's a 75% increase in about a year. Hulu has a list price that'll be $17.99, higher than the $15.49 price that Netflix charges for its standard tier. Now, I recognize most people probably take Hulu in a bundle with Disney Plus, maybe with the ESPN Plus, so most aren't paying that price. HBO Max, or Max as it's now called, is $15.99. Again, a premium to Netflix. So I think there's room for Netflix to raise price.
Interesting.
And I think there's some additional subs gains too.
Fascinating conversation, Alan. A lot going to happen in the business in which we work. Thank you very much. Alan Gould, Loop Capital. Thank you.
Thank you.
Abercrombie and Fitch just blew away second quarter estimates, while the shares have more than doubled so far this year. And yet Morgan Stanley is still skeptical they can keep up momentum for the long run. Is the bank just pulling at threads, or is there real cause for concern? We'll discuss when Power Lunch returns.
That's a huge candle. Look at that. That's huge. That's literally 6 months of price action in 5 minutes, guys. All right, so Twinkies got a buyout by Mondelez, and a couple other places are looking to buy out Hostess.
Welcome back to Power Lunch. Shares of Abercrombie and Fitch have been a huge winner this year, more than doubling. This week, taking another leg higher after strong results, in part thanks to demand for that new trend in jeans. Wide leg, I think it is. Anyway, Morgan Stanley today is upgrading the stock, but only to equal weight, and they're remaining skeptical in the long term. Joining us is the analyst behind this call, Morgan Stanley equity research analyst Alex Stratton. Alex, it's great to have you here. Is this because you're doubtful they can kind of stay on trend, or what do you think about the company?
Hi, Kelly. Thanks for having me today. Look, our view is intentionally thoughtful and pretty balanced in the range of outcomes that we see for Abercrombie. So, look, in a bull case, I think A&F momentum can continue, the turnaround proves more durable, Hollister can inflect more fulsomely. And while that's the case, the business could certainly deliver high single-digit or even low double-digit EBIT margins. That could get you to a move further upward in the stock. Let's say, $70 or more. That's almost, 30% upside from here.
Right.
But I think on the other side, we have to be fair. There's a real reality that A&F outperformance is well above its historical trend. Hollister isn't perfectly at an inflection point. And so over time, I have to be fair that the business could, revert back to its historical mean, which is a low single-digit EBIT margin. So our base case contemplates that, and that's where you get to 35, which is obviously some downside from here,
Real quickly, before I bring in Ty and Sarat here, Alex, so are you saying, in other words, that Abercrombie has basically single-digit, are they profitable? Forget EBIT, but, just do they have positive profit margins today?
Yes, they do. And part of this big pivot that they've had has been multifaceted. I mean, the turnaround might be one of the only ones I can think of in retail history, which is quite impressive. And they've really done it after a decade of challenges where we doubted where profitability has sat. Historically, the aggregate business has been low single digits. Now we're on track to do high single digit or low double digit. And really what that's been driven by and how Abercrombie has been able to pivot has been a few things. I mean, it's aged up its customer base, it's expanded its assortment beyond casual and basics. That's enabled higher pricing, which is a key part of the margin turnaround.
Yeah.
But also it's rationalized its store footprint, made it more inclusive and more welcoming. So there's a lot it's done right to lift profitability.
So I was going to ask you, what have they done right to affect this turnaround? And you just hit on a couple of things. They've aged up their customer base. That means they've gotten older, and what specifically have they brought into their merchandise mix to appeal to that older customer?
Sure. So what they've done really is basically further differentiate the brand from its sister brand, Hollister. So Abercrombie, it now targets like a 30-plus aged consumer. This isn't older than that. It's still quite similar to Hollister, but that's, more of a middle to high school age. So it created that gap there. And part of what it's done to the assortment is it's moved from like a jeans and tees business to something that's more similar to where you can find dresses, alternate types of pants. So that's really how the assortment has changed over time. And as they've done it, they've been able to take price. I want to emphasize this is so impressive in the apparel market. It's a deflationary category. What that means is that price effectively declines year after year after year. So their ability to affect this has been honestly nothing short of amazing. But it's also part of why we had been so skeptical is that there are few businesses, almost none, that are able to do this within specialty apparel.
So when you look at them and you're going to the fall season and Christmas, do you see a sustainable model? Because that's one of the most difficult things about retail investing is great, you had a good quarter, what's next? And you need new products and you need to go into the fall, winter season to get your earnings up again. So where do you see that?
Yeah, it's a great point you make. I mean, covering these fashion-driven specialty retail stocks, they're subject to very high cyclicality and thus really high margin and wide margin swings in EPS outcomes. It can be a very wild ride as you're covering them, and it's very hard to call that turn. And I think that's why kind of the thought around the couple of scenarios I outlined previously is where we're landing. It's more nuanced, is that we see a range of outcomes where Abercrombie could continue to outperform, but we also have to acknowledge that it's not guaranteed. I will say, though, that these fashion trends tend to run, at least from our analysis, in 3 to 4 quarter cycles. So it feels like even should Abercrombie slow, we have Hollister just hitting an inflection that it could offset that. So it's nice that they have these two sister brands within the portfolio so that if one is struggling, the other can offset it.
Very interesting, and I'm going to ponder all weekend the phrase that you uttered, alternate pants. I really like that. Alex, thank you.
Alternate forms.
Alternate pants forms. That's cool. All right, thank you, my friend. Coming up, payment power. Buy now, pay later giant Affirm surging on blowout fourth quarter earnings. Is it too late to buy the shares? After today's 30% gain, we will ask our trader in residence in 3-Stock Lunch.
Welcome back to Power Lunch. I'm Steve Kovac with a market flash for you. Take a look at Hostess Brands. Shares up about 25% here on a Reuters report that it's fielding takeover interest from the likes of Mondelez, Pepsi, and Hershey. So we see we've reached out to the company for comment here, but this would be it's on pace now for its best day ever. So we're taking a look at this, up 23% here. Tyler, I'll send things over to you.
All right, Steve, thank you very much. Time for today's 3-Stock Lunch, taking a look at some big movers of the day, served up with a Twinkie. First up, Ulta Beauty lower despite topping second quarter estimates. Here with our trades, Nancy Tengler, CEO, CIO, Laffer Tengler Investments. Nancy, what do you think of Ulta?
So, Tyler, I think this is an opportunity to step in and add to holdings or initiate holdings if you don't own them. I mean, the company delivered a good earnings report, raised guidance. The street's worried about gross margins that were impacted by supply chain increases in price increases and, of course, shrinkage in the stores. And they've taken steps to solve the shrinkage problem. So they're locking up fragrances. That has made sure that customers have the inventory when they come in to buy those products. And I think that this is a company that historically has been able to solve their problems over the long term and in the short term. They've got 42 million loyalty users, and they have multi-channel distribution, which they have found really results in higher spending from customers. So we've been waiting for a chance to get in. We're going to be initiating a position in Ulta. I think this is one you want to buy in here.
I learned today that Ulta has more membership numbers than Starbucks. So, wow, good for them. All right, Nancy, we were just talking about this one, much more controversial. Affirm skyrocketing 30% after a beat in their fourth quarter earnings last night. What would you do with the stock?
I would, if I owned it, I would take this opportunity to exit. I mean, let's not forget the stock's down from 160 in 2021 during the pandemic mania. They're doing a couple of things right, but this is also a commodity business. And so I'd rather be exposed to the payment systems that are exposed to the high-end consumer. Uncertain economic environment. I don't think I'd want to own this. No earnings, and in a high interest rate environment, this is not where you want to be focused.
And finally, shares of the Gap up over 7% today, but the company reported results for the latest quarter, mixed ones. What's your take on Gap? I think we were talking about a very new, dynamic seeming CEO coming in there.
Yeah, he's been there for 3 days, Tyler. So I do think at Laffer Tengler, we're very focused on management. This is your guy from a brand standpoint. He revived the Barbie franchise. We know what happened there. He has experience with Hot Wheels and Fisher-Price. I think you let him do his work. Margins are already improving, so a lot of the cost cutting and sort of recalibrating has taken place. I think this is a company that you wait for evidence for top line growth, and then you step in and buy it.
Nancy, as always, great to see you. Have a great weekend. Nancy Tengler.
You too.
Deirdre Bosa has been digging through the Instacart or Cart IPO filing. She'll tell us what she's learning next on Power Lunch.
Let's get back to the breaking news we reported earlier today. That is Instacart filing for its IPO will trade under the ticker symbol CART. Deirdre Bosa has been digging into the filing since this news first broke about 35 minutes ago. Hi, Dee.
Tyler, it's nearly 300 pages, so we will continue to dig through it. But here's what we learned so far. At first glance, what separates Instacart from other gig companies that have gone public over the last few years is its profitability. In 2022, it earned net income of $428 million. In each of the 2 years before then, losses were less than $100 million. That's different than what we saw from Uber, Lyft, and DoorDash. When they went public a few years ago, they were losing hundreds of millions, even billions of dollars a year in the case of Uber. So some questions still over how much of Instacart's profit is due to tax write-offs as it marked down its valuation, but we will continue to dig into that. The financial profile, though, is helped by, as we expected, its advertising business that does have better margins. Revenue growth, another key metric, and that is decelerating. It's still above 30%, but in the risk factors section, the company warns that post-pandemic trends and macroeconomic factors have, quote, resulted in customers purchasing fewer items per order and reduced demand for premium or discretionary grocery purchases. Another thing that I was looking for was dual-class shares. They allow founders to keep control of their companies even after an IPO, and that has been a trademark of tech IPOs over the last decade. Not here, though. There are no dual-class shares or outsized voting rights by insiders. Another thing that jumped out is PepsiCo on the cover of the prospectus. It will be an investor as soon as Instacart goes public, and this really speaks to Instacart's proposition as an ad company in addition to what we mostly know it best for, which is grocery delivery. PepsiCo has long been a partner with Instacart in terms of shoppable ads, so them putting money, significant amount of money, almost $200 million into the IPO could help with investor interest as the company now embarks on its roadshow, guys, that typically takes about 2 weeks, so we could see this thing hit the markets in, let's call it maybe the second week of September?
Sarat, Deirdre just gave us, in 2 minutes, more content that I can digest in a month.
So, a couple of key points here. Cash flow positive is going to be very important. Growth of earnings will be very important. Use the comp of Uber. When Uber came public, they didn't make any money, but the inflection point for Uber stock, and it's $44 today, was when Uber announced that they were going to be cash flow positive and they were going to grow their earnings. So I think they're doing the right thing. No dual-class shares. Come out, and then you've got a great partner as Pepsi because you now actually have somebody not just as a strategic but a financial partner.
But a real investor who's in there to stay.
So the key is going to be sustainable earnings again, cash flow, and what is the growth rate of the cash flow.
Would you be a buyer of the IPO?
I would have to look at those metrics to really understand what the balance sheet looks like as well, because we don't know how much debt is on there. I'm sure it's in there.
True.
But what's your debt coverage? What are your covenants? And then essentially, what is your sustainable kind of recurring revenue growth?
Deirdre, thank you very much. Sarat, always great to be with you. Thank you all for watching Power Lunch.
Some weekend reading with Instacart. Closing bell starts right now.
Boy, does it, Kelly. Thanks so much. Welcome to Closing Bell. I'm Scott Wapner, front and center this hour, the post-Powell, post-NVIDIA state of stocks. And what comes next for a market that's already on edge. Here's your scorecard with 60 minutes to go in regulation, and take a look at that. Market suddenly awakening. Major averages have been all over the map following that Jackson Hole speech, but now the Dow is up near 1%. S&P 500 kicking into gear too, 44.15. The NASDAQ is outperforming today. It's up better than 1%. Small caps playing along too. Boeing, one of the Dow's top performers today, along with Salesforce. It reports earnings next week. As for tech overall, not much going for much of the day for the NASDAQ, though, as I just said,
I don't know.
We do have a little bit of a pickup here as we enter
I don't know
the
if the
final
guard's
hour.
on
We're
right
at the
now.
highs of the day. We've been dragged a bit by NVIDIA. It's down. Apple and Microsoft, however,
Give me 1 second.
are offsetting that. Both of those stocks are higher. Sector-wise, energy, utilities, they've been bright spots throughout the day. Yield's a big part of the story, too. I want to show you what yields are doing as well, because we've had a bit of a reversal. They were down, and then they started to rise. 424 is the yield on the 10-year. All of that, of course, happening in the wake of the Fed chair's big speech out Jackson Hole. Takes us to our talk of the tape. Whether this still modest correction for stocks needs to go much further or not. Let's ask our special guest on this Friday, Wharton School professor Jeremy Siegel. He joins us once again. You know, you've been with us on a bunch of Fridays, Professor, which I love because it gives us a chance to kind of sum up what's happened in this stretch ahead of us. And today, of course, it's all about the Fed chair. What'd you make of the speech, first and foremost?
Ceiling fans under
and what do you think
fire.
this market reaction now says about it?
Well, first of all, there was really nothing new that he said in the July FOMC meeting.
Business news.
In fact, I was disappointed because what's happened in the market, as we all know, is that yields have risen, real yields have risen, real growth has risen, and the reason that real growth has risen is because productivity has been so strong. He didn't address any of that.
Man, we had a run up. I know it, and there goes the
real
fucking
growth
camera.
is higher. That means more workers,
do I
that's
keep
more
pressing?
pressure
I
on
gotta
wages.
stop
That means we might have to go higher. And that's not the story. The story is we're getting real growth higher.
So
because
I had
getting
fixed it the other day.
Productivity higher.
By
In fact, the labor market is slowing
doing
down. I
something
mean,
with it. I can't
expectations
remember what
for
it
next
was.
Friday are what, about 160?
And it didn't do it for a while. The connection's
less
good.
than half what we
Right?
had
The
last
connection's
year.
good.
So
I
in
don't
some
know
ways,
why
I don't think
it's-
he really addressed what the market has been seeing over the last few weeks. That's why I said I think some people got a little bit nervous at the beginning. The market sold off. Now they said, hey, you know what? There's nothing new. We're going to gain back what we worried about yesterday. Market down 300, now up 300.
I got to be honest with you, Professor. You know, I heard, and you know, I don't know. Maybe I was hearing the wrong thing. I heard a Fed chair who suggested that maybe the bar is a little higher to actually do more than some others would like to believe. And
earlier
I say
that I thought we were going to get a bounce
because
up.
of these words, quote.
So I'm going to get
"Uncertain
ECB
about the
Lagarde. She's
lags,
getting ready to come up.
Might be significant further drag in the pipeline. He also mentioned the risks of doing too much. That tells me that they're not quite sure what's yet to come, and they're going to be real careful because they don't want to mess it up. They don't want to snatch defeat from the jaws of victory.
I think you're right there. And in fact, we detected that as you and I had talked about after the July FOMC meeting. He became much more two-sided. He became much more aware that there are downside risks. I think he heard from 2 or 3 voting FOMC members that are saying, you know, we have done enough. I think he looks at rising delinquencies and credit cards.
I think we're going higher,
some
folks.
Of the earnings calls. He looks at other,
Being honest.
what's happened to mortgage rates at nearly 7.5%. So that he mentioned that little
Right here.
pickup in housing. We don't know how long that's going to last. So I think that is on his mind. How, even though his
Here, hold on.
orientation has been, we may have to do another quarter point. Probably we're going to bypass September. We're going to look at things and see how things are going to be on
And
the
there's our
November
break your
meeting.
retest.
Is that the most you see happening? One more hike, and perhaps that's in the fall. Is there a chance that they are actually? Is there a chance? Is there a chance they're actually done?
There's a chance that they're done, and unless the inflation news turns dramatically worse, and the only way we can really do that if the dollar goes way down, which it's been going up, if oil keeps on going up to 100, 110, 120, although they're supposed to ignore,
That's our
food and
next
oil
level,
as being
guys. Just so
more
y'all know, if we
temporary.
get a
If
pullback, we're
commodity
going to come
prices
up to
begin
that
rising,
442.
which they really haven't. Now, those have stabilized,
442.
to be sure, but we're not seeing the inflation in those components and housing.
Because we broke up above it, we need to come back and retest it
2020 and 2021.
to make sure we're not
unless those things happening, of which there's no
going
sign,
to
it's got
be a
to be
buyer
at
up there.
most one and done. And if there's a little bit more of that downside risk and saying we can hold off, then it's done and done.
Wow. What about the correction? Is it done? Right, we're down what, I don't know, 4% or so on the S&P from the the recent high.
Yeah.
Do we have to go much further lower,
September
or what's your guess?
September for decades had been the worst month of the year, and then when all that used to get published, I published a lot of that in my book. Everyone said, well, then we better also in August if September is the worst month. And then August became a tough month, especially second half of August. And I think that is being challenged. And of course, the higher real interest rates are certainly challenging the stocks at the same time. But I don't see any major crack. I mean, it may have a few more percent to go. Could it dip into correction territory? Possibly with some really weak news, but
She's always smiling.
that is about
Her.
all.
I'll show you.
After that, we have September,
Always.
October.
She's always got
choppy
something going
months, a lot, news months. November, December usually being much better. Year ending on an upturn. So I think for the rest of the year, we're stable to upward, and we have the 15 to 20%. Rise,
It was so
and he
funny.
doesn't
There was
raise
a
it
story, and I
anymore,
think it was
and
because of
inflation
him, and
falling,
she's probably thinking about it right now.
20-25%.
I think he farted. I think it was
Wow,
him.
Big call. Let's broaden
He
the conversation
farted so
too.
loud
If we
on,
could, Professor,
on
bring
Hezbollah
in
TV,
CNBC senior
and
markets
she couldn't
commentator
come
Mike
on because she
Santoli
just.
and
I
Shannon
was.
Saccocia
I was
of
laughing.
NB
I was
Private
like,
Wealth.
I don't know how
Shannon,
they
of
do
course,
it.
a CNBC
Look,
contributor
she's smiling.
as well. Mike,
Hard.
I had them rustle you up. I know you're getting ready for your special, but I wanted your opinion here. I mean, it's been an interesting move in the market. didn't really know which way it wanted to go. Got a little bit of a ramp here. As the
I
day
know
goes
she can only
further.
think about
Yields are up
that
and
last
stocks are
time with
up.
him.
Yeah.
What does it tell you?
Yeah, yields are up, although minimally. I think they're not taking off, which was maybe going to be the real Achilles heel of the stock market if, for whatever reason, and I don't think it should have, if the bond market took Powell's comments as somehow being very incrementally hawkish beyond what was expected. So that being said, I think the stock market is sort of tacking back toward neutral. The high for the week is, I think, 44.60. The low is 43.60. We're 50 points above and 50 points below. We're right in the middle, taking back yesterday's decline. So I still think you can say this is an indecisive market. We don't know if this pullback has kind of fulfilled everything it has had to from the highs in terms of, you know, resetting valuations and expectations and things like that. But I do think that it showed you there was nothing today with Jay Powell, as you allude to, using the phrase proceed carefully twice. That changes the general premise of the Fed policy this year, which is
semiconductors
a patient
are
Fed
weak.
that's just about
They're
done.
real
We
weak.
can argue about whether it's going to be a quarter. It's not going to be in September. It might be later, but so what? They've done 5 1/4 already. The one-year Treasury bill yield is at 5.4, suggesting we already kind of priced in rates around this level for the next year.
Wondering
So
if they're going to try and sell this
nothing
thing
much
off.
changed on that front. The big
Or
question
if
is,
we're gonna
what do
get
we
to
make
442?
of this economic acceleration
That's
late in the
$2,
cycle,
well, not
whether it
necessarily
can continue,
$2,
whether it's
but
going to
yeah, it's
cause
$2 to the
imbalances, or
upside.
whether it's going to get long rates
Well, no, we're
up
at
to a point that the market and the
4.79,
economy
so
can't
it's
stomach.
not
We're still going to be
till,
debating that next week, but in the
you know,
meantime,
really only
you know, the market
$1.25.
had taken account of most of what Powell was going to say today.
You know, Shan, I heard some on the network earlier suggest that we were 0 for 2 this week in terms of NVIDIA and the Fed chair. Not that NVIDIA didn't knock the cover off the ball, but the reaction didn't exactly suggest that the report, you know, was something to really build on because the stock had already done a lot. And then when the market was down earlier, it was like, well, Powell was more hawkish than we thought. When the reality is, if you now have the ability to step back and look what happened this week, NVIDIA did knock the cover off the ball, didn't do anything to upset the story there. And Powell maybe wasn't as hawkish as some actually feared. And we have something at least we can take away that wasn't horrible.
Well, how could you not fear Powell's address here at Jackson Hole, given what we experienced last year, Scott? I think those of us are scarred still from that a year later. I think one of the things to think about is that you're right. We didn't get as hawkish, perhaps, a statement from Powell as we might have expected. And to the professor's point, we also didn't hear some of the things that I would have anticipated hearing. I know the professor, you know, would have liked to hear more about productivity. I would have liked him to acknowledge the fact that we're seeing a reacceleration in food and energy prices because, frankly, although that isn't in core, that's an important component of consumer spending. And the consumer is clearly continuing to drive the strength in the U.S. economy. If you look at what happened this week in terms of what the Fed expectations are, we're really looking at a period now over the next 4 weeks or so where the market is going to be very much focused on economic data, data dependency, and what happens next. And Scott, to your point, you know, we're incrementally up to about 20% chance of a Fed hike in September, about 50% in November. I would counter that those aren't nearly as important as understanding what the policy in 24 is going to look like. And what we saw after the meeting today was we saw that the expectations for rate cuts in the second half of next year came down after the meeting today. And I think that's an important piece. What does higher for longer mean? How does that get priced into equities and the multiples that we're paying for stocks today? That's really where the narrative is going to start to shift. I think we're past either September or November and really looking into 24 now for policy.
So, Professor, on the NVIDIA question, what did the reaction to it suggest to you, if anything, about, you know, whether tech in general had just gotten too far ahead of itself, whether it actually needs to cool off, that valuations in that part of the market are just too high, and we need to come back to earth a little bit?
Well, Scott, let me tell you, in all the years, I have never seen a firm beat as decisively as it did now and go down in price. I mean, jump down the announcement, but then go down in price, which means there's never been a case where the whisper number or that expectation was so much above Wall Street's official estimates. That's the big warning. Everyone just AI, the words get overexcited. Listen, I saw it in the internet stocks in 1999. We saw it 3 years ago when you put Bitcoin or crypto on your name or blockchain on your name. Again, when something catch fires, the expectations explode. That's the danger. When that even when you blow the cover off the ball, your stock doesn't go up. That's the danger. But the rest of the stocks outside of that group, I think no general overvaluation. We can still get gains this year.
Mike, what's your takeaway here? A few days after they reported in what was billed to be not only the most important earnings report this week, but maybe one of the most important we've seen in quite some time.
Yeah, I mean, when you talk about that part of the market, I think NVIDIA alone is that part of the market in many respects, just in terms of the head start people have given credit for it having in AI, the degree of market cap it's added, the growth, everything else, it's pretty singular. I see Microsoft trading 10, 11% below its July high. It shows you that it was not moving step for step with NVIDIA. So the fact that NVIDIA, front-loaded a lot of the excitement, more or less priced it in, there's no shame in sort of hovering around a $1.1 trillion valuation and waiting for it to grow into it for a little while. Just because you didn't get that market-wide push higher that we got 3 months ago, I don't think is really a negative verdict on the company or the positioning of the overall market. Again, this pullback has done some of what a pullback is supposed to do. I just don't know if it's done it all. If we hit the low for this little choppy period, then probably the rebound off it isn't all that exciting or all that spring-loaded because you didn't really build up a lot of the kind of oversold conditions and get valuations super cheap. But maybe we did enough for that to be it, and we got through NVIDIA without broader pain, if nothing else.
Professor, can stocks like tech go up if rates remain even where they are? Let's not even take into consideration whether they hike again or not. If they remain elevated now for a while, and since the beginning of earnings season, we're talking about a 50 basis point or so move higher in the 10-year. So if this remains the case, do stocks generally, and then specifically, does tech have a problem?
Tech has a problem if it can't grow faster. I mean, when NASDAQ is going at 30 times earnings, the value stocks are going at 15 times. That's a 2-to-1 ratio. You're building in 5, 6, 7% higher in general earnings growth. For NVIDIA, you're building in 15, 20% for how many years? I mean, that's the main thing. Is if your earnings growth is growing faster than the increase in that discount rate, then you still can go up. NVIDIA is a very, very special company right now, and AI has the promise to transform the economy. That magic is still going to be in that stock. When it went down actually today, I was saying, maybe I'm tempted to buy it when all the price targets are so much higher.
Hey, Shan, coming off Jackson Hole, I'm looking at a headline here from Christine Lagarde, the ECB president. Do we care about at this point what other central banks are doing and what other central bankers are saying? She says ECB to set rates as high as necessary for inflation. Okay, they'll do whatever they have to do, I guess, to keep inflation under control. Do we care as investors here?
Yeah, I think we need to care, Scott. I mean, I think we need to care as it obviously affects yields here in the United States based on, kind of relative yields and what's available. There's been significant movement in the currency market. We have the Bank of Japan really engaged, if you will, from a currency perspective in a way that they really haven't ever been. And so there's a lot of policy questions there. I think most importantly, though, is just trying to determine, where's that tipping point? Where's that inflection point where valuations are so high here in the United States that regardless of kind of incrementally tougher conditions in a place like Europe, when do you make that choice to increase your allocations there? And certainly as it relates to the strength or relative weakness of the dollar. And so all of these things, we have to understand that we're entering into a period, Scott, where we're not going to see as much sort of collusion, if you will, in the nicest way of saying it, between central banks. We're going to start to see divergence in policy, and that has a lot of implications if you're allocating, whether it's in the United States or outside of the United States, and also between equities and credit.
Mike, tease us a little bit, taking stock tonight with Josh. I'm going to let you go prepare for that. I'm going to see you in Market Zone, of course, but just give us an idea of what this week has left you guys with to chew around.
Well, we have, a longtime NVIDIA shareholder. We're going to get Josh's take on exactly how that stock has traded, but also trying to sift through the week's news and look ahead to next week and tell you what you should be more concerned about and what you can dismiss, maybe move off your pile of worries that are not a big deal. We'll do that in game show form.
All right. Well, we'll look forward to that.
All right.
That's Mike Santoli. We'll see him later. Professor, and lastly to you, before I let you go, I'd like your last thought. I mean, now we get NVIDIA out of the way, get Jackson Hole out of the way. We do have a bit of an air pocket of news. We don't think the Fed's going to do anything in September, though you never know. But we do enter what you've already suggested is a historically treacherous time for stocks.
Yeah, but as Mike said, next week is actually a huge news week. We get the Case-Shiller home price index. We get the money supply. We of course get the Friday payrolls. We get the JOLTS report. These are things, of course, that Powell has quoted. We get the second estimate of GDP. We get revisions of. I can keep on going on. I won't. But you're right. We had a gap for about 10 days on important data. Next week could shape what's going to happen in September.
Well, you've made good points as always. Professor, I appreciate the time as always. Shannon, we'll see you soon as well. Shannon Sakosha, and you'll see Mike a little later on in the Market Zone, of course. Let's get to our question of the day. We want to know what you think. How many more times will the Fed hike rates this year? Once,
the camera was
twice,
going to turn off with my little turkey butt.
Head to @CNBC
with my little
Bell
turkey
on X, formerly known as Twitter, to vote.
And
the results are coming up a little later on in this hour. In the meantime, a check on some top stocks to watch from Christina Partsenevelos. Christina.
Thank you, Scott. Well, shares of Affirm are jumping today after reporting earnings this morning. We had a revenue and profit beat well past expectations, and this is a buy now, pay later firm. They also improved their full year outlook. Of note, the company's CEO said gross merchandise volume is growing despite the headwinds of inflation and, to your question, higher interest rates. Shares, though, are up a whopping 30%. But definitely a different story today for shares of Hawaiian Electric, which are plunging after news that the Maui County is suing the company for damages related to the island's wildfires that have left at least 115 people dead. The suit alleges Hawaiian Electric left its power lines energized despite warnings of high fire risk. The company tells NBC News it's disappointed the county chose such a litigious path. Shares are down almost 20%, trading at $9.51.
Let's see what.
All right, Christina, thank you. We'll see you in just a bit. We're just getting started right here on Closing Bell. Up next, trading Tesla. That stock has had a steady run higher this year, up more than 90%. How about that? Star analyst Dan Ives now out with a new note on the EV maker. He's drilling down on what he says could be its next big growth catalyst as well. He'll join me right after this break, live from the New York Stock Exchange. As I just said, you're watching Closing Bell on CNBC.
There. I'm trying to figure out what exactly is going on. I'm getting a. So that's overbought now. I think we might turn it around. They'll sit it on 440. I think they sit it on 439.93, and then they run it up to that area going into Monday. Let me see here. You see?
Shares of Tesla are higher following a new bullish call from Wedbush's Dan Ives. He estimates Tesla's supercharger business will be worth $20 billion by 2030 and make up as much as 6% of the EV maker's total revenues. He joins me now. It's good to see you. Why did you feel compelled to write this story today?
Yeah, I was really putting pen to paper and really doing the modeling from everything we've done over the last 4 to 5 weeks. I mean, you've talked about it when it came out, Ford, GM, others, the 313 area code going to Tesla. Now trying to model it out. I mean, and I think for investors, it's very helpful. We think conservatively 10 to 20 billion per year. I think it's probably on the latter part by the end of the decade. I think it's significant. This is the next stage of monetization for the Tesla ecosystem.
Yeah. How do you get to those numbers?
And that's really going on and we have a whole model putting out the percent of overall EVs that ultimately are going to be using the charging stations, what they're going to be charging per kilowatt hour. And then the important things, guys, that most of the bears will say, well, today everyone just charges at home or they charge at their office. But it's also looking at now down the road, how are they going to be using these charging stations? And when you look right now, they're going to be the only game in town. That's why you have GM, Ford, and others going toward Tesla. And I think today it's superchargers. Next is going to be batteries, and then eventually FSD AI. This speaks to our thesis similar to Apple on the services side. This is just the early stages of Musk and Tesla monetizing.
Where are we on the roadmap of price cuts in terms of Tesla, which Elon Musk has clearly moved to put growth ahead of profitability?
Yeah, and I think that's been the right poker move. And I think it's paid off significantly, especially in China. I think now, look, 95, 96% of those cuts we think are in the rearview mirror. And I think you saw maybe some overreaction last week, and you've definitely seen a rebound as I think more investors are recognizing that. But right now, margins suffering at the cost of units. Now, I think that troughs over the next quarter or two and starts to rebound into next year. And that's the yin-yang that they're going to strike. But ultimately, it continues to be Tesla's world, and everyone else is paying rent in terms of overall EVs. And I think that's becoming clearer and clearer.
So in terms of the stock, it's up 10% this week. It's down 10% over a month. And the reason, I'm trying to get the correlation here between it and the NASDAQ. If the NASDAQ continues to have some trouble and big tech in general pulls back, this stock is going to be susceptible to that as well, don't you think?
Of course. Yeah, I mean, look, we continue to view Tesla as a disruptive technology company, not an auto player, right? But it's our view going the second half of the year, I think tech stocks rip higher. I mean, it's my view that the new tech bull market has already begun. I think growth is going to exceed street expectations. And I think what we saw with NVIDIA, that's just the appetizer to what we're going to see with this $1 trillion tidal wave of spend over the coming years for players across the tech ecosystem.
I know, but man, these stocks are already up like 5 years worth in 6-8 months. I mean, there are, even with the pullback we've seen, a lot of these stocks are up minimum 30 to 35%. We can't just continue to suggest that they're going to, in your words, rip higher to no end, are we?
But it comes down to growth, and everything we see from growth across software, across chips, I think ultimately numbers, especially going to next year, accelerate 15-20% beyond where the street's modeling. And I think this is a 1995 moment, not a 1999-2000 moment. I think start of the internet, and I think we are seeing the biggest transformation.
I think what everyone is forgetting, hold on.
That's why our view across the board, this is just a pause. It's halftime of the Super Bowl rally that we're going to see in tech going into the next 2 to 3 years.
I know, but at some point the air gets a little thin, no? I mean, look at NVIDIA. I mean, I know it's not, you don't cover it specifically like you do Apple, which people know, but, it's up 200% this year. It was up 50% in 3 months.
Listen,
and now
everyone is forgetting.
Pause, pullback, whatever you're going to characterize that as.
How much?
I mean, what do you want these stocks to go up?
4 or
60
5
and 70%
trillion on the balance sheet of the
for
Fed.
the year?
That's one.
I mean, my
and
view is
what was it? 2, 3 trillion?
That's our opinion.
4 trillion? I don't know. What was it? And they're still spending money.
2024,
right?
2025.
From the government.
A cycle that we haven't seen in 30 years. Now, of course, rates
that's
adjusted
going
that's
to
clearly going to be a headwind.
like,
when I look across tech,
you know, and I think a lot of people don't think about that. Like, that's I view this as a you just had more money printed in a span of 2 years, a year, than you did the entire time. Money has been a thing.
Okay, we'll leave it there. Dan Ives, thank you. I appreciate it very much. We'll see you soon.
Thank you.
All right. Up next, raising the red
Right?
flag.
You know what I mean?
Sycamore Tree
That's a
Capital's
lot of
Marco Cata
liquidity.
is still
I might
bracing
have to
for a
shut that. I
recession.
tried to open
He
that
is
window
flagging,
for
though, alternative opportunities
a
for your
little-
money amid this uncertainty.
little stinker butt,
Joins
but
me after the break.
out-
And later, Instacart heading for
people
its
out there
public
cutting the
market
grass, so-
debut. Learning more
I don't
details
know.
now
I
about
think
that
that
company's
they're
S1
undermining
filing, what
that
it could mean for the
aspect
IPO
of,
market in general.
of
Closing bell.
everything. Why
Right
are
back.
they up? Why are they this? Why are they that? Well, there's still a lot of money out there. There's still a lot of money out there. A lot. You know, here and abroad. So, I think people don't think about that the way they should, right? Now, I may be wrong, but that's just something I still feel like that people don't talk about enough like they should. So we're getting an ascending wedge in here, guys. I'm going to grab some puts. We get to the top side of this wedge. I might go ahead and shoot for the hill, or, you know, shoot from the hip. And let me see here. Look at this. Oh, it might already be in right now. I got to do it. Got to do it. Got to do it. 439. I'm going to grab some 439ers. 439. 5 cents, 6 cents. Let's do it. Let's do it. We only got a couple minutes. Let's do it. I think we can get there. I think we got to make this support. Let's go. I got him. All right. So, I did do something today. I grabbed some puts. I sure as, and I was wanting to get in up here, but that didn't happen. Because I thought we were on a retest there from the looks of it, which I should have waited a minute. Because I was thinking we would take... You know, it was kind of like that. There we go. Oh, she's holding. Decisions. See if we could have got.
We're back at closing bell. The
here.
S&P 500 trying to snap its longest weekly losing streak of the year on the back of Fed Chair Powell's speech out in Jackson Hole. But our next guest says that stocks aren't going to add much value to investors' portfolios from here. Let's bring in Marco Cata of Sycamore Tree Capital Partners. Welcome back. It's good to see you.
What the?
Hey, Scott. How are you?
I'm good, thanks. So let's deal with the Fed Chair speech first.
So we're still working on this weekly.
And what do you make of the reaction here as we head towards the close in the stock market?
This weekly RSI. Look at the weekly RSI.
Well,
this stuff is still coming down.
Digesting all the things he said, which wasn't much. There really wasn't anything new there. I guess the missed opportunity that I kind of see is that
Let's
he
go,
could have
baby.
been a little more hawkish than he was.
Oh, yeah.
We certainly have had a run of very strong economic numbers, which I think put this sort of no landing scenario on the table for everyone. I'm not in that scenario. I do believe in the lag scenario. We are still in the recession camp. And so, you know, I think what he said was we're navigating by the stars under cloudy skies. That doesn't feel very comforting to me as far as where we're going and how we get out of the situation of pretty persistent inflation. And so I think he's set it up that there certainly isn't rate cuts in near-term future for anyone.
They're like, God damn it, who's buying damn puts? It's Friday, bro.
Here or higher.
We had Powell, we had all this
and
time, and you want to do something right now?
I heard.
You want to wait till Friday afternoon?
I think he's paying attention to what's
happening
to the 10-year
baby. Payday.
in the last couple weeks. It's moved pretty hard.
Yeah, I mean, the 10-year's done some of the Fed work for him.
Come on, I'm looking for this target down here, guys. We got 30 minutes.
Half-empty camp
I'm still
rather than
looking
the half
for.
full. You say inflation
Obviously
is, in your
this.
word, persistent.
If I get this
Others
before
would
we get
say
the
it's
retest back up
declining
there,
quite rapidly.
Give me that 1 minute.
Well, I mean, he talked about the four contributors to PCE, and the part that's going sideways is half of it. So I think that in order to get that down, the lag effects of the move in rates, the massive move in rates they've already done, will take time. And so I think that's what's coming. The reality of that hasn't really happened. I think the banks are feeling it.
I'm going to try and get a quick 100% right here.
$1.3 trillion of
CRE
debt coming due in the next year, 18 months.
Go.
They've got over half a $500 billion of mark-to-market losses in their securities portfolios. So I think as that trickles through the economy and slows things down, you're going to see this sort of no landing scenario kind of evaporate, I think, and we're going to have something that looks much more like a traditional cycle. And as far as like the outlook on stocks and how bearish I guess I sound per se,
there, guys, on that
we're not super bearish on the equity market per se. We just don't see it as
it just turned that into
relative value versus a lot of the other things you can invest in right now. Especially in credit. I mean, we're having a great year. We're making good money in the credit portfolios. And we're not taking a ton of risk. We're making 7, 8, 9, 10% in the portfolios. And we like that. I'd rather own that than NVIDIA at whatever the stupid multiple is.
Whatever the stupid multiple. It's actually not at a stupid multiple.
I mean, you are kind of talking your book, but that's okay. You're a credit guy. I mean, I get it. I get it. You guys are a credit shop, right?
Yeah, exactly. But I mean, let's be like rational about it.
Okay. Oh, we are. They've murdered earnings. So how is that?
AAA. That means it is safer than the U.S. government. It's yielding 6.5%. What's wrong with that? I mean, I'm not selling anything to anybody. I'm just basically stating the facts about the relative value of things. And honestly, it's like when you think about what's happening within the treasury market,
trying to say, guys.
And those,
I'm going to apologize on his
I think it's kind of hard to paint a picture where they go down anytime soon. So why not own some of that too? The fixed income feels like a much better place to be than equities, just in general.
Look,
does it? Just like Europe felt like a place to be the beginning of the year, and look where that got you.
You can forego some of the volatility in the equity market to know that maybe you'll return a little bit less, but you'll feel a lot better, and you'll still have decent returns, whether it's in certain parts of the credit universe or in cash.
Decent returns when you see
in terms of where rates are going from here.
The triple Qs are up.
Do you feel like
or
the Fed
tech
is
sector?
Done?
Stocks are up 30, 40, 50, 100%. You've got your little 6.
I absolutely
you
think
underperformed,
that
my
kind
guy.
Of overcooked this thing with getting into the banking system and setting up a NIM problem for almost every regional bank in the country, and which means a profitability problem. But also this digestion of what's going to come down from a regulatory standpoint across the banks is not going to be positive. So I think the credit impulse coming out of the banking system continues to slow the economy. I think that does some of their job. They don't have to raise more rates. And I think what we said earlier about, why is the 10-year up 60, 70, 80 basis points in the last 6 months?
Because the economy's pretty good.
I'm not sure. I think there's some supply dynamics there.
I love how he takes both sides, right?
Well, look. There's $1 trillion of net borrowing coming out of the Fed.
10, 15 minutes ago, he was saying the economy's not good. Why are we in a recession?
That's a lot of supply.
Why that?
And you have a time when the BOE, the Bank of Japan, is maybe pivoting. You've got China certainly not leaning in. I think there's other reasons why the 10-year has moved, and I think they're paying attention to that. The term premium is pretty positive, and that's something that I think we've got to be mindful of, or at least watching.
Sure. Let me ask you this: what happens if inflation continues to come down? Right, it's just north of 3%. It's come down a long way in the last year.
PCE is over 4.
Well, I know you're thinking of core. I hear you on the core too, and I know that's what they care more than anything about. But what happens if the economy is able to stay stronger for longer than you think?
I want to go to the NASDAQ
and inflation comes down at a similar clip to which it's already come down, and that enables the Fed to cut rates, not because the economy's dramatically bad that it dictates they have to, but because they can, because they actually have mission accomplished. They've achieved the goal.
Yeah, I'm thinking about the Larry Bird, Michael Jordan commercial where they're fighting over the Happy Meal, and he's going off the backboard, through the window, over the backboard, nothing but net. I think that's a really tough scenario that you've laid out.
It looks like your little double top. I remember that flag. Bang! I knew it. Damn it.
That's right. It did. It did. But they're selling hamburgers, not the economy. I wouldn't mind scalping that. So I'm not really sure that's the right sort of thing to be banking on, honestly. And especially when you have other alternatives where you can make decent money without that sort of valuation worry. I'm a credit guy, which means that I see the glass half empty all the time. But what's in my glass is pretty good. I'm really enjoying, drinking it right now. So it's certainly an interesting time. I think as we start to see the weakness come into the economy, we'll see where that goes. I don't think rate cuts are in the cards anytime soon.
All right, we'll leave it there. I always appreciate our conversations. We should have them more often, too.
Well, thanks for having me, and thoughts and prayers out to our friends in Maui. So good to see you, Scott.
Yeah, you as well. Mark, you be well. Mark Okada. All right, up next, we are
ain't
tracking
coming
the
back
biggest
on
movers
with that type
as we
of
head
talk.
into the close.
We don't talk bonds here. We talk equities, bro.
Well, with NVIDIA setting the earnings bar so high, does that mean other chip makers will fail to impress? They can't do the same? We discuss next.
But boy.
All right, we got 15 to go before the closing bell. The Dow is still up near 300 points. Christina Partsinevelos is back with a look at the key stocks that she is watching. Christina.
Well, let's talk about Marvell Technology. It had a tough act to follow after NVIDIA's earnings, and it didn't impress investors after reporting a drop in second quarter earnings and revenue, which did also include a drop in data center sales. You had Morgan Stanley that cut the company's price target. Morningstar downgraded the firm to hold from buy. Marvell's shares are down about 6% right now, one of the worst performers
We'll see if we
on
get
the
some
NASDAQ.
volume in there.
But we will have the Marvell Technology CEO coming up on closing bell overtime in just a bit. You can see just at 4 p.m. Matt Murphy. Switching gears, HR software provider Workday posted an upbeat outlook that had analysts raising their price targets, citing promise from what else? Artificial intelligence. Mizuho bumped their price target to $260 from $250 as an example. Workday management did attribute the increase in 2024 subscription revenue guidance to early renewals by customers and, quote, tremendous growth within its budgeting business. Shares are up almost 6% right now. Happy Friday, Scott.
Tremendous. Christina, you too. Enjoy the weekend. We'll see you on the other side. Last chance to weigh in on our Twitter, well, our question of the day, our X question of the day. Can we call it that? How many more times will the Fed hike rates this year? 1, 2, or none? Head to @CNBC Closing Bell on X. The results after the break.
$439. It's the target. That is the target.
All right, the results of our question of the day. We want to know how many more times do you think the Fed will hike rates this year? 1, 2, or none? The winner
won. Talking like
39% of the vote. It was actually kind of close. Got a lot of, interesting. All right. None did get almost 30. Nice split. Boeing shares soaring. We'll tell you what's behind that move in the market zone. It's coming up next.
I want to see if we can get a bounce in AMD, guys. Believe it or not. All right, I want to see if we can get a bounce back up to this level here. 105.50. I want to see if we can get back up there. Let me see. Maybe I will look and see if... See, the thing is you don't want to be buying options on a Friday afternoon and have 2 days of data, right? It's not what you want to do. Trust me, it's not. It's how you're, it's how you just waste your money. Let's see here. Let me see. Come on. I'm so excited. We have college football this week. Yes. First week of college football. God, I'm so excited. Missouri, Miami, LSU. All right. Good job this week, gang. You guys have a great rest of your week. I can wait for the close.
All right, we're in the market zone.
I am out of those puts, just so you are aware.
Commentator Mike Santoli here to break down the crucial moments of the trading day. Plus, Phil LeBeau on Boeing's bounce back.
I mean, these are the kind of things you got to set up and be a sniper for, right? They're up. Let me tell you what they're at. They were the 339s. I got them for 5 cents.
I think
they are at least a little bit of an exhale, still at 6.5 cents. So you would have had. Oh, that's why, because you just had a monster rip
one of those things that really
to
does,
eat them up.
Kind of demoralize people who
I love y'all.
On the fact that we might
you guys
be
stay
able to
cool.
buy this dip.
Have a great weekend. I have an educational video coming out this weekend. I know you can't see me because the freaking thing's frozen. I'm going to get working on that.
Roughly as expected.
I just want to thank you guys. Thank you guys for joining.
You know,
all
bond
that
yields
fun
are
stuff.
where they are. They've been a challenge for the
I love
equity
you.
market, but they
Like, share, and
haven't
subscribe.
closed higher,
Appreciate the love. We're
for
going
the
to come
last
back
couple of
next
days. I
week,
think all that
and we're going to
together,
continue what we
leaves the
to do what we
S&P
did
500
today,
up a little
and that
for the week
was
and in the middle of its weekly range, and still
making
kind
it
of
so
in,
that I
in
don't have
wait
this
and see
little girl
mode.
keeping
Seasonally
me up at night,
defensive,
so
but
we can make
otherwise
some money
not
next
really
week. I
showing
had a
too
really
much
rough
stress
week
just
this
yet.
week.
All right,
This week
Philip,
was really rough for
Boeing
me,
was
and this was a
down
great
about
opportunity of a
3%
week.
or so yesterday.
I don't expect
At
much
least
to
at
happen
one
next
point
week.
on,
We do get some
you know,
data, but
concerns about
it's not
the
going to be as volatile
737
as it
MAX
was
again.
this week.
And now we
But
see
we'll
a
see.
reversal
All
higher
right,
by
we'll
about
see.
3%. What's the bounce
Thank you
back
guys.
do
You guys
to?
have a great day. I will see
Well,
y'all
it's a report that came
on
out
the flip
earlier
side.
today from Bloomberg saying that Boeing is